because London inducements are way more reliable in terms of liquidity. Of course, the liquidity enters the markets and you don't run into this danger of thinking, oh shit, it's Frankfurt inducement, but then this wasn't the inducement, and then inducement will happen in London and yourself will get induced by the London inducement. That's always not the point. Also, that's why we'll have specific setups for Frankfurt Open as well, right? And of course, for these major traps in after Asia, focus on London, but of course, be aware that sometimes the trap can be done in Frankfurt. That's why we look to the left and have multiple other confirmations to give us a better understanding about that, right? But for now, again, get this into your head. Another example, again, very obvious one. Again, huge momentum downside, building the channel, breaking out of Asia, right? Again, this obviously a little pullback, finally again into London with speed. Look at this, all this speed, momentum, of course, into London when it will be done, and swoosh, can reverse, take out Asia high, right? Again, even more. Again, that's something that happens left and right. We can show these examples all over again. Very obvious one. Shield up channeling into speed, right? This one is a little bit more tricky, even building equal lows before Asia. So of course, we expect again the inducement low, boom and boom. Easy stuff. Like again, GVG, JPY, every time the same stuff. Always, okay? Not every day, get that into your head. We have multiple cycle variations. I said it multiple times, but it's so important to get used to these timing aspects, okay? So you might think then still, as even if you showed you so many examples about multiple weeks and months, even years sometimes, right? So maybe this is something that doesn't happen too many times, right? So actually, let's dig into that. Last year, again, what's going on? Asia ranges, induces low, pushes high. You saw this before, right? Asia range, induces low, continues higher. Asia range, induces low, goes a little higher, right? Asia range, induces low, goes higher. Asia range, induces low, goes higher. It's always the same shit. But you think, oh, no, that's from March, whatever, April 2021. So it 100% is different now, whatever, in March, April, like a year later, right? Let's take a look. March, obviously, 2022, right? So let's take a look. Here, obviously, induces Asia high, low, goes lower. Right here, Asia range induces low. In here, just by a little wicks, goes higher. Asia range induces high, goes lower. Asia range induces high with London to the minute, goes lower. Asia range induces high to the minute. You see it even here, absolute to the minute, goes lower. Right, and of course we have some sort of this inducing this major liquidity up here in Asia, completely fine, goes lower. Asia range induces high, goes lower. Asia range induces low, also this to the left, of course, goes higher. Asia range induces high, goes lower. Asia range induces high, goes lower. Asia range induces low first, goes higher. Induces Asia range high, goes lower. Asia range induces high, goes lower. Right, it's the same stuff, but guess what? You think like, oh no, that's from March, April 2022. It probably didn't work in like August or September 2021, right? So let's take a look. Obviously, you see so many days in a row. Asia range, this is low, goes higher, right? Asia range, this is low, goes higher. Asia range, this is low, goes higher. Asia range, this is low, goes higher. Asia range, this is high, goes lower. What a surprise. Right, we can continue this all over. Asia range, and this is high, goes lower. Asia range, and this is low, goes higher. Asia range, or even this Asia range, and this is low and gets higher. Asia range, and this is high, goes lower. Asia range, and this is high, goes lower. Asia range, and this is low, goes higher. Again, you can play this in your mind already. It's always the same stuff. I hope you see it by now, right? And even again, last days, induces Asia high, Asia range high to go lower. Same shit. So guess what? You probably think like, well, that's from August now and September, like 2021. So it has to be different in May and June 2022. Right? Again, we covered March before, whatever, it doesn't matter. Again, this is May and June. Guess what? Asia range induces low. Frankfurt Open to the minute goes higher. right? Guess what? The day before, whatever, 2 days before, induced Asia low to the downside, obviously, and goes high. When does it happen? London Open. Here, special case, right? Induces high first, goes lower into London, Frankfurt Open to the minute, then goes into London, induces low, goes higher. What's the day before that? Asia range induced high, goes low. What's the day before that? Asia range induces low first, then takes out the high and goes lower. Right, same things all over. Induces Asia high, goes lower. Induces Asia high, goes lower. As you can see, these timing cycles already are everywhere. And guess what? Once you can see it, you hopefully can't unsee it. That should be these eye openers where you think, oh shit, have I overcomplicated trading like literally for years? Could it actually be that easy? Could it actually be that replicated all over again? Do they actually deliver the market like that? Is it actually how the market works? Right? So one more example, right? I'm not sure why the timing is a little bit covered here, but you can see it already what they're doing in here. Right? So of course you have an Asia range, right? Of course, induces high to go what? First of all, we're marking up our break of structure points, right? After the inducement and the cycle, technically with build-ups into momentum and timing is done, right? To the minute traps, giving some sort of market structure break, right? This is the push and made a new higher high, right? Perfect, right? So of course, breaking in here, that's your imbalance zone. From here to here, you see it already, you mark it up, right? So guess what? Comes back here, mitigates, now gives you this structure point, which obviously makes the high in here, right? So that gets broken. What does it leave? Like some sort of imbalances. Also, guess what? We mark it up, comes back, gets mitigated, right? Perfect. Makes new lows. There's the order flow, momentum mitigation, right? Something like this. Boom, taps back, and then finally takes out Asia low. Of course, so that's just the overview of how obviously it all comes together slowly but surely. And that brings us to a little starter kit. You slowly need to get into your brain because that stuff will make a huge difference. Use our beautiful guide of Miss Asia range, right, for orientation. Look for these inducements, look for the build-ups before that, right, where they're building these channels, these momentums, these vector candles, non-open. And of course, if you have something in here, or that was very not nicely drawn, and let's say a pullback in here that led to the push low. If you have some sort of break of structures in here, look for the imbalance mitigation. Some point we look to the left also what's going on for the extreme in here, right? And of course, in this scenario, you have the internal break of structures in here, little build up, right? Induces the build up into mitigation, goes higher, taps into smart money trap for all these continuation traders and trend traders getting induced, right? Of course, they wanted to take it lower. That's why our entries will be here or here, right? Of course, for pullback trades in here, but then we have to understand at one point when the cycle will be done and the whole game continues all over again. For now, understand these cycle traps, these timing confirmations, and build this really, really nice understanding, clean picture of intraday training, and slowly, of course, we will dig everything together. So now you've seen 2021 examples, 2022 examples. Let's dig into 2023 examples, and it's the same shit. Not only different day, not only different week, not only different month. Yes, it's the same stuff, literally. Even to this point, we teach this stuff for quite a while already. We showed this stuff for quite a while already. It's literally the same stuff, the same exact stuff than it was years and years ago. Again, it's the algorithm, how Enigma delivers price action, and that's how it has to work, right? For example, if you utilize the understanding of major, medium, and minor inducements for directional bias as well. Again, for example, if you look in the M15 on GU this time, well, again, time frame doesn't matter also. It's always the same, right? If you just look in here, we have this equal highs turn into a triple top and then finally getting induced in Asia here. If you have a triple top getting induced on obviously higher time frames, again, that's even the 4 hour if you go even higher, but M15 obviously gives you the same understanding of higher time frames. Again, you don't need the 1 hour or the 4 hour. If you just zoom out, boom, that's your higher time frame right there, even on the M15, right? But then you have your major inducement, for example. Then again, what did you learn already? After major inducement or inducement in general, you can wait for some sort of relevant break of structures, right? Again, then you're just snatching an imbalance area as well. But then again, the most important aspect is the scenarios you learned already with Asia forming the range, building liquidity to the upside with the trend, breaking out of Asian range with momentum to the upside, tapping to the left into an imbalance area, filling the imbalance. And when does it happen? If you check the timing on the bottom right here, 9 London open to the absolute minute for the extreme entry in here. And of course, then you aim for the next medium liquidity as minimum. This is absolutely a Mona Lisa scenario, trading away from this major inducement and this perfect intraday scenario. Again, that's the way you have to do it. Don't randomly be like, oh, Asian range induced high, induced low, let me trade in the other direction. No, you have to combine it, of course, a little bit. Then again, knowing this is the major inducement, again, then they're creating this obvious smart money trap. Again, they want to stop out everyone first to take out the liquidity and then obviously move in the other directions. And what do? They, of course, fake the smart money trap in here with this wick, looks like news as well, right? Tapping in these areas, pull back, and of course, then just stop them out. In the long run, this forms your last inducement, right? Again, when does it happen? More surprise, only in London also to induce high once again away from this major inducement. Then, of course, the direction after that is just short. Then again, for example, this would be another Mona Lisa scenario where you have first the inducement low of Asia just to again go high once again, whip these equal lows once again, and then yes, it can also tap in this because again you already had this inducement, the last one in here, and it's the same scenario. You trade away from the major inducement, away from the medium inducement, into the intraday cycle in here, right? Into an extreme mitigation after you had your intraday trap, and to liquidity, take it out into mitigation away from the medium and away from the major, and always taking out all the smart money traders before that as well. And of course, then it's the same scenario over and over again, right? So let's see how, for example, we can make sense now, understanding price action, the way it's delivered, and now even looking at the next medium inducement, which we had here, which was the news. Again, I think it was FOMC, if I remember correctly. Yeah, I think so, right? So again, look what we had in February 2023, right? Again, first we had our obvious smart money trap being induced with the news. No one can be selling anymore, right? So of course your trap is done. Liquidity has been taken to the high side with the news. No one can be selling. And of course, then this thing just drops. That's why the next day is just dropping massively as everyone gets taken out in here. There's no more sellers. That's why they easily can push price lower, right? But did we grab any major liquidity, right? So we had, of course, this zone in here, which got already induced to low side. That's why the pullback can happen, right? Of course, that's how it has to work, right? But then if you check what's the next areas, they would actually aim for liquidity. First, again, when they grab liquidity, they will pull back, right? So for a late reversal trade of the day, that would be possible. But then we look at the next intraday scenario to see what should happen next. Liquidity is down there, right? Of course. So what can we do in these scenarios, right? First, we want to aim more to the liquidity, but then we have to wait for our ideal trade scenario for intraday perspective. And while we do that, of course, we can also expect other traps, for example, smart money traps in these areas, right, before they take out the lows, right? So that's all stuff we can know. But first, if we want to grab the liquidity, we have to induce high once again intraday wise and then trade into the liquidity, right? So let's see what's our, or first of all, what would be our absolute Mona Lisa scenario you already learned? Can I give you a hint? If we had a couple of days earlier, Asia range, right? Equal lows being formed of Asia low, momentum to the upside, breakout of Asia range in London to the absolute minute, and then go lower, right? Here's your perfect entry opportunity in here, right? Induced Asia high in London, relevant break of structure, into mitigation, aim for minimum next liquidity areas with the triple bottom, right? Same thing in here, Asia range, here a little channel or trend forming, breakout of Asia high into the Asia low liquidity, right, to drive price higher away from these areas. And of course, you had another liquidity grab even in Asia, right, which pushed this price action higher, and then finally takes a low to go higher. And then obviously this is just an extreme version of it. We have Asia range being induced high, all the way high into the medium inducement, right, and then push price lower. And obviously at some points price just has to run away from these medium inducement zones. So again, don't trade every random London inducement low you see just because it took something out. No, look for the left to the left and previous days as well to see what makes sense. Same thing in here. Again, you took out now the liquidity, right, with speed. Everyone is shorting, breakout traders coming in, taps into the smart money trap in here already, right? Perfect. That's why the pullback can happen. But guess what they're doing with the pullback? They're already creating this trend line. So trend traders are getting very excited, right? But what is this? Asia range, right? So what can we expect? What's our Mona Lisa scenario that can happen, right? Let's see what they actually did. Oh, London Open comes in and boom, momentum with London Open into what? Into the left, into some sort of mini. Again, nothing really you could trade on the edge, but again, at least it fills this imbalance areas in here as well. Again, this is also the zone that took out this little pullback in here. So there's definitely some sort of liquidity again as they pull back, break the zone, little pullback, some liquidity has to enter, then the final push that brings a lower comes from here, right? So of course, this demand area, or in this case, supply area, right, will of course give you some reaction. But why is it so juicy? Because you have obviously the fake liquidity creation in here. You have your Asia range being induced to the upside. Look at the momentum. Look how crazy they react away from that zone, right? So of course, and into the mitigation, this is your perfect London Open scenario, and now you can finally trade into the next trap minimum, right? So, but what do you have to wait for, right, for something like that? Again, technically, that would be your first entry right here already. Or if you want to look for intraday scenarios, again, even better when they give you some sort of relevant break of structures in here or create the equal lows. And then again, maybe there's something in lower time frames which creates a trap in here to go to the extreme mitigation, something like in here, whatever. We will not do that right now. And then again, it can be definitely even nicer when they take internal liquidity again, induce high into mitigation of this overall inducement. And then of course, you can aim for the next target zone minimum for the next medium liquidity in here. Again, your perfect starter kit scenario in here, right? And let's see what they did. Boom, they just fall off a cliff. And when they do it, of course, the same way as always, when they do it with this momentum and speed, taking liquidity into like these demand areas, right? Of course, you can expect a reaction out of it, right? So of course, you have to just mock up the proper demand area in here, right? Again, you can expect a reaction. Look for the lower time frames until you get something like a little creation of liquidity. Maybe even scenarios in here against the 50 minutes, so you probably have like 5 or 1 minute equal lows in here, right? Something like this, and then an inducement low, right? Again, you're already into this demand area, right? So of course, after this huge run, they will pull back, and that's how you can also identify these little pullback trades in here. Again, where's the last thing you should target for? Again, just we are breakout traders in here, getting very excited, so they put in break evens in here anyways. Boom, they got out of the break evens, right? What a surprise. So it's always the same stuff when you think about it. And then come even back once again, and that brings in also liquidity for later. But the day is running out of time here, so we have to wait for the next day anyway. So let's see what Asia does. If they already blow them out, yes, they do. But again, they make people very excited about the sells already, right? Again, break and retest, right? Breakout traders getting a break even, but break and retest traders getting the whatever the support and resistance kind of thing, double tops in here. And now look at the reaction. And now look at this, what we had earlier. Huge breakout zone, isn't it? Huge breakout zone. And now look at this. Again, news event, obviously. All the news were bad. Price action has to fall off a cliff. Breakout zone, break and retest, double tops, all that stuff. So everyone is going short. Everyone is going short. And look at the momentum continues, right? So, but what's the death blow? What is the death blow? Asia range is completed. Look at the trend already forming the whole day. So what's the death blow they can do? What do they want to do before that? They want to bring out premature buyers, not give them the chance to be in the move, right? So how can they do it? They first break the trend line, premature people getting in with the buys, right? They're getting probably snatched already. And they're also creating another double top to push even more sellers into the market. So if they give the death blow, boom, with momentum, what's the perfect time it should happen? You already see the box appearing. London open to the absolute minute. Are you freaking kidding me? Right? So that's when the trap is done. Everyone is short. The little trend, the big breakout, the break and retest, the double top, the whole little trend of building, the premature buyers are getting stopped already. The momentum is in, timing to the absolute minute. So what are you waiting for? It's the same stuff. Same stuff as always. You either wait for relevant breakup structures would be in here, but in this case, it would be a liquidity grab. So again, more likely you're waiting for reaction away from it, and then you wait for price to come back into the extreme away from the inducement. Again, you induced all these lows in here with the whole trend in here. So this push is ready to smoke, right? Until it gets the next liquidity areas, which are minimum, again, these highs in here. Right, and then again, they will start building the next traps, start building the next traps, and so on and so forth, right? But now you're trading away from this inducement. Always trade away from the inducement, especially when it's perfectly the starter kit variation. So when they come back in, right? So again, look at that. They're even creating here the little equal highs in here. Plus, again, it's the trend. They, smart money traders, order flow traders, they're entering in here. They want to see new lower lows, right? But guess what? They tap into the extreme mitigation, right? That's when you can enter the starter kit buys, right? So that's when you can enter. You can use our fancy tool in here and buy it, right? Whatever that just did in here, right? And then again, the next target should be minimum what? Either you target the next liquidity areas, which is in here, intraday maybe, right? But overall, you can target higher, like for example here, but let's just make it an intraday trade, right? But again, this is a very, very confirmed trade. So if again, they just give you a smooth ride, boom, you technically can be done for the day already, but you have to think again long term. What's most likely going to happen here? Again, look the imbalances, right? So they're faking probably the smart money trap. So they will give you a fake reaction down. So again, it's not a problem to close that off, right? And again, because they will fake the reaction anyways, you just grabbed a little liquidity in here with the equal highs. So again, if you really wanted to, here's your little pullback trade. But again, just into the continuation. Again, they technically only want to fake the pullback and then continue higher, right? So this could be already enough, right? Again, the day is all over or soon over anyway, so they will build the traps for the next day, tapping into the smart money trap once again, given the fake reaction anyways, right? So let's see what they're ending up the day with, right? Okay, so they're just ending the day like this, again, building the equal highs in here, and now Asia is moving away from that again, prematurely bringing people in. Fake Kochs in here, right? Fake change of characters, right? So we have to wait what Asia does though, right? And that's very fucking nice now. That is super, super nice. Guess what? Trend is being formed, right? In Asia. So the whole day is starting to build buyers in. So what do they have to do if they want to stop them out? First, again, premature sellers have to be stopped out. So how do they do it? They break the trend line. Sellers come maybe in, right? Obviously, they're getting smoked already. Boom. What is that now? Asia range. Breakout. Momentum. What's the timing? Look at the clock. London open. What a surprise. Taking out these equal highs in London. Oh my freaking God. Isn't that another perfect starter kit situation, right? So what can we do in these scenarios, right? We wait for London open, right? Again, I just show you the broad approach. You always know how to end it. I just show you how you technically can do it. You wait for your confirmations, right? Like London open, and then you literally can sell it if you wanted to, and you aim for the next liquidity areas, which would be to the short side, right? So that's all they do. And then, of course, the next thing, what they want to do, smart money trap, and then obviously into these proper demand or supply areas, in this case, demands, right? Areas after they take out, again, the continuation bias of the order flow with the obvious imbalances. So you expect smart money trap into proper demand areas and then continue higher as you want to grab the next liquidity, trading away from this trap in here, or an inducement perfect scenario in here, right? So for now, you can technically just sell it in here, right? So let's see, boom, smokes down, right? And of course, that's your intraday target, and they just hold it. Okay, so they're just messing around, nothing to worry about. Obviously, your entry should be much better than that, so it should be up here-ish, right? If you obviously look to the left as well into these next areas, right? Supply demand areas, always the same stuff. It's literally always the same. It's the same scenario we had in here. It's literally 2 days later. So again, perfect cup scenario, perfect starter kit scenario in here, perfect starter kit scenario in here, perfect starter kit scenario in here. Then now they're just messing with price action a little bit. But again, what do they do in here? They're just faking the ultimate, literally quad million top in here. So retailers getting very excited about this sell, right? So again, now you're just trading the fake reaction of the sell in here. Again, if like you see a quadruple top in here, you know it's just literally a fake reaction. So the moment it taps into the smart money trap in here, we would be out. And when do they do it? Or when should they do it? Same scenario. Look at Asia low, forming the equal lows with another Asia low. So again, this sell should definitely smoke these equal lows in here. And then we'll be out, boom, like this. We would close it off like in here, right? Boom. And now we know, okay, smart money trap most likely, right? So we can expect a reaction, right? Again, and that's what's the ideal time, as always, would be London open. What a surprise, right? So smart money trap faking the reaction for obvious smart money traders, right? Again, they think, okay, this is, again, the continuation, the Koch, whatever. Again, it's the same thing as we had in here. They're faking the Koch first in here, right? They're faking the Koch first in here. It's the same stuff all the time. They fake the Kochs first right? In here, they fake the course first in here, right? It's always the same. They want to obviously induce these premature buyers or sellers first, same way they do it here. Premature buyers getting in, small money traps getting created in here, right? And again, when does the trap happen? London open to the minute. They want to push price lower once again, boom. And now obviously the trap is completed, and that's when you can come in and obviously open the buys as you understand proper price delivery. And again, what's the next target minimum? Next liquidity target. And what's the next proper Enigma objective? Get a mitigation zone properly done in here, right? Again, huge imbalance after liquidity grab. Yes, it's Asia low, right? But for this scenarios, it makes sense as they're grabbing liquidity first. They coming from an inducement, grabbing liquidity into mitigation, coming from this perfect starter kit scenario once again. So let's see what they did. Oh, okay. They just stupid literally one candle. Okay, I'm not sure if that was news. It should not really be news at that time. But yeah, they just literally shot through it. And again, that should give us confidence until the next area, or you can partial out for sure. That's definitely a good scenario, right? But if you don't want to partial, you can just ride a little bit. But again, be prepared. What should they always do? Smart money traps, giving fake reactions, getting premature sellers in now. So how do they do it? Right? Oh, what is this? Change of character, fake one, of course, right before the actual supply demand area in here with the imbalances up here as well, right? So premature people getting in, they're seeing the change of character, they're faking the reversal. So obviously this creates a small money trap in the top as well. So what will they do? They're gonna stop them, obviously, and that's when we close our position, boom, and obviously can prepare for the counter trend as you literally tap into the mitigation right here. So why not literally counter trend it right away? As again, the trap is done, the momentum is done. Look at how they're speeding away. And again, everyone is now long break of structures. Oh my god, blah blah blah, will continue higher, blah 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 blah. That's what they're thinking, right? Smarter than that. Wait for the next proper price movement they do, right? So guess what? It's always the same. Look what they do. Wait until they show you their hand, right? And again, what do? Look what it is. A little trend in here. This is the inducement of the trend. This is the structural inducement. This is the push that mitigates this inducement, which tapped into the supply demand areas, right? Again, yes, it's in Asia. So if you trade Asia, it's the same stuff. Look for these little creation of liquidities into the inducement and then into mitigation, trade away from that overall, right? So again, if you don't like this, you wait for what? Wait for what? Exactly, relevant break of structures away from an inducement, right? So what's your inducement point of interest in here? These areas, where's your liquidity? Right here, right? Your internal liquidity. So let's see. When they tap or don't, okay, boom, they do obviously. So that's technically the short you can take up here, but obviously I was too fast, so I missed that. So let's see if they give another proper re-entry. Again, you want to trade away from the objective now. All right, so let's see what they do. Always that would be a very nice ride. This is absolutely gorgeous now as they're creating the equal lows. What can you expect after that? Reaction, right? Into what? Into proper order flow this time, right? Again, as you create an equal lows, boom, there we go. So now we can definitely open another sell in here, right? As we trading away from the overall objective, we have an equal lows perfect target in mind. So the next zone would be this smart money trap with the imbalances we can aim for, right? For the next proper target. So let's see what they did. Okay, messing even a little bit around. Again, if you understand the bigger picture, there's nothing to be worried about at all. Again, now next day starts, right? Okay, we already can see what they're doing, right? Look at this forming the trend already in Asia. So you know what comes next. You know what comes next. Inducement of the trend line. What a surprise to bring in premature sellers to do what? To, of course, stop them out in when? after Asian range of either Frankfurt or London, this is turned into what? Into mitigation point in here. So what a surprise. You can literally open the next cells in these areas, right? So let's see what they did. Right, again, this is the perfect starter kit scenario once again, and obviously it's good until the next area is down there, right? So let's see, boom, done. Okay, but obviously now you're expecting smart money trap reaction, so maybe they come close to that, so you literally close that. Literally close it. I don't know how to only close that one. Doesn't matter, let's just close it. I have no idea if it closed all of them. I think so, yes. Okay, so it is what it is, right? But again, you're expecting the smart money reaction trap out of it, right? It's the same scenario. You can do that over and over again. So guess what? You wait for your internal break of structures if you have something on the lower time frames. And then, of course, you're trading the bigger reaction of like the bigger smart money trap in here. Tap to the absolute tick if you check, right? You have your momentum. Everyone is getting in the cells, right? So you want to trade the reaction to give obviously buyers the fake illusion that this is continuing higher, right? So again, you want to trade with the trap. So yes, you can literally open a buy in here as well, right? So let's see what they did, messing around. Okay, perfect. But again, what's your inducement mitigation? Right here. Up in these areas, that's your inducement. Wait, trading in line with the overall objective into the next liquidity, which is of course down here, right? Again, now you're in a smart money trap. It's just literally trading the smart money trap scenarios, right? So okay, ooh, that was an interesting one. So comes us back, messing around. Okay, so now obviously you close the sells, close the buys, and you literally could open the sells. Again, as you're tapping into the order flow away from the inducement, away from the objective, right? Perfectly fine. You're trading for the next liquidity areas, right? But obviously, this is just a New York entry in here. Then better scenario would be, of course, London the next day. But look at that. Look at that. So now, of course, the day gets slower. It comes to an end. They're forming the equal lows. So I personally would just close this trade and wait for the next scenarios in terms of London and Asia relationship, right? So let's see what they do and what they show in Asia. Again, we already see, okay, equal highs. What a surprise, right? We probably can expect smart money trap in here also, right? So let's see what they do. Okay, so they induce low first, but forming literally the quadruple top in here. So they induce low to do what? Obviously, induce this quadruple top. When do they do it? Look at the timing. To the absolute minute. Are you freaking kidding me? 9 o'clock again. London Open. It's just a joke. It's still a joke. So the moment they snatch the equal highs, like this-ish, into... Isn't that the same shit all over again? Into mitigation area, guess what you can do? You open the short and aim for what? Next liquidity. What's your next mitigation area? Right down there. So the moment they tap in there, of course, you can close it, right? Let's see. Oh, smooth row, smooth ride, smooth one. Oh, look at that. Are you freaking kidding me? Is that a joke? Right? So now it's better to get out of that. And again, you can wait for the next day because now you obviously reached this area, which also was our inducement overall. So we can expect a deep reaction out of that one, right? So again, we have to mark the whole zone in here. When you wait for the next day, and obviously what Asia brings. Let's see. Okay, they're messing around at this trap like crazy. Okay, so Asia. Okay, that's a different one because we have like these crazy equal lows. We have this crazy equal high, so ranging like a motherfucker. And inducement low this time. Okay, okay. So now we have this inducement of this point in here. This should hold though, as this is your inducement. There's no point of them of inducing the inducement once again. This is your mitigation phase you're in right now. What do you have? starter kit variation, Asia range forming equal lows, Asia range forming the fake trend, inducing low in early this time Frankfurt, but inducing the structure, and you already are in the demand area. So you definitely can expect the buys in these areas, right? So personally, 100% I would open the buys in here, and you aim as always for the next liquidity either here, because now you're trading literally the extreme of that inducement in here. And again, you technically want to grab liquidity a lot. So again, you can have multiple liquidity targets in here, but for intraday targets, again, this would probably make the most sense in here. And then the next day probably gives another scenario. But again, this is the same exact starter kit variation we had like 15 million times at this point. Again, not this one. You induced a low first, trade away from this inducement. This is just literally a small grab in here. But again, probably gives you the reaction as if this is a small inducement. But that's good for re-entries, right? So again, if, for example, if you champion the M5, again, the extreme would be all the way down there. It's very unlikely that they come all the way back down there, as again, they technically would give you the quadruple bottom. They will not do that. Again, sometimes you definitely have to keep an eye out for these little zones as well, like in this case. Again, these little imbalance areas, these little supply demand areas where they're just in the middle. Sometimes, again, not ideally, but again, guess what? Here's all the equal lows they formed. That's obviously the trap high to move price lower. That's your final inducement. Liquidity is definitely in this area, as again, they built these equal lows, this fake support crazy in here as well. So there's definitely liquidity in here as well. So this is an optional re-entry for sure instead of the extreme one, right? So let's see, boom, tapping in. So definitely worth to risk it, put stop loss below here. And if it comes low, you can always take the re-entry in here as well, but you're already in this anyways, right? So this is for sure a possibility, right? So we have the extreme entry in here. We have the re-entry in here. The next target should be, of course, in the next liquidity from the previous day, right? So let's see what they did, right? And look at this entry though, by the way, huh? Isn't that absolutely gorgeous? Isn't that absolutely gorgeous? So let's see what they do. Okay. So we can expect a little smart money trap in here as well. Again, maybe. Oh no, that just literally shoots straight through it, and that's target done. That's literally the target done. Okay, so we had our perfect buys in here. We had a perfect re-entry in here, and we're closing it with the first liquidity target, right? So isn't that absolutely amazing? Isn't that unpredictable? Isn't that random? How can it be? We wait for the next day. We wait for literally the next day because we look at what they do. Equal highs like fuckers. They make it so obvious. Look at that. Trend being formed in Asia to the low side. What? Are you kidding me? Right? So what's your next proper zone if they want to induce low into mitigation to go higher, building the trend already? Okay. Again, that's the same thing. Look at it. Trend line being formed, induced high to go lower first into what? Mitigation this time. And again, if this is another starter kit, you can fucking jump out of the window. Are you kidding me? London Open to the absolute minute. It's a joke. It's a joke. It's the same freaking shit over and over and over again. Again, you aim for the next liquidity target, which is minimum here, right? Again, if you want to aim for something like these Asia highs in here, well, is possible. Oh my God. Oh my God. Let's see. Oh my God. And that's how you should do it. It's literally that easy. Use the starter kit in your advantage. The most madness shit you could think of. You have everything you will ever need to be an independent, successful trader for life. Think about that. You have the keys to the freaking enigma. Make something out of that. Absolute Madness. And let's dive straight into the Awakening Master Guide signature setup. So of course we prepared examples literally 2021, like not even prepared, but we did them even back then live. 2022, now you have 2023 examples. Nuts. It's just, again, you see how it is literally year after month after day, every week it's the same stuff. It doesn't matter, right? So but let's dig into Friday 13th of January in GU. Right, what a surprise. It's always the same, right? So what do we have in here? First and foremost, again, we have a huge trending forming in here, making everyone excited. Already they're getting stopped out slowly, and this pullback is creating, of course, also sellers. But what's important for us? The most important for us is, again, as you learned, Asia range in here, right? What did Asia range do all the session? They did anything, right? First, I had a slight inducement high, right? Perfect. To get what? Obviously, trick people in longs, taking out sellers, and then the rest of the session, they just literally building a short trend in here, right? And then, of course, they're reacting from sort of imbalance fills in here as well. After everyone is getting short, they're filling the imbalance, and then they move away from that. And then the same thing now. So starting Frankfurt, and obviously end of Asia, what do? Right, everyone is short. They mitigated their purposes, or like their imbalances, fulfilled their purposes, and now we have a nice channel upwards, a trend forming to the long side, right? And of course, what a surprise, inducement out of break out of Asia high, and also an inducement, a medium inducement, as this is again previous day's high, it looks like, right? So of course we have the medium inducement right here. So this takes it out with what is the timing? Obviously London Open box perfection, right? So then again, in here, if you look for Rillenberger structures, it's not really clean as it's everything down here. You should not take just like a one little candle in here. So it's better just to wait, make it a little bit clearer. And now, as you can see, it's not pretty sure if they made equal highs here, or like if this slightly took it out. It doesn't really matter too much, as now at least you know, okay, this is my medium inducement after they literally brought in everyone and the neighbor for the long sides, right? Again, with the huge trend being formed, the breakout, and another breakout out of this zone in here, right? And obviously we're in perfect time window. So everything just screams until this play could be done, and we could have a nice potential signature setups to the downside in here, right? But again, you should not prematurely jump in. It's just better to understand the overall picture. For understanding the overall picture, you should also look to the more left, not only in the previous day, but also maybe this had a significant impact to price action as well. So let's do that quick, right? So if we check, for example, okay, we are right here in this day, right? So we see, okay, we have a medium inducement. Nice. This was also some sort of equal highs in here, right? So this is even nicer for the medium inducement, as it took it out once again, right? But what is going on here? this point in here, right here, right? Again, it is, first of all, you see this huge wick with news, which if you can see it properly in the recording here, right? First of all, again, what is the price? Asia range, liquidity getting created, false break of structure, inducement at Frankfurt open in this case, smashes Asia low. What is the price? Asia range, induced low, right? Induced medium structure points in here, right? Obviously high, and now we have the same thing. Isn't that crazy, right? Asia range, inducement high, medium inducement to expect what? Short side, right? But again, now we obviously have to also combine the proper more price action understanding, as it can't be like up and down all the time, as it would be completely ranging price action for like eternity, right? So obviously it has to move in one direction at some point. When does it do it? When there's a proper medium inducement at some point. For example, we had it here, right? We had a structure point in here, news took it out, and then price action even came lower once again to take out even the news wick. So again, there's zero bias possible in this whole scenario. There's no bias. Even if buyers, whatever, got in here and here and here and here, they're all getting stopped out again with this wick. So again, there's no bias in here. If there's any bias, again, they jumped in later here, maybe even here, right? Again, with the imbalance fills in here, makes sense, right? So guess what? Now we have a medium inducement high. So it could definitely make a lot of sense to take them out and then trade away from this medium inducement overall and push price higher, right? So again, you have to learn to think in these processes and this chess master level of thinking. Okay, they prepare the moves, they set up the move, they obviously get people in the wrong direction, they give them the reasons, they create everything step after step, and you have to learn to think a few steps ahead of how we just did it in here. So with the overall understanding that this is the better, most significant medium inducement scenarios, again, no one can be buying these scenarios other than in these areas or like obviously here. Now we have a medium inducement to high side, expect inducement low. Once again, this was also fulfill our signature trade in or setup in here where we have the Asia range getting induced to the high side, medium inducement, take a good for at least Asia low, and also getting buyers out once again, inducing low once again to go higher overall. So with that place already mined, first we have to analyze the market step by step, right? We also seen here there's no imbalances areas in here to expect price to tag in here and for potential reversal trade, right? So we can't just pick a random POI as everything is mitigated. Here's mitigated. There's no imbalances in all these price action. So all we can expect is an inducement low of Asia low, getting all the buyers out once again, and then maybe look for potential re-entries, and then obviously expect price to go higher. But first, we have this scenario fulfilling the complete signature scenario with London open inducement, breakout of Asia, medium inducement, right? So we only need a relevant break of structure to take the shorts, but we want to trade away from the medium inducement overall, okay? So signature scenario done. Expect the shorts, take out Asia low, no imbalances, so we can't really take any trades in here, or we get other confirmations, but then we want to trade away from this medium inducement and then obviously get higher. That's what we have in here. So we wait, and obviously, again, we covered it already, we have the massive trend building up liquidity to induce everyone and the sister to the long side, right? We called all the reasons already. Then what is a price? You get this relevant break of structure, okay, depending on if this point took out these highs once again. At this scenario, again, it should be pretty clear anyways, right? So again, what can you do? Trading away from the London medium inducement, also taking out Asia high, medium liquidity, perfect liquidity creation before that. Timing is absolutely perfect as well. Target is pretty nice as well with this Asia low just hanging in there, right? Which also was a small money trap, which made everyone excited, started the moves in here. So that's huge liquidity point as well. So we wait for the relevant break of structure. And as you learn in the signature setup scenarios, we just need a medium inducement mitigation. Do we have imbalances also? Yes, we have, right? Just a little bit though, but it's completely fine. And again, we can trade the medium inducement mitigation after a relevant break of structure, meaning after a medium inducement, after we have a fulfilled signature scenario, after London place, creation of liquidity the wrong side, right? So once we had everything of that, price gave us our absolute juicy mitigation entry, probably even some nicer point of interest in the M1 in here, right? If you're getting more experienced. So guess what happened after that? Of course, it just smoked through the Asia low liquidity and target hit, just chooped straight into it. All the buyers are technically out now, but again, it's the opposite way around. People now, okay, maybe they're getting into the short slowly but surely, right? Because again, everyone of the buy side is taken out. Look at this huge momentum, right? Again, another breakout zone. The only nice, not so nice thing for us is that there's no imbalance point of interest. So we have to wait for additional confirmations to trade away from this medium inducement overall we had the previous day. Okay. But yeah, I hope this is pretty clear why we had this tube down there. And we can continue this play even, right? So we're not done. So target is technically hit for our shorts, and what a juicy, beautiful trade it was. And you've probably even seen here, we had some multiple re-entries in here as well, right? Boom, boom. Absolutely perfect, right? But we're just talking about this overall first entry signature scenario in here. All right, so target for Asia low is hit. So now we want to trade away from the medium inducement to the long side. We just can't randomly take a reversal trade. So of course, we need some potential more clarification in terms of price action. So all we do is wait. Remember this quote good. You're not paid to trade, you're paid to wait for the right scenarios, for the right price action, and then you execute. So you're paid to wait. Be very patient until you see, for example, something like this. Okay, so now you see the build of liquidity sideways. Okay, so you already learned if you get an inducement, you want to trade away from it, right? As you don't have any point of interest in here, you can expect for mitigation to tap in. You have to wait for something like this. Creation of building liquidity, right? And then boom, out of a sudden, look at this. A tube to the downside of inducing the liquidity once again to the short side. So this is another inducement of liquidity. We already hit our target of Asia low. There's not really any more targets in here. And obviously we don't expect this medium inducement to get taken out. We want to trade away from that overall. And we had our signature trade in here trading to the short side, right? So perfect. So we can expect this to be the final inducement for price action to be done, as we are already into these demand areas in here, right? And we want to trade away from the medium inducement. Okay, so this is the last impulse for sellers, and for us, the last confirmation for the inducement after this little build-up in here, to maybe price action is done. So what do you wait for as you learn with the signature setups in here, right? You wait for what? A relevant break of structure. I drew it in a little purely here, so it probably should be more like in here, right? So depending on the price is like here, so not obviously up here, so it should be the relevant break of structure in here, as this push led to the inducement once again, right? So again, we had the inducement. Doesn't really matter until it would make a relevant break of structure in here. Didn't give it. Made another point of another push lower, and this creates the relevant break of structure. So again, always remember, let's say we have this liquidity zone in here. Let's just, for example, induce it to the low side, right? It doesn't matter if it pulls back in here and then makes this and makes this and make this and make this and make this. We just wait again after we know, okay, this technically is the inducement. We just want for the next relevant break of structure, and then we can trade the mitigation of the inducement, right? So again, keep that in mind. You just don't randomly just jump in here and then maybe risk an L in here. You wait for the relevant break of structure to lock in the inducement additionally. It's much more safer. Again, the more you're getting experience, the more you look to the left as well. This is the relevant break of structure can become optional, but as you're starting out, yes, you're learning the basics. It's learning one significant signature setup. You should stick to that, and only when you're getting more experienced, then you can get more aggressive. But for now, learn it with the relevant break of structure. Okay, so with us having the relevant break of structure, again, guess what? What do we do next? Right? We have the perfect liquidity buildup. We have another inducement. We have technically the amount areas with no imbalances in here. We have our medium inducement we want to trade away from, right? So absolutely perfect. So we have our the amount areas in the inducement, so inducement mitigation, right? So probably nicer points of interest in the M1. I will not dig into that right now, right? So guess what? The moment you give the random structure, taps in here, right? So this could be already done for the M5 place, as again, this zone is just as big. Okay, it is what it is, but it's just understanding of you knowing what's going on as we had the build up or the building of liquidity, an inducement to a low side, something to the left, medium inducement also you want to trade away from, right? And obviously can't trade away from that now. So guess what? Boom, nicer relevant breaker structures now, if you like them better. What's so nice about that as we're trading away from the inducement once again, right? So again, what's so nice about that? Maybe a little hint in here, what's going on here? We know something called order flow, right? We have another relevant breaker structure, right? So what can we expect? Order flow mitigation, and look how juicy that is. They creating new liquidities with the 1, 2, 3 bottom in here, right? Absolutely amazing, right above this imbalance zone as well, giving us our perfect order flow mitigation in these areas. So guess what? Absolutely Mona Lisa scenario in here, right? Inducement into mitigation of order flow away from the intraday inducement, which is this in here, away from the medium inducement of yesterday, which is in here. And we already had our fulfilling signature scenarios in here. And again, you also could argue, okay, this is also the equal highs in here, which you can aim for as well. And the day ended off, what a surprise, with this absolutely beautiful tube, and then obviously the day ends like this. So the same thing as always, you wait for the next day to create Asia and then probably taking out these plays in here. But for the day, the intraday, this price action is here. As you see, the timing is getting very late, and the next day is about to start, but it ended off with this beautiful, beautiful tube. You can see it in his face in here. Absolutely gorgeous. An important aspect to keep in mind, though, that you will 100% miss clean as hell setups, right? That will happen for sure. You're not playing Pokemon at the end of the day. You can't catch them all, right? So you have to also learn to accept it, but you have to train your eye to see the overall plays first and then don't get upset or force the trades if you might miss it. What do you mean by that? Let's take another signature setup scenario from 11th of January 2023, whatever pair that is, right? So again, same thing as always. We have our Asia range in here. Look how they're creating liquidity like crazy, right? With the uptrends in here, right? Also already inducing some structural points to the left in here, right? And then finally Frankfurt kicks in and induces the 1, 2, 3 highs as well of Asia. And look at them speed, they're also showing absolutely gorgeous, right? So you technically wait as always. We have to equalize. We have to even, that's even nicer. I forgot to even mention that, right? The fake Koch before the Asia inducement. Guess what? It's absolutely amazing. Again, they show the liquidity in here. Crazy, crazy support can never get broken, right? And they fake the Koch, fake the break of structure. So they're all getting snacked in these smart money traps, retailers, whatever, reversal traders, all that craziness, right? They're getting absolutely tubed with Frankfurt in here, right? So what do you wait for though? You wait for the relevant break of structure, which you had in here after the fulfilled place in here. You understand also, okay, smart money trap yesterday low, so that's a very nice medium target down there, right? So let's see what they did. Oh, first of all, you mock up your imbalance zone after the relevant break of structure. Look at these huge imbalances after this very juicy inducement in here, and then they just drop without us. So we missed our entry. Medium liquidity is technically already hit as well. So this setup is done. So you just have to cancel it out. So if it comes back in here once again, no, this is not a re-entry anymore, right? Again, you technically had already medium inducement targets done. So you just literally have to close it out. But again, the better target is for sure the smart money trap as well, and yesterday's low, right? So if it comes back, we're not interested anymore, right? But overall, we expect, of course, medium liquidity to get induced. When do they do it? Of course, look at this, faking the double bottom in here once again, creating the fake Koch. What a surprise for retailers, right? And now the trick comes in here where you truly have to understand what's going on. So first, double bottom for retailers which trade support, whatever, double bottoms, all that stuff. Again, they see this also as a huge support zone in here. Relevant or for them a break of structure. For us, it's the inducement high, but they getting all excited, and again they take getting in here. Right, they're trading the reaction. If this candle was solid black at one point, which it was, they jumping in like maniacs in here once again, right? But now what does it do? Induces the equal lows in here after the fake break of structure. But guess what it is now? Now it taps into this imbalance zone, which is a smart money trap zone, right? So they want to do the same exact thing what they did just here for the smart money traders as well, right? So they want to fake a reaction. Boom. This is the fake smart money reaction. What do they also give? A fake break of structure. This is how structure is getting smacked over and over again, right? So dangerous to just trade a structure in combination with like smart money because they give all these fake traps on purpose, as exactly how they did it in here for the retailers. They do it exactly in here with the smart money traders, right? So they're getting the break of structure, right? And obviously they becoming the liquidity. Price wants to take it out, create the medium inducement, right? That's exactly what it does. Does it one more time, building the head and shoulders down here with the 1, 2, 3 touches down there. Smokes them all again. No more buyers possible in there, right? So guess what? Here's your tube to end the day, and that's the same stuff. The end is slowly over. So you have to just learn price action, not forcing any trades. Try to learn first what's going on overall, and then of course you also can expect these areas to be taken out slowly but surely. But again, there's a whole day missing still, so again you have to wait for price action until the next day and don't do any premature moves. But again, at least you understand, okay, this is definitely now your proper medium inducement you want to trade away from, and again the reaction comes right after as well. So learn how to read price action and its intentions, and you will have so much more clarity than you could ever expect. It's pretty simple. And maybe you know this absolute legend from Wolf of Wall Street as well, and he kind of named it as well. The name of the game is moving the money from the client's pocket into your pocket. What does this mean technically? And what does the market do? The market gives these fake reasons to retailers, smart money traders, fundamental traders. It doesn't matter. It gives the reason. So again, it has to take their money to put it into their own pockets, right? So if you understand this principle of the game, you will set yourself free forever. Again, all you have to do is, again, wait for retailers, smart money traders to get in, and then get stopped out. The market takes their money, and then you get in. Okay, this is how you trade truthfully in line of Enigma. They either drives price action and not how all the other shit you heard about, like smart money, this and this. This is truthfully of how you do it. As you want to catch best case a signature setup on a daily basis, of course, you need to look at multiple pairs, as the signature trade only happens a few times per week over a few pairs. It's pretty obvious, again, that the price action cannot have this specific scenario every single day. It's simply not possible. Otherwise, again, retailers or whatever other traders, they would figure it out. So of course, not every day can be a perfect signature trade, but when it happens, you have to be ready and absolutely snatch it away. In order to do that, obviously, you have to look at multiple pairs. We recommend our lit pairs: Euro USD, GBP USD, AUD USD, Euro JPY, GBP JPY, GBP Swiss franc. Actually, that's one of my favorites. And you also can trade US 30. Overall, again, it works on literally every pair, on every commodity, on every whatever. It literally doesn't matter. It works literally also on cryptos if you bake in this principle of it, the range getting induced, technically the creation of a range or the creation of liquidity, trading away from the use and waiting for a break of structure. Obviously, timing doesn't work in there, but overall, the principle is an evergreen principle which works everywhere. But if you just stick to those pairs, you literally will get multiple amazing signature, absolutely Mona Lisa setups, like literally every week. Again, we just showed you a few, like from January. Like it's in 1 week there's like 5 to whatever, like good examples. Again, we don't know what happens in the future, but again, we showed you examples of 2021, literally 1 week straight away. Like every day the price action is pretty similar. 2022, every day price action is pretty similar. Now 2023 in January, already a lot of examples over and over again with the same 100% exactly signature setup. So again, you just have to be patient, wait for it to present itself. Also have the understanding that price can, again, for sure, it can have like this, and then a day is over like this, Asia range, and it's just like turning into this. But again, there's no signature scenario in here, right? And you have to wait for the confirmed medium inducement, relevant break of structure, in perfect London or Frankfurt time windows, into mitigation of imbalances, and then aim for Asia range. And if you just do that, again, you will not have every day a setup if you just look at EU and GU. But again, every 2-3 days, there will be a perfect setup for those trade pairs as well. By the way, literally 95% of setups we just showed you is EU and GU. So again, it's not like we have to cherry pick. But if you just want to show you now as well, that again, it's an AUD, Euro JPY, GBP JPY, Swiss franc. It doesn't freaking matter where you look at. Again, you can technically have a perfect signature trade every single day if you just look at multiple pairs, right? Also very important to note that down. If you look obviously at TradingView and analyze there, you have to use also FXCM and Rwanda in combination to identify the proper Asia range. As brokers overall, again, you can use whatever broker feed you want. It's just our recommendation to use FXCM and Rwanda for TradingView, right? But if you want to use whatever, then you can do that also, because they have a very different price data leading into the day. So meaning the day open price can be very different from broker to broker. So that's why we have to combine it to get the proper signature setup and proper targets as well. For example, if we just dig in here, let me just remove my beautiful drawing here. Right, so we have GBP Swiss franc this time. Right, again, what a surprise! February 2023, like, oh my God, what a surprise! Right, so we have it here in FXCM, we have it here in under. But you already can see the price action in terms of Asia range is very different, as again FXCM gave this crazy price movement down here, and in Rwanda there's nothing seen from this price action, right? But this affects the Asia range drastically, right? As you can see here, this is Asia low. Let me just redraw it here. Asia low in here, but this is not Asia low. Asia low is all the way down here, or like in here, right? As again, this is technically their price feed. So if you look at this signature scenarios in here, right, but again, where they're building the equal highs in here, right? They're faking the Koch, taking out the inducement, boom, perfect, right? And then I always want to trade into the Asia low for confirmations. In here, the Asia low is all the way down here, but in here it's all, technically already in here, right? So if you understand, okay, perfect, you have your inducement in, again, Frankfurt leading into London Open scenarios, right? Guess what? In FXCM, price is literally in Asia range in here. Now London Open is around the corner. You can see it on the bottom in here. But guess what? On Rwanda, look at this. You have an absolute perfect London Open signature trade again. So not only from this side, right? Perfect. Boom. Smacking Asia lows. Now it's the better scenario anyways with London Open. You should wait for. It's much better than Frankfurt Open, right? But in of FXCM price action, you still would be, okay, I'm still trading away from this signature inducement and I'm aiming low in here. You're getting all confused, right? But in this scenario, it's absolutely perfect as you had, again, Frankfurt price action, creating all this trend down here, inducing Asia low already, creating the momentum to the downside. Again, think about it. This candle in here was solid black at one point. Everyone jumps in the sells in here if they get the breakout and everything, right? And it's London Open to the absolute minute as well. And what does London say for the liquidity getting introduced to them? They say, thank you, I will take it all and be below session however we want to, right? But in this scenario, you're literally in the range still and there's nothing really much you can do in here. So you expect price to take out low in here. It's a huge, huge, huge difference. Okay, so guess what happens? You have your perfect Asia low inducement. You have no Asia low inducement of FXCM. So you have to close this price data, choose surrender and be like, this is my London Open signature scenario. I'm waiting for what? Relevant breakout structure after London Open to the minute, created this huge momentum inducement candle inducing Asia low. Right, so let me wait. Boom. And what a surprise! You only get the relevant break of structure in here, right? You have a very big zone though, but probably something better than M1, but it's just do intention plays in here, right? So you have your perfect London Open signature scenario, relevant break of structure, you get your inducement point of interest, mitigation, price action already tapped in. Again, probably if you have it broken down on M1, there's probably better POIs in here, which get fulfilled absolutely perfect, right? But just intention plays, inducement of Asia low, London Open, huge crazy momentum candle, everyone at the sister selling. Obviously, now we have our confirmation of the relevant break of structure, taps back into inducement point of interest, and now the target should be pretty clear also, right? Yeah, and what a surprise! Instantly, obviously, smacked our first target. So again, if you look at this example though, and you traded this whatever supposedly signature trade in here, which technically already led to the TP down here, but in this scenario it did not. Again, you just left on hanging like this guy, like visually or visible confusion, right? So yeah, that should not happen to you. But on the other hand, in this scenario, when you look at the proper age range, very smart and very clear, right? And it even continues after that, right? Because guess what? We have also huge imbalances left in these areas, right? Yes, we took out the first target, right? But again, technically, it also can be a relevant break of structure, trading away from the London inducement. But in these scenarios, we'd be like, I don't know, I still have Asia low in here. So maybe it's a small money trap and maybe they go low in here. But in this scenario, you understand order flow entry away from the mitigation, away from the inducement into order flow mitigation, right? So guess what? Here, you're looking like this lady doesn't know what the hell she's calculating in here. And you maybe stay out in here because you'd be like, oh my God, smart money trap, this and this, inducement high, overall, oh my God, I'm so confused. But in this scenario in here, you're chilling on your table, all relaxed, understanding exactly what's going on. You understand it's imbalance fill away from an inducement, aka called order flow, and obviously you want to trade back up and away from the London inducement in here. So guess what happened? That tube is not far, and of course gave even order flow entries even once again. So it's absolutely perfect. So just again use the Asia range properly, compare broker feeds again, and if you see some broker has some weird candles in a day at the beginning of the day when Asia range starts, then you have to cancel this broker out and go to a broker fee where it's literally 10 times more clear, which also makes more sense, where you can identify your targets properly, where you can identify your inducements properly, and then obviously the rest of the price action will be 10 times more clear. Another signature setup with additional price action identification way after the signature setup is done. So let's dig straight into it again to show you some variety of pairs as well. What is the price? We're back to 24th of January with AUD USD this time on M5, right? So what is the price? Only like so many setups in January. Right, so again, same thing as always. I know it always looks like the same charts. I know it looks like the same charts even from 2021 and 2022, but no, it's January 2023 this time, right? So what do we have already, right? So let's dig into it and see what we have. We have, of course, buy side liquidities being created, trend traders getting very, very excited. Even again, trading in this scenario, so even they're trading a trend line in here. I don't even know how they draw trend lines to make that even work, but yeah, they're just seeing these trends forming and all that stuff, right? You know, but the better one obviously is just to look at the most recent one, and you see clearly a trend is forming, right? Then guess what? Buy side liquidity is being created. Breakout traders getting very excited. Look at this: 1, 2, 3, 4. And maybe you count it in as 5, and then finally it's getting breakout in here, right? So of course, breakout liquidity, very happy, not only for the resistance in here, but also for the breakout of Asia range. Both breakout traders are very excited. So we have buy side liquidity for the trend, we have buy side liquidity for the breakout traders, right? And let's see if we have any more. We have buy side liquidity for break and retest, as again this invincible resistance zone got broken, retested, and another reaction, right? So again, break and retest traders are getting very excited. What's also worth noticing down, notice the time they bring in the mass liquidity. Frankfurt open to the absolute minute. Okay, so again, the whole world only has reasons to buy. Okay, so what do we do, right? What do we see? We see, okay, inducement stage is definitely done, as everyone in the world trading retail concepts is already induced to the long side in here. And also session liquidity confirms also bringing the liquidity. So we wait for what? Relevant break of structures after the perfect signature setup scenario is done with the inducement, right? So guess what? We get our relevant break of structure. Next thing, Inducement mitigation. Do we have imbalances? Oh yeah. And what crazy imbalances we have after the relevant break of structure, after we identified the liquidity, after everyone got induced the wrong direction, after Asia being induced to the high side, after Frankfurt session timing induced as well, right? So guess what we wait for? The mitigation. That's only what we exactly wanted. So we should take the short in here, having our beautiful, beautiful AUD USD M5 signature setup. And of course, target should be pretty clear, at least Asia. Range low. And choop, what a surprise. Absolutely effortless. Done. But guess what? What is another target you could aim for as well? Obviously, nothing wrong with taking this probably 1 to 10 in here, right? Definitely makes sense to close it here as well. But again, if you're getting more experience and understand price action more better and more in detail, look to the left. What's going on here? And again, maybe a few or still a little bit into smart money concepts would be like, that's a mitigation, imbalances, all that stuff. That's exactly what brings you the losses of smart money concepts, right? Again, very obvious smart money trap, as this is also the only medium liquidity point we clearly had to the left as well. Again, always be very careful about these baby ones in here, especially when they happen very late in the day. Again, this day starts in here. Again, this is also very late even. So yeah, expect it to be induced, right? They're looking for liquidity grabs all the time, right? So it's also the medium first liquidity zone we should look for. And again, it's also a very nice target zone. Again, they show the imbalances on purpose to make smart money traders excited. They need their reasons as well. We use obviously imbalances in a different way than they do, right? So guess what? Price action is coming down, and also notice how they're creating the massive trend. So everyone's selling, 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 selling. So guess what? When they do what? Getting from this reaction, filling the imbalances. When do smart money traders only get in? When they get a fake reaction, they're getting a fake Koch in here, right? So guess what happens to them? They scream like this guy in here as they're getting another L just to the absolute tick in here, right? Just took them out by literally one tick. So smart money traders stopped out. Too bad for them, right? So we have to look deeper though. This is an inducement overall, yes, but again, is it an inducement we like to see? It's more like an equal lows at the same time as well, right? And again, it just fulfilled its purpose of stopping out smart money traders to the absolute pip. So we have to just be careful about the fake break of structures in here as well. As again, this can still act for sure as liquidity 100% as the equal lows. So what's better for them to do overall, as this price point in here is also a very late price point. Again, there's not too much liquidity in. The liquidity is more like to the left in overall in-days price action, right? So again, you have to expect liquidity to being created. And if they created already all these sellers, there's already a lot of sell liquidity in. So now they have to induce premature buyers. And the best way to do it is, of course, with fake break of structures, right? So remember that. We want to trade away from clean inducement or overall and not double bottoms, okay? So keep that in mind and also understand the basics of when they create liquidity with fake break of structures. Again, structure is one of the most targeted things ever, the most efficient ways as well to do it. So of course they fake the break of structure here to make people excited and do what? Marking up another smart money trap zone. Again, they seeing the Koch in here, whatever. We see the fake break of structure. So they're getting it in here. Maybe they're still getting it in here. But what do we see, right? So price also built these equal highs and its reaction of the smart money trap and another one in here, right? So guess what? What's 10 times nicer and what also smart money traders want to see if they're getting their point of interest getting mitigated. When do they jump in? We had it here already. Fake break of structure, or like their Koch, whatever, right? And you also have this equal highs in here for liquidity creation, right? So if they get something like this, then obviously it's 10 times nicer for them and also 10 times nicer for us, but in the opposite way, right? Because they got their break of structure in here away from this demand zone in here, right? And of course, they're getting another smart money trap zone in here. But what is it really? What is it really? And you have to really train your eyes and your thought process about this. What is this really in here? Smart money trap reaction, first of all, again, it tapping in once again into the zone, reacting with momentum and speed out of it, giving the fake Kochs in here, but it is really just an inducement high of these equal highs. Again, they have to induce high to push price lower to take out all the liquidity they just created with, again, 1, 2, 3 bottom for retailers, even 4 quadruple bottom for retailers, seeing an invincible support area. Smart money traders see the imbalance fill, they see the reaction, they see the Kochs in here. We know it's an inducement high, right? But what is happening to the world? Smart money traders, they getting in, right? Reversal traders, they getting the break, retest of these zones, whatever. Also the overall head and shoulders pattern kind of thing. Breakout traders, they getting in here long, right? Momentum traders, they seeing all these candles. Look at it, 5 solid bullish candles in here in a row, right? They're all getting in the buy. So guess what's about to happen? Of course, they're all getting duped, right? So now look at it. Now we have the proper inducement to the downside. There's no more sellers. There's no reasons for sellers. Look what they even did once again. They faked even here again, the Kochs in here. Now we have the proper inducement. Again, look for proper inducements, not these baby 1 wick inducements and like whatever, 1 pip inducements. No, proper inducements like that, right? And guess what's about to happen? They all getting duped. And you just should sit here like this gentleman, enjoy them all getting duped and learn the true ways of how the market works, of how they bring prematurely all these people, all these different strategies, if it's retailers, if it's smart money, in the wrong direction. Again, always listen to the quote of like inducing high to go lower, inducing low to go higher, right? Again, for example, here, faking the double bottom, faking the smart money reaction, faking the Kochs just to create liquidity, faking the momentum, inducing high in the process to go low. Same thing in here, just again creating equal lows in here, faking the Kochs just to do what? Smoke once again lower, creating the huge inducement to the downside. Now everyone who bought is out completely. The opposite way around, sellers are all in this day. Again, they see the whole day as trending downwards. Right now, they're seeing the huge momentum candles just to get in once again. And we understood that this place is done and everyone is getting tubed right after. So if you're getting more experienced, you obviously can expect the inducement, you wait for it, you break it down to low time frames, and then obviously you trade the reaction when everyone is getting smacked in the background. You just sitting there and enjoy your profits. So you have been blind, now you should be able to see. So practice the signature trades over and over again, and when you got more experience, confidence, and practice with the signature setups, then you also, of course, could go from the M5 to the M1 and use that as combination, of course. So let's dig straight into an example of how you can do that. For example, we have another chart example from the 26th of January 2023, of course, right? And what we already see with this beautiful, beautiful price action in here, there's just one not so nice thing in there. And this, as we had our crazy inducement high out of Asia range and perfect London time window, we only can identify that the relevant breakout structure on the M5 would be all the way down there, right? So what can we do to this instance, right? So we can obviously switch from the M5 to the M1, right? And again, same price action, it's just a little bit more clear now, as we still see huge equal lows of Asia low, never induced Asia low, right? Maybe if you go back to the M5 once again, right, we see here's the Asia low in here, just faked the lows in here a little bit, but stayed inside the Asia range, so forming the equal lows for Asia and giving us a very, very, very nice target. Then, of course, huge tube in London Open, giving us our perfect inducement. It's not a medium one to be first. We don't see anything to the left, but it should be pretty clear in terms of price action, timing, overall intentions, and targets, right? So, okay, only relevant breakout structure is all the way down there. Not really a good outcome for us. So we just switch to the M1 and even see, look at this crazy momentum they showing to induce the Asia range in here. And if you saw my perfect straight line in here, there you go, that's a little better. Of course, they're faking the equal highs, just a little bit of 2 candles, 2 minutes, and then they just stupid. But before that, of course, resistance traders, they're getting smoked. Now, obviously, breakout traders are in like crazy, momentum traders are in, continuation traders, as they're seeing this trend forming, right? So the world is obviously buying. We have our perfect target down there with the equal lows of Asia low as well. Now we just have to wait for relevant breakout structures, and we already saw in the M5 this would be all the way down there, so very late. But guess what? On the M1, as we are right here, the relevant breakout structure would be here, which is obviously much more realistic, much more better in terms of entry, as it gives us a little bit earlier entry, not we have to wait all the way down there. Okay, so let's see what they did. So first of all, we draw in the relevant breakout structure zone, and then we just wait. Again, we pay to wait, right? So boom, there we go. Here we go. Here is the relevant breakout structure done. The only problem is up here, no imbalances, everything is mitigated. Even this one is mitigated in here. So what do we do, right? So again, as I just said, no imbalances above. So we have to still identify a point of interest with imbalances for the best case. So what's the only point in here which has imbalances coming from this price action here? Nothing here, nothing here. This is already mitigated. So the only thing left would be in here, okay? After the relevant break of structure, leaving imbalances. So if they come in here, that's technically also a possibility you can take. Boom. So we're marking in our inducement, not a medium one, just a very clean signature scenario in here with London Open, right? With our imbalance after the break of structure, we mark it in. Boom. Here's the mitigation. So potential area, we just have to mark up our target as well. Stop goes right above here. Target or entry technically is in here. If you want to break it down even to the seconds to get better points of interest, you also can do that. But technically, this play looks very, very good, as we have perfect targets with the equal lows of Asia low as well. So surprise, surprise, price action tubes down, giving a very nice play. And then, of course, smart money trap, false reaction of these areas, right? Faking once again. Again, we had the Asia low in here. If you don't see it, we cut it off. But then 1, 2, now 3 points in here. Again, this is also like some sort of smart money trap for sure for the continuation long side, right? So we expect the reaction. As always, look how clean it is. Point in here, boom, pull back, kind of false break of structures here as well. But the most important thing is that reaction of this zone, right? To get buyers in, of course, before what? They getting tubed, and then you're acting like Nate Diaz in here, because you're definitely not surprised anymore. Isn't it a big surprise? Definitely not, right? So you should not be surprised, as it's very clear market intentions. Just expect the smart money trap, and look how they literally do it over and over again. Look, same thing. They're just reacting off these zones in here once again before they even smoke through Asia low. Look at how they're reacting once again, even giving here the little fake Koch for reversal traders, and then they just smoke them, right? So target tubed, you should not be surprised coming off this beautiful London Open signature set up in here, giving a nice point of interest on the M1 after the M1 relevant breakout structure. Target was very clear, faked smart money reactions, right? Gives you confidence to hold even more, and then they all getting tubed. Overall, though, we recommend you to stick to the M5, as when you try to dig into that, just a little spell out here, typo here, right? So if you try to go into M1 too fast, it can be very dangerous. So again, we recommend you to stay on the M5 a little longer until you really develop the proper price action feeling, the overall price delivery on the bigger picture, if it's M5, M15, to see the plays playing out. And only then, when you're getting very confident with these scenarios, then go in M1, refine your points of interest a little bit more, and get those better entries, the tighter stop losses, the greater risk rewards. But again, this is only once you master the M15 and M5, then it's recommended to go in M1, right? So first, again, get confident with the M5 plays, and once you gained some more experience, then you only then start practicing the M1 entry style, and then only after practice, then obviously try to catch it live. We are back with GU, right? And of course, another one from January 2023, as we didn't have like already like so many. What a surprise! Like how many of those scenarios there is, right? Okay, so what do we see in this overall price action? Like first, if you look at the previous day, huge down run, creating all these sellers in here, then momentum kicks in, London kicks in, induces. Again, there's no relevant break of structure points in here other than maybe this one, right? Again, other than there's not really any clean pullback zones in here, so a little bit more risky. But if you just take this one, for example, of course, it comes back later in these areas. But then again, the day it gets very late and it just waffles around, sideways movement, just again building in creating sideways liquidity, ranging until the next day. That's how you always recommend you to close these trades and wait for the next day and wait for more clean price action. But to go even in more detail, so learn to read the story of price action, and you will develop clear chart vision. What do we mean by that? So even if you see this day in here coming from this price action, you should be able to read the story. What does the price action and market behavior literally try to tell you, and what you can read out of it? Again, you literally can read it like a book. if you just understand price action the right way. So let me explain you what I mean by that. So first of all, again, we're coming into Asia in here with this equal highs in here. What is this? Fake break of structure away from the equal highs, right? Again, bringing in people to the downside in here. Then, of course, prices channeling up in here, faking the what? Smart money reaction, also faking the what? Fake break of structure. Finally comes back once again, messes around before war, boom, taking out the equal highs and also mitigating this overall price action in here. So we have the equal high inducement into mitigation. Then what after the inducement? What is a price? We have the relevant break of structure away from this inducement. Okay, and once we have the relevant break of structure, boom, price comes into order flow until when now? Until when is the next liquidity targets? Either in here or in here, right? For the Asia place, right? So same thing, takes out these zones and obviously it's good for pullback. That's the same thing, takes out these liquidity points because this is already done in here. It already took 1, 2 zones. There's no need to take out this. Also, they will do that later. It's all about building and creating liquidity, right? So after they took out these liquidity points, they can easily pull back, take another zone and do high to go even lower, pull back in here. But now guess what this does? Creating the equal lows, right? For the retailers, support kicks in. Oh, there we go. And guess what they do right after? Creating the channel, creating the trend for people to obviously go long, right? Away from this double bottom. And crazy support, right? Has to be. Definitely not. So guess what they do? They obviously tube them all out with the very clean tube to the downside. When is the timing? Until they also take out the equal lows and Asia low to the absolute minute in Frankfurt Open. So all these buyers who are getting induced here, induced with the channel, induced with the trend, they're all getting stopped. But on the other side now, again, people getting in with the breakout, they still see this crazy downtrend in here, they see a continuation, all that shenanigans in here, right? But also, guess what they left in here? New equal highs for our potential target for the long side. I hope you can slowly but surely identify these plays. So let's dig into this actually scenario to identify the proper signature setups in Frankfurt and London. Okay, so let's remove all that stuff, show the proper liquidity of how they're building the trend in here, right? The equal lows. Asia low already getting smoked. Again, this candle was solid black also at some point. And look at this crazy momentum. Like literally all the candles in here, the M5 candles, are like all bearish, right? And of course, finally the breakout of Asia low and the inducement of the equal lows. Frankfurt Open to the absolute minute, right? So what do we do? You guessed it. And as we're just staying on the M5 now, again, we could technically break it down to the M1 as well. And here to get like maybe an early entry, if we just stick to the M5, relevant break of structure, the only possible one was all the way up here. We kind of got that now. So, and if it gives the relevant break of structure and of course stays still in Asia range, we have a very high expectation that when it comes back in these areas, it definitely could give an entry. Or again, we wait for plays. Again, as this already is mitigated, if you see this wick in here, right? We also could have a possibility the price can react from here and go higher as well. It doesn't essentially have to go all the way back in here, as we saw in the earlier example on the M1 also, right? So be aware of this. If it gives a very late relevant break of structures, yes, technically it's always better to go straight from the inducement point of interest. But again, if you get this very late relevant break of structure, you can definitely expect something in these areas as well. But obviously you wait for confirmation. For now, we just see, okay, perfect inducement, in this case also medium one, as it took out structure to the left as well, also the equal lows and this perfect intraday inducement with the Asia lows as well. And it obviously stopped out all these buyers in here. Momentum kicked in to the absolute minute, relevant break of structure. So the only question is our entry, right? So no clean POIs, as we said, as we have no imbalances. That's technically close to mitigated, and this is already mitigated as we have this wick in here. So we have to wait until they show us their hand once again in terms of the form of a building a liquidity scenario. So we just literally wait, and now look what they do. London brings in the liquidity. What do we see with the liquidity? So what are they showing in here? Can you identify what they're doing in here? It's not a perfect sideways build-up, but look how they're just ranging inside this channel to the downside. Well, retailers also call this flags or whatever. We should just be able to identify this proper price action here. So now the only thing you wait for is, of course, an inducement of this liquidity. And if it is an inducement low into potential mitigations, then you can definitely take this trade as well. Okay, so let's see what we do first. Again, we can mark up a potential point of interest as we now base it on a liquidity being induced and not just pulling something out of our arse with a POI which we create out of nothing. No, we wait until the buildup is there. Then we can expect an inducement of the build of liquidity, right, into a potential demand area. And then obviously we can expect targets to get hit to the left, right? And again, how do they do it? First, they take liquidity in here, right? So first we put like, okay, that could be technically medium liquidity being taken, but it's still trading away from this overall inducement. So if we have two inducements in both directions, obviously you have to understand which one had the better impact. And ask this question yourself. What has more impact on liquidity? This equal lows of 2 days being created, then the false trend is being formed, right? Then the huge momentum to the downside, taking out these liquidity points in perfect Frankfurt Open, inducing everyone to the short side. There's no more buyers involved, right? And then press price higher. And this is just a normal structure break. Or is this maybe this in here? Okay, taking out the zone and now they can go lower, trading into the inducement again, right? So learn the difference of just liquidity points being taken and proper inducements you want to trade away from overall. And in this scenario, we have this point just being a normal grab in here, good for pullback, good for reaction, especially if they create liquidity in here as well. And if you get a proper inducement, we want to trade away from that as well and away from the overall medium inducement in here. Okay, so again, in any case though, we wait and react. We will not predict, we will react. So again, we just identify a sideways liquidity in here, right? And boom, look at that inducement into demand after a build of liquidity. After Frankfurt Open was already the medium inducement, we want to trade still away from that inducement. So we definitely can take this trade 100%, right? So let's jump into it. The only question is, where is the target? And again, as we look to the left, we had this minor point already been taken. What's the next target? Is this a target? No. Is this a target? No. Is this a target? No. But if you look at the whole Asia range, what's the Asia high which is never getting induced? Exactly. This is your perfect target. It's also previous days high plus Asia high. Absolutely perfect target, especially if you have such a nice medium inducement down there. So let's dig into it. Asia high of previous day, marked it up, and let's obviously see what happens. I think you can guess what sound does the market make. Tube, and what a beautiful one. And look at this absolute gorgeous trade, right? And guess what? There's even more, as now, of course, start thinking in these processes, these step-by-step processes. The whole day now is a trend. Yes, you're trading away from the medium inducement, but now you got a new medium inducement after the whole day was obviously induced to the high side. So we remove this happy guy in here to see price action after a medium inducement creating a relevant break of structure. Again, this push in here created another inducement in here. So technically, yes, the inducement was this first. But again, there's no relevant break of structure. It just makes another push high, completely fine. And now this push is broken. Looks like even news or something like that, right? What a surprise, how random the news are. But this provides us with the relevant break of structure off or away from this medium inducement. So what can we do? What did we learn? Again, it's not the signature London or Frankfurt trade, but overall it's trading away from medium inducement. So what can we do after the relevant break of structure, after medium inducement, after all the liquidity is created to the upside and everyone and their sister is getting to the buy side? We wait for the relevant break of structure away from the medium inducement, marking our medium inducement mitigation, wait until price gets in there, and we're good for a reaction. Absolutely gorgeous, right? So that's how the day ends off properly. And of course, we already can identify what's going on in here as well. If you're getting more advanced, you see that they creating what? Let's test your eyes. What the price action show in here. So think for a second, right? They creating sideways liquidity like crazy already. Exactly how they did it in here. So what do you wait for? You wait for another structural inducement to get people all excited. Also induced of liquidity to the downside in here. So what can you expect if you want to trade away from the inducement? Again, you had your reaction of the medium one, but now you created liquidity internally in here. You had your inducement low. So obviously we expect a reaction out of it after structure is being induced to low side, induce low to go what? To go high, give the reaction, and it should become effortless to you to read price action at this point, as you literally can piece the puzzles, the intentions, everything together over and over again. Master the basics to become a true master yourself. Every master has this common manner. They're all absolute masters of the basics. That's why the Awakening Master Guide is so powerful. As again, it only gives you one signature trade, yeah, but it gives you all the basics you have to understand in order to actually become a master very soon. It's still the basics, but as you already can see, you already can read price action so efficiently and effective. It's absolutely crazy, and that just by doing the basics. So definitely try to master the basics, and the outcome is crazy, right? So let's take in another pair. February this time. What a surprise. It's the same thing in January. It's the same thing in February 2023. It's the same thing yet January 2021. Whatever. We had like examples all over the place. But now we have February 2023. And EJ this time. Again, it's literally the same in all pairs, isn't it? Right. So what do we have already in this beautiful price action? Not even to mention that we had a beautiful Asia range plane here with creating the liquidity, inducing Asia range high to Frankfurt open price in here, and of course tubes to the low side also with the equal lows in Asia range. Isn't that the same shit over and over again? So guess what they're doing today in here? Creating Asia range, creating 1, 2, double top in here, showing us the medium inducement. Not yet, right? Also be very careful if this is a medium inducement, yes or no. Try to think, yes, we have the inducement of these equal highs, but is this truthfully an inducement? What did we cover? We want clean inducements and not just structure being taken by one tick. This is more like an equal highs in here, right? So what is this then? Technically, if there's equal highs, what is this then? Is it a relevant breakout structure or is it a retail fake breakout structure? And they're all getting tacked in here when price action comes in, just to take them out and giving us our medium inducement of the equal highs, right? You should know that by now. That's exactly what it is. Equal highs, fake Koch in here, right? To make retailers and structured traders all excited. Also, check the timing, as this point in here is not Frankfurt Open, right? It's not London Open. It's a premature move, right? So again, we talked about it multiple times, use timing as your orientation as well, right? Especially when they're creating some shenanigans like equal highs in here and then faking a Koch, right? It's all traps they're trying to create. So wait for what timing? What's the most powerful timing we learned so far? Of course, London Open. So what's the ideal scenario after the equal highs being formed in here, after the fake Koch? Everyone gets induced to the short side already. So what can we do to get our perfect signature scenario? I hope you guessed it. Inducement high of London Open, medium inducement in our perfect time window, right? And also look at the speed they do it, right? They first just faking a little bit the reaction with one candle or two candles in here, and then finally with momentum take out the equal highs in our perfect time window, which is London Open. And here again, this candle was solid gray, solid bullish, momentum traders jumping in, sellers are stopped out. So what do we do? What should you do? You wait for what? First of all, okay, let me just maybe do this, because again, this relevant breakout structure point in here to give it away is down here technically, but as you're getting a little bit more experience at this point, you also can jump into the M1 already, right? Okay, so why not? Let's do this also, as our M5 relevant breakout structure would be all the way down here. Price comes back. So no relevant breakout structure, not even on the M1. So if you want to take this mitigation, there's no really confirmation in here. There's no imbalances. There's no relevant breakout structures. So you should be very careful. So it's better to stay away from them at the beginning. Obviously, you can take them when you're getting more experienced, as this is a perfect medium inducement play in here. But what's way better, what you should wait for at the M1 in this scenario is in here, right? So you wait until you get, again, this point leads to another push high in terms of like inside of the mitigation, right? But this, again, price point from here, pull back here into the mitigation, and now it gives this relevant break of structure in here. And also, what do we get additional to that? We have the imbalances being formed in here, right? And we still want to trade away from this medium inducement we had from London Open, right? Inducing the equal highs and also in London Open, right? Perfect. So we can mark up this perfect point of interest in here, right? As, of course, we had the imbalances, we have the relevant breakout structure, we had our medium inducement, we had the timing, we had the liquidity being created into the wrong side, we have the momentum, we have the fake equal highs built to the left as well, we have the fake breakout structure for the retailers. You stop them all out. There's no more sellers in here, right? So the only sellers are us in this scenario after the relevant breakout structure into mitigation away from this inducement. So guess what? If price gives us this very nice present, we should look like Christian Bale or Patrick Bateman in this scenario from American Psycho, right? And give us our Mona Lisa signature entry in EJ on the M1, right? So guess what? We can take it, enjoy the ride. And the only question is, should we chicken out here? Let's see what you learned already. What is this? What does it do? Where does it react from? Let's bring some light into it, but I hope you understand it by now, right? We had this perfect signature scenarios you want to trade away from. Of course, our target should be this in here. What is this? Exactly, Asia low, right? So what could this maybe be? Let's bring some light in. Smart money trap, right? What does the smart money trap do? Of course, faking a reaction when the smart money trader is getting excited, when they're getting a koch, right? So they can take entries here or even here, right? Because again, they still trade in line with the trend. Continuation traders, they're getting their koch. They still think, oh yeah, it reacted from this demand, so now there's a koch in here, so let's take the continuation. That's exactly what it's designed to do, to fake people in. But what is it really? Right? Inducement high of the structure point to go lower, and also the reaction of the SMT in here. So minimum target, of course, should be your Asia low, gives you confidence to holding this position and not chicken out in here, right? So let's see what happened. What a surprise! They getting tubed instantly right after, right? Absolutely perfect. Okay, so let's switch to the M5 to see how this day ended, as we had price action just here, inducing Asia low, right? But guess what? We still have a medium inducement target for this absolutely perfect equal high London signature setups in here. Of course, it's much better to aim for the next medium inducement target. So guess what's about to happen? Absolutely tubed. Guess what happened before that? Is exactly the same how it happened in here. And even here you see the smart money trap on M5 even clearer, right? With this demands in here, when it reacts, gives the fake koch for them to take the continuation just to get stopped out. So guess what they do in these areas, right? Again, they give the fake reaction, they give the fake koch just to smoke them out and liquidate them. We knew that this is going to happen literally the moment we saw these equal highs and the fake koch forming. London took out the inducement and obviously gave us the run and break of structure and the M1s in here. We kind of saw this coming from 10 miles away. And so should you. And the beauty about it is, once you see it, you can't unsee it. So try to rewatch it, try to really drill it into your head. This is the foundations that will build your whole trading career, which can elevate you to insane levels, even only understanding these foundations, the basics, the inducements, the creation of liquidity, the timing, Asia, Frankfurt, and London. This is literally all you need to make it in trading, to get funded, to be consistent, to get a perfect signature setup like multiple times a week. If you look at multiple pairs, that's technically all you need. And again, once you see it, you can't unsee it. That's a skill set for life. Think about that. Just literally learn something which not only works like sometimes, it literally, that's exactly how the market is designed, how it is engineered, how it's delivered, how Enigma creates price action, how the overall market in terms of liquidity and money works, how they build it up, how they build traps for retailers and smart money traders. And you discovered it. You know how to see it, how to read it, how to predict it, and how to react to it. So dig into it, practice the shit out of it. You literally have everything you need in order to absolutely smash it. Now it's up to you. Make the best out of it. Rewatch sections if needed. There's so many examples over 3 years. The latest literally being a couple of days ago. So make the best out of it. Backtest, replay mode, on the edge, even on replay mode, forward test, try it live, practice, and then of course dig into it live. Get funded. Maybe you already funded. Make the best out of it. Conquer the leaderboards. There's a lot of setups waiting for you, and you have a very, very bright future for your trading career waiting. So let's dig into it. Let's get some tubes and become an intraday legend yourself. All the best, and we catch up very, very soon.
So let's jump into a lovely obviously M5. As always, that's always where you want to start off. Asia range. Okay, so let's bring a little bit of clarity. First, what do we see? We see the equal highs. Obviously nothing to trade, but equal highs. Inducement to the high side, and this inducement here, sorry, this bit here is the smart money traders, that's like their bullish structure confirmation. So now obviously they're going to be looking to buy from these areas and these areas. Again, this is in Asia, so it's nothing that we're looking to trade, but we understand that, okay, these areas are likely going to become smart money traps. Right, following on. Again, inducement to the high side. Now we have our 1, 2, 3, third touch of the trend. Where are the stop losses? Likely here, here. Smart money traders have now had their bearish breaker structure, like so. So now they're looking at these zones and these zones. Now, if we zoom out and actually look to the left, this line will become quite important. And why is that? Well, you could easily think like, oh yeah, this is the inducement, now we're going to go higher. But once we zoom out, what do we understand? Okay, we understand we've got our 1, 2, 3, 4th touch. So now we're just faking the reaction from that. So what's likely going to happen next? Well, we know, okay, we're faking the reaction from these equal lows. We've had an overall inducement high of these equal highs. So now, very likely, we're going to come out and collect all of those stops. Okay, that makes sense. That's obviously our medium inducement of the equal lows, taken with speed. Very nice. Tricking everyone. You know, at one point this candle would have been solid black. So everyone's like, oh, that's the breakout, that's the breakout. Jumping in. And also, what did we have? Well, we reacted from this original POI, the smart money one. And now they've had, you know, another confirmation, jumping in short again. But we know, okay, we've had our overall inducement to the downside. Very significant one, medium one. So, what's likely going to happen now? Well, both zones get taken. Ideally, this would have given like another reaction here to the downside, but that's absolutely fine. Both zones get completely smoked. Okay, we expect that. Next, we're building liquidity again. 1, 2, 3. Building the equal highs so that people are selling. You've obviously got SMT. This is our overall inducement to trade away from. Now, obviously, the smart money traders are getting their change of character. The pattern traders, they've got their equal highs and the trend traders are already being taken out. They've either got SL here or SL here. Okay, next one. So when we zoom into this, as this is our original inducement, the very significant one, if you remember with all those equal lows, we get, and we refine this zone down, we get this on the M1. Okay, so now we're coming down with inducing smart money through the false break of structure or chooch or whatever you want to call it, change of character. We know that trend traders have their SLs here. These ones have already been hit. And then we know that here we have our extreme mitigation, which is from the point that caused the medium inducement. This isn't just a random structure point that just happens to work. It caused the medium inducement. It took out so many people. And we've got clear liquidity to target. So we obviously give the fake momentum. Oh, look, it's going that way. It's going that way. You know, everyone's like, oh, sells, sells, sells. Boom, smoked. Total RR 1.7. That was a nice and easy one. For this next one, let's actually stick to the M5 only. That's going to be the plan. So, first off, what do we see? Again, just looking at here, what do we see? Well, obviously we've got, you know, some liquidity here, 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 and here, and also here. So we've got our Asia range. Let's break this down a little bit more. There are our liquidity zones. So we know that we've got equal lows to the left. We've got these equal highs up here. Let's be patient. Let's see what happens. Again, same thing as previous. We've got equal lows to the left. Faking the reactions. Oh, it's going to hold, it's going to hold, it's going to hold. You know, pushing away, pushing away. What do we think is going to happen from here? The most logical thing. Boom. So we get our medium inducement of the equal lows again, dead on London Open. We have our relevant break of structure, not just a random one, but a relevant break of structure after our inducement. Next up, potential mitigation after the RBOS, right off the demand candle. Where should we target? Well, we have equal highs at Asia high, but obviously we've had overall a medium inducement. So we should expect at least a medium inducement to the high side. Consider if we just go back a little bit. Let's go back. So look, we have taken out all of these. We even faked the reaction here, and then obviously came down and took it. So we have taken so much liquidity to the downside. So Asia high isn't really a logical target. At least the first medium inducement zone would be a much more suitable target. So let's go back to that one. Okay, so that's our first one. At least here. That's what makes the most sense. Okay, now we've got our equal highs here. And look what we do. Again, come in, react away. Oh yeah, it's gonna hold, it's gonna hold. All of the resistance traders hopping in, all of the pattern traders, you know, double top. Oh yeah, it holds, it holds, it holds. Maybe even some smart money traders jumping in through that. That's our extreme. Oh yeah, it holds, it holds. So let's see. We're also bringing in trend traders. So what do we think could happen next? Well, here is our trend. Here we can see our trend traders all hopping in. We also see our built up liquidity. We can see that we're taking it out with our inducement, which is followed by, you know, the false speed and momentum. Everyone's seeing, like, so imagine you're like the double top trader, you're saying, oh my god, it's pushing away so fast, I need to get in, execute, wherever you want. So obviously on the M5, this is not the nicest because we don't have any imbalance to go along with our POI. When we drop down onto the M1, we do right here. So that becomes your zone to trade from, knowing that you still overall got higher targets. But for the sake of this video, let's just say that we stick to the M5 and we only trade the M5. Obviously reduces our RR a little bit, but that's fine. Again, same thing. We know that this is our first medium inducement point and at least this point should be taken. Again, what do? We fake the reaction, creating equal highs, bringing people into the cells to go and do what? Strike it, of course. What else can they do? And this is how they're always trapping people. So notice how they always give these, oh yeah, false reaction, boom. False reaction, boom. Oh yeah, it holds, boom. Same thing over and over again. And you know, you guys need to pay attention to this and look out for this because it's really important. Once you start identifying these false reactions, yeah, it's game over. It's game over. Alright, so let's jump into
So, welcome back to another module. In this specific one, we will be covering a couple more examples when it comes to combining all the trade criteria together. So it is the most exciting stuff, I would say, when you get to finally piece everything and build the story understanding. Now, if you're still a bit stuck with something or specific compliments, do go back first before you watch these videos, just so that you can get a clear idea of what's going on. So you probably did notice actually in the previous module that we are covering the trades. With myself, of course, I'm just going to be covering a couple of other pairs. Pairs you're probably not familiar with. You can see it on the screen, actually. It is GBP-CHF. All I'm going to say is just give it a chance if you're not already familiar with this one. It is what we like to call like a lit pair. I believe a lot of us actually, I know the educators, we do actually trade this. We love it. Before I was also someone that I had no idea it even existed. So yeah, without further ado, I will get straight into it and you'll realize why GBP-CHF is actually a lovely pair. So let's bring up the chart for GBP-CHF and you can see a gorgeous looking chart and a gorgeous purple box known as Asia range, as we like to call it. So the first question we must ask ourselves is actually, is Asia range complete? Now, what you're probably seeing on the screen may be familiar or maybe not when it comes to the lower bar of the times. So we do actually use UTC +1/2 depending on, of course, the time change. So right now it is UTC +1 in the month of January. So if you are watching this at a little bit of a later date, do ensure that this was UTC 1 at the time. It usually ranges from UTC +1, +2, or GMT, so UK time zone. So we do recommend try to stick to this and have your trading view chart settings set to these UTCs or GMT, because it can be a bit tricky to follow up when we're mentioning certain time numbers. Again, it's entirely your decision. If you'd rather convert it, go ahead. Do whatever you feel is best. We just recommend kind of stick to what we're doing just so you can actually understand. If you think it's easy to understand, then go ahead. Do whatever UTC you prefer. I know in America it's like crazy time zones, -6, -8, etc. So, or even Australia, it's like plus whatever, 12 hours. So with that being said, just to keep that note in mind that we are operating on a UTC +1 in this specific module. So Without further ado, the next question, well, firstly, is our question complete? Is Asia range complete? It is indeed. I can see that it's complete. It would be 7 a.m. I'm going to draw a gorgeous straight line. Oh my god, that is actually extremely straight. That's probably the straightest line I've ever drawn in any of my videos, so I am pretty proud of that. So that is 7 a.m. and it starts at 11 over here. So, next question. Identify the build of liquidity. So let's clear the drawings first. Where can we identify liquidity? Now, this is a question where you must obviously go back to the liquidity modules and understand what kind of liquidity are we seeing. Now, let's try to stick to this area, mainly within Asia. Try to identify the liquidity here before we start looking at the other areas possibly here. The reason being is we want to understand the first market intention of the day, hence why we should, of course, then focus on our intermediate vicinity of liquidity, should I say. So with that being said, our liquidity areas within Asia is actually right here. So you can see the formation of these double tops. I know they're not perfect. They don't have to be to the tick perfect kind of thing. The trend line liquidity over here is pretty much perfect, but we have a rough idea of what's going on with liquidity in front of our eyes, so we can possibly expect what our first market intention of the day may indeed be. So what do you think that possibly could be? Keep that note in your head before we start answering the next questions. Think about where we may go first before we then continue. Are we going bearish? Are we going bullish, etc.? So keep that one in mind. So let's answer a few more questions, and that is identify potential POI zones. So in this case, what is our POI zones? Is there POI zones? Keep in mind, this question may not even always have an answer. We may not always have POI zones. So in this case, when it comes to this area over here, there really isn't anything. You could argue this right here. I'll be honest, that is not probably the best zone to choose from when it comes to your SMT understanding that you should also have by now. Probably not the best one when it comes to situations like this, especially that it's super close to Asia range over here. Like if I try to extend that, it's super close, that you probably want to wait it out and actually wait for an inducement as opposed to a limit order, etc. I know smart money traders kind of execute just like that. No hate against anyone there, but just saying, it's better to wait. I would not consider that a POI at all. However, you could potentially think, hang on, maybe that's a POI, right? It's got imbalance, etc. It's got quite nice imbalance. If we measure up that area, it's quite below this part of Asia range anyway, so that's a horrible line. But it could be a potential POI, right? It could potentially be one. So let's just clear that up with my beautiful drawings that we always seem to have. And yes, we have a nice, gorgeous box now and present it. However, this is not complete. This is really, really key. We must answer the question of, let's assess the momentum mitigation aspect in this scenario. Now, momentum mitigation is actually super, super key. I can't recommend it enough when it comes to avoiding situations. When I say avoiding, how do I explain that? How to know what's going to happen and zones to avoid, specifically mitigation zones. How do we know this zone here is valid right now? Well, we don't really. So the aspect of the momentum mitigation would mean if price, say, taps here first, and then, of course, induces high, it's probably valid. However, if it induces high first, takes out this liquidity over here, and then aims lower, right, it may potentially break through. Maybe it gives a reaction like a smart money trap and break through. This scenario, however, only depends on targets. So we need to understand if there's still more targets below in terms of liquidity. In this case, we can potentially identify liquidity points here, over here. So I would, of course, then go with case one, meaning price will have to induce bearish first to then at least have a target high, which is this area over here. However, the other way around, when we've induced high already here, for price to come lower and actually then reverse, as you would expect when you want to take a POI over here, it probably is not going to happen. So I would cancel that one out. Now, I hope that does make sense. Do watch the momentum mitigation video. Honestly, it is actually incredible when it comes to the power of understanding and not getting confused. So that was just a brief example of what I meant there. So in this case, we can't actually decide that. It really is a matter of let's wait first to see what price is doing. A lot of trading is waiting. So in this case, we must wait. So without further ado, again, let's see what price is first market intention is of the day. Perfect. So price does induce high. It has the really nice examples of the vector candles over here. Perfect inducement. Takes out this liquidity here. In terms of this point here, I did mention, I do believe, again, it's a smart money trap. I can't draw a straight line to save my life, but that is definitely not within the range. It would have probably induced by like a minor pip or pipette and yeah, taking you out. So that's why I don't recommend just blindly taking POIs. It's always better to wait and assess the situation. So in this case, we have actually had an inducement high. So we've had our build of liquidity, the inducement high, and now the last step we look for is in fact the POI aspect. However, before that, going back to this question, let's get the pen out again. Going back to this, is this now valid based on our first market intention? Let's think about that one. Is it valid? Probably not. As you can probably see, we did mark up the ideal scenarios for this one to be valid. Price would have to come lower first before it goes, higher, like such. So in this case, definitely not. I'm not sure why I drew a tick there. I think I was just waffling away a bit. But in that scenario, this would probably not make sense and will become actually a smart money trap. However, let's wait for this reaction and try to actually identify a really nice sell entry. After that, we get a juicy reaction. Perfect reaction away from the inducement. Now, keep in mind, timing-wise, this is actually Frankfurt Open. I know the timing's not so clear. It would have to be pretty much around here for it to be 8 a.m., which is Frankfurt Open with UTC +1. So that would be Frankfurt Open and not necessarily London Open. Keep in mind, you can use both of those time windows. They both work. It just means London Open probably would mean continuation, and you may not expect your inducement again because you've already had that now in Frankfurt. So yeah, do keep that in mind. You are smarter than a clock, as Reem likes to say. But yeah, with that being said, can we identify even a mitigation at this stage? Possibly over here. You can see imbalance. Possibly. That's a possible one. But again, before that, what do we have? A relevant break of structure. So we do have a relevant break of structure. Keep in mind, we only use it when it's relevant, hence relevant break of structure. We don't otherwise like force it to happen. If it happens, great. If it doesn't, it's also great. Honestly, it really is. You don't have to use structure. It's not king. It's nothing important at all. It just, if you like that extra little confluence, you can use it. Keep in mind, us educators don't actually use it at all. So this is just that little extra key confirmation that you probably might want to use. Now, the question is there potential mitigation entry? So I did mention something, didn't I? So that was this box over here. Looking nice. There's a very small imbalance, but either way, it's a mitigation POI. I'm not sure what I'm doing there, but it's a mitigation POI off here. Right, let's ignore those drawings. They're really horrible. But either way, we have a mitigation. We have a relevant break of structure. We've had our liquidity inducement high. What more could we really ask for at this stage? It's a matter of let's just execute. What's also key to remember is when it comes to the mitigation zone in terms of range, we don't generally like taking huge ranges. In this case, it's perfect. I can tell it's not a crazy stop loss size. However, if it was probably double, we would reconsider because keep in mind your portfolio, your whole account risk management is far more important than taking a massive stop loss trade. That's the thing when it comes to lit. We have an abundance of trades every single day, and that includes the awakening aspect of what you're being taught here. Just one trade a day, or even honestly speaking, a week is more than enough when it comes to raising your portfolio. So keep that one in mind. You do have to be picky. Be picky with what makes sense and not over risking your portfolio or in terms of risk to reward. Enough waffling from there. Let's see if price reacts now. That's a pinpoint reaction to me. If you can see that nice little wick there, that's absolutely perfect. So with that being said, let's just wait and see the reaction. First target would, of course, be the low over here, as well as the trend line. So they both match up because the trend line does actually start from the low of Asia over here. So our first target is indeed the low down here. So let's see if that even gets met before we try to identify other targets. So we have our Asia range low inducement. London Open, of course, does what? It forms the continuation, as we mentioned. If Frankfurt, let's draw Frankfurt Open, induces high, the chances are London may now form continuation. So it's key to keep that one in mind. So clear drawings. Now, next question, is this POI still valid? Because we are almost approaching it. Are we going to take it? Are we going to get FOMO? Are we going to hedge positions as the smart money traders do? They take both buys and sells and blindly operate, not knowing what they're doing. Now, I know if you do that, I apologize. I'm not trying to offend you. I'm just saying I was in that situation before. So yeah, no offense there. But it's a key question in this actual scenario, and you probably are wondering the answer. Now, we did mention the momentum mitigation, the scenario, if it induces high to then come low, the chances are if there's no other high target, we're probably not going to actually mitigate here. We may get a smart money reaction, perfect, whatever, but we're not going to get FOMO. So that's really, really key to understand to not get FOMO in this situation. So with that being said, what is it? It's a smart money trap, of course. In this case, it is more so an FFS because it just actually smokes through. It doesn't even give a reaction. So that's better, should I say. Now, the next question we actually have here is there potential for price to go further, so further lower? Now, this is where we then mark up potential other targets. Ideally, yes, you can classify your low over there as your first target. Second target, of course, the smart money trap. I'm not sure why I'm drawing next, but you can close here or just below technically because it's meant to be inducing the entire POI. So the next target would be, okay, is there now a new liquidity target? Have we got more liquidity to induce? Keep in mind, smart money trap is already induced. The low is induced. So we have actually induced quite a fair amount of liquidity. So the next question is there still more in a close proximity? Keep in mind, we're not going to aim for like 4-hour lows somewhere completely further down. We are, of course, trading intraday, and we want you to capitalize the most you can on an intraday basis and not blindly aim on higher time frame stuff. If I just look at the charts right now to the left, keep in mind below this point, we really only have this. That's a nice circle, that is. So with that being said, can we identify liquidity there? Pretty much, as I mentioned, there's pretty clear liquidity. I don't think that's worth even mentioning why that's liquidity. It's pretty clear. So ideally, around here, we can target something like that. Let's try to extend that. That's not a nice drawing. I apologize. I'm not usually the best at technical drawings. So with that being said, let's see the reaction of price. And it's absolutely gorgeous. I do believe it even came below this point here, being the smart money trap. But keep in mind your minimum liquidity target would be actually at this point. If you are capitalizing those extra bit of pips, great. If not, it's also perfect. But keep in mind your risk to reward on this overall trade with your stop loss only being this big, essentially, and then capitalizing all the way down here realistically as well. It's pretty realistic. It's explained pretty well. You have liquidity, you have reason to go lower. And most importantly, you can see the most perfect inducement candles. Price has not completed the inducement at this point here. So we're not going to just randomly guess a reversal kind of thing. We need to have confluences for that. So with that being said, let's just see generally what's going on in the rest of the day and try to understand what to do. Rest of the day is pretty much liquidity. So in this case, of course, you just wait for an inducement and a mitigation to enter. So we have pretty gorgeous liquidity. You can backtest this one yourself and see what happened going into the next day and what you can expect. So I hope that does make sense on GBP CHF. It's picture perfect when it comes to the London Open inducement or the Frankfurt Open inducement, in this case, Frankfurt Open, even the mitigation in Frankfurt Open. We've had the most perfect cycle, the relevant break of structure, inducement outside of Asia, perfect liquidity targets to the downside as well to maximize potential. So let's check out another pair and another day. So in our next example, we are indeed covering GBP JPY on the 5M. As always, we do stick to the 5M for the overview, and then we go down into the 1M for the more juicy stuff like entries. So if we first bring up the chart, that would be helpful. We have got Asia range, and you know the first question you must ask yourself, is Asia range complete? I can tell you it is complete. It is 7 a.m. over here, and it is 11 p.m. over there. Of course, that's an 8-hour window. Now, again, convert that in your time zone. Ideally, stick to the UTC +1 or GMT time zone, so on the European side. With that being said, we've got Asia range complete. Now, the question is liquidity. Where's the liquidity? Now, before I continue with liquidity, I do want to just basically tell you how you can't have a bias. We should not have a bias when it comes to marking up liquidity. You're going to have sell side liquidity, you're going to have buy side liquidity. That's just a general example. What you must do though is identify how strong are both liquidity points. So is sell side more stronger? Let's just mark it up as like whatever, 5 points. And there's like 2 points here, meaning it's not as strong as our sell side. The chances are, depending on where price is trading, like in this example here, price is quite literally trading in that zone, closer to the Asia range outside of the high. So the chances are, if there is a higher level of liquidity there and you've identified valid liquidity, you may induce high to come lower and take out the other bits of liquidity. So it's really key to understand where price is currently trading and if it's near your targets. And that way you have to then put the pieces together of, well, now we've hit target. Are we going to reverse? Is there a reason to reverse? Or are we going to continue, etc.? So keep that one in mind. Just clear the drawings for a nice clean screen before we add our liquidity. So you can see the liquidity here is basically these double tops or equal highs, whatever you want to call it. Again, this is drawn briefly. Ideally, even this one over here is also your liquidity, but I'm just marking up the main elements that you can likely see. Again, here we have this nice trend line formation building. So the chances are, as you can see, even where we are trading over here, we may actually induce high above this liquidity point and above our Asia high range to then reverse, take out this liquidity point as well as the low over here. And what's interesting in this specific scenario is the fact of this imbalance. Now, just keep that one in your head before we continue at the right stage of what that could potentially be. So, is there any potential POI zones? Maybe. So what do you think? Keep that one in mind. Do you think that's a POI or do you not think it's a POI? I'll give you a couple of seconds to think about that one. Keep in mind everything you've been taught when it comes to the retail traps, liquidity, etc. So with that being said, maybe not. It's a smart money trap. It's actually not a POI. It's within the Asia range session. The chances are it's not going to hold. Don't get me wrong, sometimes it does hold, but again, if it does hold, that's probably 1 out of 10 times, and the 9 out of 10 times it does not hold. So with our lit understanding, we don't take POIs within Asia, and we in fact disregard them as smart money traps. So you may even get like a reaction from it. It might scare you a bit, might make you close your cells if you have cells up here, but it's key to keep your bias and understanding well set. Just make sure your risk management is on point. Have a break even, of course. If you expect a pullback from the smart money trap, then the chances are it'll smoke through. Now that is the smart money trap understanding. It can, of course, just smoke through instantly and not even give any smart money trader a chance. But let's wait and see, I guess. So again, removing those gorgeous drawings I have, let's actually find out what our first market intention of the day is. So if we speed up a little bit of price action, we can see, okay, price has actually induced a little bit low. It's taken out parts of this liquidity over there. What does that mean? Potentially, if price continues lower, we may aim to find buys. Again, it depends on London Open or Frankfurt Open of what price is doing. Ideally, we want to see an inducement in those time windows and then a mitigation. So in this case, what I can actually still see is price is building liquidity there, right? So it's built more liquidity to the sell side. So this likely means it's a fake move over here because we've got so many sellers over here, and over here that have still held. There's no inducement of any of these 3 points just yet. So this only actually builds our picture much, much stronger when it comes to the fact we've got a good liquidity target, and the chances are we can expect an inducement high. But in this case, we're going to wait. Again, there is nothing here for us presenting, so we must be patient. And that's super, super key in trading, as you probably already know. So just building that liquidity over there. Let's see what price does now. Perfect. So what that means is around this point, we had our Frankfurt Open inducement high, meaning prices forming the inducement high. And of course, what we aim for is trade away from the inducement. Frankfurt gave that perfect example. Not really a clear mitigation. Let's just clear that one up. Not the clearest. It probably just missed ever so slightly here to trade into the inducement of where London Open likely will give us a reversal. Why is that? Because liquidity is all taken now. And that's a pretty nice amount of liquidity to the high side. So we can likely reverse, take out the smart money liquidity over here, the rest of this little trend line, the low, and of course, that's pretty much what you can expect, not much more. Keep the story simple and you will actually understand it very, very well. So the London Open inducement, perfect. We're not seeing anything just yet with this reaction, so we do need to wait for a reaction off that. Sometimes price does chop around and it may start inducing higher again. However, within lit, you must wait for the reaction away. That's the only time you can really understand if the inducement is complete and not guess things. So that being said, let's wait for the reaction. Perfect. Within London Open still, we do get a perfect reaction to the downside. Now, the main question we have here is for entries. Do we have an entry? Is there a mitigation zone? Now, in my opinion, or the way I see things, is this would be my mitigation. It's a little bit hard to zoom in, but I take that last candle there. So that grey candle, the last bullish candle before price went bearish. So these 4 black candles, is that 4? Yes, 4 black candles. I take the one before that, usually the last bullish candle, and take the entire candle, including the wick. So that's how I mark up POIs. You can mark up imbalances. Keep in mind, in this case, there's not really an imbalance. I mean, if you really want to be whatever, you've got probably the smallest imbalance there. But again, take a mitigation, not an imbalance always. So in this case, it's very clear there is a mitigation. There's always going to be some sort of mitigation. However, we don't actually have a relevant break of structure. So in this case, we are a little bit limited when it comes to our confluences. So what that probably means is, okay, we've got one confluence down our mitigation zone. It's not amazing, but it makes sense. It's the only mitigation we have left of that POI. It doesn't have imbalance. Keep in mind, it doesn't have to have an imbalance. This is how I always look at POIs, regardless of imbalances. I can, of course, backtest that one a little bit more with your understanding. Just clear that up. So the question is, can we actually still enter? Of course we can. So let's see the reaction. Perfect. It reacts perfectly to the wick of this point over here. So we can enter that trade. And of course, target much lower, expect the trap to be taken out. And of course, these other points. What would that be? That will also be a smart money trap. So that's where it's important to put the momentum mitigation. I always mention that with understanding what happens when kind of thing. This is not going to be valid anymore. We've already had our inducement, which is the most important thing to trade away from. If we didn't induce high first and this mitigation came a little lower, we can potentially trade into the inducement to then take the reversal. Now that is going a little bit more in depth, so Just keep that tip in mind in general. Now let's wait for a reaction. Perfect. Definitely getting a smart money trap because we are actually reacting from there. Lots of smart money traders will take that. Keep in mind, most people don't actually have a template for Asia range. So without this colorful box here, it just looks like a normal POI. So this is why it's super key. When you have your template, you're going to see so much clarity when it comes to what you should not take just with a blink of an eye. It's not even actually hard at that point. Without it, it's a little bit tricky. Timing is also super, super key. Now, let's wait for our smart money trap to end. And what do we get? We get a perfect reaction away from our London Open inducement, and then our mitigation is perfect for the entry itself. Now, this is really, really nice. So let's actually see the risk to reward we can get on this trade. We have a perfect 8-1. Now, that's pretty nice, I have to say, for your first trade of the day within London Open. An 8-1 is pretty nice. And that's what we achieve in lit every single day on the pairs. Again, going into the adventure is a little bit more advanced. You quite literally achieve intraday mastery with that. Here in the Awakening, you are building a solid foundation with this rule set you have. Now, keep an eye out for the next modules, and that will be on our templates or checklists, and that will give you a really clear guide of what you should be aiming for, looking for, and achieving a solid rule set. So hope that was a juicy session. Now backtest these, identify them yourself, and eventually trade them.
Completing the Awakening. As always, we have a nice little surprise for you all. Rima and Sakbar have done some as well, so these are the additional videos for completing the Awakening. So let's just get into it. As always, we've got the M5, so let's dig into what we see. What is the first thing that we always start with our Awakening checklist? Of course, it is, has Asia ended? And I can tell you, yes, Asia has ended. Okay, perfect. So, just gonna give this away. On this day, we do not have a medium inducement for the day, but we do have a medium inducement that we are trading away from the prior day. So we'll go into that a little bit. But obviously, what do we see here? Well, obviously, we have to mark up our first liquidity points of the day, which was, of course, Asia high and Asia low. But other than that, we don't have too much going on. So let's jump into the overall picture on the M15. Now, what we can see the previous day is first we had our equal highs that they induced to the high side to do what? Go lower. And then we had all of these equal lows induced to go higher. Makes sense? And then obviously we expect this to get taken out, but what do we do that's even nicer? We actually hold it. And you see the way we push away, this brings in all the sellers. Everyone's changing their mind. Oh yeah, it sells, it sells. Retail traders, they see the equal highs. And then once we break out of Asia to the downside, they're in their sells. But we know we've got our medium inducement low. We know exactly what should happen. Also think about it from a smart money perspective. Higher high, lower low. Lots of extreme limits there for the sells. They're obviously entering their position, likely TPing at a new low. So what can we expect from here? Well, I think it should be pretty clear. But for this one, yes, we've identified our potential medium inducement zones. Obviously for this, there wasn't too much as the medium inducement happened the previous day. And we've identified our POI, this one, directly below Asia. Perfect. So let's jump into the next bit. Obviously, pre-London Open, so we induce Asia low to the downside. And then pre-London Open, we create another set of equal lows right above our POI. So this should be ringing some bells. We should be thinking about certain things here. Obviously not going to give it away straight away, but yes. Where are they building the liquidity? They're building it to the downside. We know that overall we have our targets higher, but for the moment they're building the liquidity to the downside right above this POI. And obviously they induced out of Asia range. So we have after we have the overall inducement of the equal lows into our POI away from the medium inducement, obviously the medium inducement was over there, we then have our relevant break of structure on the M5, and we know that overall we have some inkling of our target to the top side. So we did not have a medium inducement, but we did have an RBOS away from our inducement for the day. So this should begin to sort of come together. We can understand, okay, here's our POI after our relevant break of structure, pulls back, inducement in London Open, pulls back into mitigation. So yes, our inducement POI has imbalance. Perfect. That's our last check. So what is our next one? Do we have a valid target in mind? So let's have a look. But first, what do we do? Well, of course, it's not just a game of, oh, we've had our inducement, now we rock it. What we need is at every step, we need to build liquidity. So first, we fake the equal highs, get the strong push away. People are getting in. They're getting excited because you've got to remember overall, we have our equal highs up here that people are trying to trade away from. And you've got to remember, people who trade the Asia range breakout, this is their stop loss. This is where it is, maybe a little bit higher above, but somewhere in that region. So faking the reaction away, we also give the equal high confluence, and now with this push away, other people may be jumping into sells. So we have to keep that in mind. But we know, okay, we're trading away from our medium inducement to the left. We've obviously mitigated the POI away from that, built liquidity above, given our relevant break of structure into mitigation, and now we expect to go. So let's have a look at what happens. So obviously for target, well, like we spoke about, so many people selling from here. You've got your smart money traders, probably M5, M1 extreme. They've been tagged in. They're thinking that they're running straight to profit. Equal highs, they're getting in. Resistance, they're getting in. Everyone's getting in. So why does this mean that this should be our most logical target? Well, if we know that we've had a medium inducement to the downside, we're now trading away from that. We know that we want to target where people's stop losses are, and obviously people's stop losses are going to be above here. So this makes the most logical target. So how many things do we have in total? 1, 2, 3, 4, 5, 6, 7, 8. So 8 out of 10, not bad. We can look to trade it. So obviously just using the M5, we have something like this, right? Where you've got your inducement in London Open, followed by your relevant break of structure, back down into mitigation, into your overall target of the equal highs. But we are not limited to the M5. So let us jump down into the M1. Okay, so obviously this bit of price action right here is what we're looking at on the M1, just obviously more candles. So it's exactly the same on the M1. After you come into your POI, you get your relevant break of structure, which happens after your inducement. You're trading away from your medium inducement overall. And then this would be your first entry. Now, depending on how aggressive you want to be, you either put your SL here or SL here. Personally, I'd recommend if it's your first win of the day, or you haven't had your first win of the day yet, you choose to stay in the trade and you put your SL here. Then after that, you get the beautiful re-entry, which comes obviously after your relevant break of structure into mitigation. This is obviously the better entry, but you do have to keep in mind that this one here, the one with this second one, will not happen as often. Often what you'll find is you'll get something like this. It'll come in, it'll go, and if it does pull back, it normally will not give this second mitigation. But if you do get that, then great. So let's have a look at what these would be. So for the M1, it's this first one is 1 to 11, and the second one is 1 to 13. But obviously, depending on how you trade, maybe you take both of these, maybe you only take one, maybe you take neither and you just take it off the M5. At the end of the day, it doesn't really matter too much. What I'd recommend is that you do what you're comfortable with and you do what works for you. And to know what that is, you have to test it out. There's going to be a lot of work required after the awakening. It's not going to click straight away. You're going to need to put in a lot of time. And yeah, just to be like completely honest with you guys, obviously we're in an industry where only, I think it's 5% of people make it, probably even less. That's just the numbers they give you, probably even less. So it should go without saying that an immense amount of work is required, even if you do have an edge over other people, because then you've got to take into account psychology. You know, once you get to this point where you're exchanging money for money, you're exchanging money and time for money. If you go work a job, you're guaranteed to get paid whatever that amount is. In trading, if you put in the time, eventually you will get to that point, but you're not guaranteed to get to that point. You need to put in the time and you need to put in the effort, and this is obviously no different. But that's me done for the awakening. I hope everyone has enjoyed it. I hope you've taken good things away. I know that it will change your chart vision, and I can promise you that if you do put in the work, you will get good things from it.
Hello! What I will show you today is in TradingView. So jump into your TradingView account, go into Indicator, Invite Only Scripts, and there you will find the Lit Awakening template. Open it. There you go. There is the beautiful template. What do you have in this template? You have for sure your lit timing for Asia and also for London, and you have your awakening check lit. Perfect. So what else can you do with that? For sure, you can switch to every possible time frame, and it's switching also to the time frame, marking everything perfect out. And when you go over 1 hour, like the 4-hour chart, it will disappear because yeah, we don't need it in the 4-hour chart. You won't see the London timing, and you barely will see the Asia range. But now let's go back in here. What can you change? Go into settings, and there you see, okay, maybe you don't need the checklet for you now. Turn it off. Checklet is away. Maybe you need the checklet, but you don't need the timing. Don't know why, but maybe. The same for, yeah, when it should be hide. So you also can change that when you say, okay, I don't want to see it in the 30 minutes or in the, I don't want to see it from 2 hours. Yeah, then change that to 2 hours and it will disappear when you go over 2 hours. What else do you have? You have for sure show Asia and show London. So give Asia away or give London away if you don't need one of those. You also can change your color and can change the color of the text and everything inside the checklet. What else can you do? You can adjust everything like text size, alignment, and also for sure the background and the border of it. You can say, okay, I don't want to have it on the top right. I want to have it on the left bottom. So I go to bottom left and boom, there you go. It's on the bottom left. And now the fun begins. You go into your chart and where are we right now? We say we are already close to London. So I know, okay, Asia is already happened. I go in here. Asia session is done. What else do I have? Have you identified potential medium inducements? Yeah, sure, we have. So make your medium inducement and your POI and liquidity and induce Asia range so you can really enjoy your trading day. You don't have to memorize everything, you have everything in this list and can check it day by day. Start again with the next day. Okay, we go back to reset. There you go. One of it again at the bottom, so I go again at the bottom left. Boom, fresh day, fresh checklet. That's it. Pretty simple, pretty easy. And how you can get that, also pretty simple and pretty easy. Please write Redbeard at the DM for the invite to the TradingView indicator and he will give you access to it.
And let's take a look at the checklet, the juicy checklet, and how we can utilize it properly. And again, we're doing some exotic pair, right, to switch things up a little bit. We're at the January 20th on a Friday at US 30 this time, right? So we can use our signature checklet you will receive or already have received. And we show you exactly how to use it properly. Again, it's based for the London signature trade, right? So of course we have to wait until Asia range is done, right? So we already see has Asia range ended, and we already see maybe we have to wait a few more minutes. Boom, there we go. We see, okay, Asia range has ended. What do you do? Again, you just double click in here and just say, boom, Asia session done, right? Next thing in line would be have identified potential medium inducement zones. We have not we did not do that yet, right? So let's put a line in here and a line in here to find out, obviously, if we have any medium inducement zones yet. We have a upper one and a lower one for medium liquidity, right? This is obviously previous days structure point, and this is previous days low. So the most significant medium inducement zone, of course, would be down here, as it's literally from the last day or the previous day, the yesterday's low, right? So as for now, though, we're just having Asia range, and we have to skip this as we, technically, or not skip that, check that, right? Medium inducement zones. Yes, we have identified those zones, have identified potential points of interest. Okay, so now it becomes interesting because, again, if we go to the downside, again, we don't really want to take a mitigation of yesterday's low orders, right? This is already mitigated, this is already mitigated, and this is just yesterday's low. So there's no potential point of interest to the downside. So if this thing induces down, then we don't want to trade into it until it's actually taken it out. And then we can trade the medium inducement away from that, right? As this, again, if you're already building liquidity here, if it taps high, it potentially can tap into areas in here to then induce low and then take it out, okay? So yeah, just having that in mind, we can, again, the only imbalance we have is in here. right? Everything is properly mitigated, properly delivered, right? So the only potential mitigation zone we can have are these areas, right? So again, there's not really much going on. So if you want, technically you just take again the last imbalance in here and then take supply demand areas in here and extend out for potential point of interest for, again, the London signature trade if it goes. If they do low, again, we don't really want to have any mitigation zones in here as we expect the medium inducement and then maybe go higher, right? So if that's being said, yes, we have a zone of imbalances here right above, right? So if the news high, that could be definitely a scenario. So let's see. Point of interest, done. Next thing would be have you identified in which direction they are creating liquidity? So let's look. Right, so what are they doing already? You already can see, okay, now technically look at that. 1, 2, 3, 4 touches to the zone. And again, what is it for retailers? They're seeing a huge zone of resistance, which the market never can go above, right? So of course, they're currently creating sells high liquidity, right? Of course, because people trying to sell it from here. And if they get a reaction, obviously they're jumping in the cells, right? So what a surprise. So they're getting the reaction here. Same thing here though, right? So what they're doing here, they're building also these zones of liquidity down here with the equal lows, right? So they do it for both scenarios, but what the more significant, obviously, are the whole Asia range building this massive equal highs, signalizing, oh no, that's most likely not gonna price can't go higher than that. But on the other side, again, we have this huge down run and followed by this big up runs, right? Again, reaction, mitigation, reaction, mitigation. Now again, they faking the continuation also, again, upside movement away from this point in here, right? Slowly but surely. That's what they're showing, right? So again, if they induce high with speed, again, this all the breakout traders getting induced long, right? And of course, trading still in line with this. You can call it little trend, whatever you want, right? But again, for breakout traders, that is more like for the high side. And of course, also trading away from here. If I do it for the downside, of course, then yes, here are definitely sellers involved, right? And if they break the zone, yeah, they definitely have the reasons to go short as well. And this is like the most significant reason to trade maybe into the inducement. You learned that already. You can trade into the inducement as well, which is very, very effective as well. So let's see and wait what they do, right? So first, again, they're coming back again to faking this equal highs. And boom, what a surprise, reacting from it, right? And then shoop, take out this little equal lows in here just by a speckle, so nothing too fancy, right? But at least they just took it out by a little bit, right? So if you just wait until more, right? So okay, this could act as your baby mini inducement, but of course for the long run, this is more like the equal lows for later on for sure, right? So again, you should not be fussed about it too much, but this could make sense in terms of the overall cycle they're building. Like again, they're showing the equal lows, they created the equal highs. So again, they're just faking false support, right? And if market now crashes to the upside, it has two significant reasons they're doing. First of all, they're breaking out of this huge equal highs, buyers getting involved, right? And also these people who think, oh, this is massive support, still trading in line with this little trend they're forming in here, they're also getting involved, right? So sellers getting stopped out, buyers getting in, all the stuff Enigma loves to do, right? So we can be obviously smarter than that and be, for example, okay, now what they're doing, they're just mitigating this zone. Again, I'm just showing you, that's not something you should do for now. You should go with the checklet, right? But technically, again, you could trade now or expect the inducement into the liquidity and then taking out these equal lows out after. So again, we can definitely benefit from liquidity buildups, even though yes, it's reached a liquidity, yes, the buyers probably gonna jumping in, but again, they have to make it work sometimes. That's why we can utilize this understanding as well. So if they tap in here, again, we could go in as well, expecting the inducement into the point of interest, creating the London signature scenario, and then maybe go for the overall liquidity down there. But it's all fractal. Again, try to really think into these cycles and into these overall step by steps they do. Building liquidity high, building liquidity low, taking out these areas a little bit, again, giving the support resistance traders in here, the Koch, whatever, like the whatever, you know, the stuff, the break of structure stuff, right? To signalizing, yeah, that should go lower. The market can't go high in here. But on the other side, forming the equal lows and obviously maybe preparing to take out all this liquidity just faked creating, right? And then again, fulfilling the bigger picture with the cells in here. So let's see what they did right after, right? So also if we check the timing, what's the timing things should happen? You know already, German time, Frankfurt open. When would be our entry in here, for example? Frankfurt open to the absolute minute, right? Again, Frankfurt opens, liquidity enters. They say, thank you, Asia range, for creating these fancy resistance zones in here, for also faking the little break of structure in here to induce people short, but also give me a nice target of liquidity and a little build of liquidity, creating of liquidity right before Frankfurt session as well. So when Frankfurt kicks in, guess what they're gonna do, right? Guess what they're gonna do? Boom, first, again, giving one more time the reaction of these equals, right? And then taking them out and say, thank you very much for all you guys liquidity, right? Boom, 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 snatching higher. Again, at this point, you technically would be already good to get out of your buys. Again, as this is done, look at the momentum, look at the speed they're doing it right after they opened the session. They took the liquidity. All these buyers are very happy right now. Right, again, they think this is going to take it out this point. And again, it has to be continuation. Look at that huge support, crazy momentum to the upside. Yeah, it's a trap. It's our London signature trade, right? So that's why we're waiting for the big boys. We're waiting for London Open to do exactly what Frankfurt just did to Asia. Say thank you for creating the liquidity and then move away from that, taking all the liquidity for their benefit, right? So let's see. First of all, we marked up this potential point of interest as well, right? So let's see what they did in here. Okay. So right in these scenarios, right? Okay, they stayed short of it. Perfectly fine, right? So we are still okay. Maybe one more candle. Again, London is right around the corner, right? So we're just setting our TP right here and wait for London what they do. Boom. Just hit it to the absolute speckle, right? So you going out with this, you going out with how it work here. And this technically, again, if you place limit orders, and this scenario is not too nice, usually you have like a nicer point of view, proper, more imbalances, right? But again, this scenario just taking these demand areas or supply areas in this scenario, right? Again, it's always the same anyways, right? So don't get confused about supply demand. It's all the same shit, right? Again, and then obviously you understand, okay, huge momentum came in. Everyone and their sister is buying this scenarios, breaker traders. Asia is going to induce. So now we can go to the check lit again and say, boom, we identified in which direction they're creating liquidity right now. And look at it. Couldn't be more obvious. Everyone is buying, huge momentum, right? They're all jumping on a bandwagon. Breakout. Frankfurt brings in the speed, right? And obviously everyone is jumping in. Have they induced Asia range? Yes, they did. Also, perfect. Had we have a medium inducement? No. But will we get that in this scenario? Most likely not. As again, the London Cup or the London overall signature trade is just screaming probably done. As we had our huge liquidity grab, our breakout out of Asia. Timing is absolutely perfect. We have our mitigation to the left, and we have a proper liquidity target down here, and also these little areas for first targets, right? So do you have a minimum inducement? No. So the next thing we're waiting for is relevant break of structure for the proper London signature trade, right? For those, you should not take those trades for the beginning. Always, the more and more you practice, you will notice when you can trade into the inducement, but again, you want to trade away from the inducement. So it's always better to wait. Again, use the checklist, wait for the inducement, wait until the liquidity grab is done. Maybe you have a potential point of interest, right? And then you should wait for the relevant break of structure. In these scenarios, you could have the aggressive one like here, or obviously the better one all the way down here, right? So that's the two relevant break of structure points. Again, relevant, not like how retailers do the break of structure things. No, we wait for the inducement and then we mark a relevant break of structure. And until this is not fulfilled, we will not do anything. So we just wait. London, boom, comes in, also gives you the fancy indication for it, also gives you the time window where the perfect entry scenario should be in this gray box in here, right? So London comes in, says, thank you, Frankfurt, for creating so much liquidity. Let me snatch it away, right? So we're waiting for what? Obviously, we have our relevant break of structure ready with the London candle, right? So we can technically do what? Marking our extreme point of interest. We want to check also relevant break of structure. Point of interest with imbalance, definitely, right? So let's see what they did. Okay, they just snatch away without us. Okay, not a problem. So this is probably done. We will not cry too much about it, right? It's completely fine. Let's wait and see. Okay, now they give another relevant break of structure in here. Oh. Right, so we just say here, perfect. We already checked it anyways. Relevant break of structure away from the inducement, perfect. Maybe now, as we have a second relevant break of structure, does your inducement POI have also an imbalance? We had the extreme one, but look at that. Look at these huge imbalance zones in here. So guess what? We can definitely mark it up in here as we had another relevant break of structure, turning away from the inducement, still perfectly in our London time window. So let's see. Okay, they still continuing. And boom. Absolutely gorgeous. So guess what? You have to jump in. Stop goes right above here, right? Absolutely perfect signature scenarios for London. Frankfurt play is completed. Also the mitigation to the left, relevant break of structure, filling the imbalances into the point of interest, into the mitigation in perfect London time window for the London signature trade. The last thing we have to do you have a valid target in mind? These areas would look definitely very good. Again, minimum target should be Asia low in here. But if we're trading properly, we can aim for yesterday's lows as well. So do you have a target in mind? Absolutely, check it. So we have almost all steps fulfilled in here. So let's see how it played out. And look at this gorgeous reaction in here, right? Giving us some nice, perfect scenarios. So we either can target here, but as price action is just smashing downwards, right? We could say, okay, close enough as we had our Asia low inducement, right? Price can definitely pull back, can give us some sweaty hands again. So you have two options here. You can partial out already. Let's say you partial out and hold the rest until the proper target, or you close it fully. For argument's sake, we can say, okay, let's go full force, full send. Again, the entry is not the best. If this is the extreme entry we had in here, then 100% you could hold everything until down here. But as this entry is just very in the range, kind of, again, there's chances your price can pull back. So yeah, you should definitely partial in areas like that as well. But the proper target is down here. So let's just see what price action did, as we just, again, need a medium inducement at some point as well, and everything just screams that it could be valid for these lower ones. In these scenarios, again, you have normal order flow scenarios, right? So you can also trade, but again, just remember this, like in the middle of the range trades. So if you take them, again, you should aim only for the next proper target, as again, they can pull back, whatever, snatch your break even and shit like that. You don't want that, right? So for argument's sake, if you take those trades in here, right, you should only target the next zones, because the entry is too low in the range. We don't want that really, right? So in these scenarios, I just don't know how to, I never use that stuff. So I don't know how to close this cell in here, because I think if I click here, it closes both of the trades. So I have no idea. Oh, I cannot do it like that. Let me just see. What is that? Oh shit. Oh no. What the fuck did I do here? Oh no. Okay, that's always the no no buys in here. I think I fucked it up here. Right, so you get what I'm trying to do here, right? So obviously we want to close this cells in here. Best case, we're still holding this cell. We're definitely not buying in these scenarios here, right? But you get my point. What I tried to do, whatever. It's the first time I'm using that new feature, whatever. So okay, so let's see. Obviously, okay, this price point is fulfilled, perfectly fine, right? So again, we still can wait for our proper target, and let's see what they did in these areas. Okay, we already can see they just building sideways liquidity in these scenarios, and now slowly going downwards. Again, best case for them is of course when they fake these reactions in here, what they already do, right? Again, they're very good at doing this stuff. They have to do it anyways. Again, they want to induce retailers and smart money traders all the time. So guess what? If price taps in areas like that, channeling downwards into it, again, creating liquidity downwards. Again, if you look at this day now, everyone and their sister is selling, right? The whole day, technically starting from London, is one big downtrend, right? So again, the moment they're tapping into a POI to the left, or supply demand areas, right? And of course, at some point, they want to snatch these traders out to selling, right? So they can sell here, they can sell here. So of course, they want to induce high to go low, right? Again, and then maybe taking out the medium liquidity. Again, they don't usually just fall down the cliff and take out all the liquidity points. No, they react, they build liquidity, they react out of it, then they do some purpose to the left to create even more liquidity, then take them out, then create liquidity, show liquidity, then take them out, then build it up again, then take it out again, then move away. It's always the same, right? So keep that in mind. At some point, they have to induce high to go lower. For example, how they did it, baby, like in here. They're creating the 1, 2, 3 equal highs, take them out to go lower, push price lower, but then push it to the left, right? And if they want to take out the medium one, right, it's even better if they induce high one more time, again, creating the false illusion the price is reversing, creating all these break of structures and all these reversal signals for retailers to then just snatch them out and fulfill the overall purposes, right? So let's see, again, technically, if you just wanted, just understanding this, again, you have your demand zone in here, right? Again, you have your false liquidity being created in here with the channeling, right? Again, you expect inducement high before they're going lower to taking out the medium liquidity. So if you're getting more experienced, yeah, potentially you can open a trade in here, right? And then aim for minimum the next liquidity zones, which would be either this one or like technically the better one here, right? So this is both scenarios you can do. Let's just see. Okay, right. So again, these scenarios, just close it off because again, the overall direction is still to take out the medium one, so you can take it out in here, right? So let's see and wait. Okay, they take even out this one, even better. So that's even perfectly nicer when they do that, right? And then same thing as always. this in here is a smart money trap. If it is a smart money trap, same thing with the imbalances. Best scenario, they give a reaction and obviously fake a Koch in here and then take out the medium liquidity, right? So it's all possible. You can technically trade the reaction of it. But again, the better play, again, now it's super nice. As again, they're faking the Kochs in here and here, right? All just to prepare liquidity for the downside. Opala. And and that just tubed downwards there, right? So again, now we finally have the last check mark in here as well. Had a medium inducement, boom. So guess what? We can do trading away from the medium inducement, right? For example, if they pull back even more, let's say they give us a nicer re-entry in here, right? Boom. Guess what? We're getting into the buys away from the medium inducement, and they tried very, very hard building that up. So that thing could literally shoot. Again, think about it. Look what they did. Frankfurt builds the plays, faking the buy scenarios. London builds the whole sell trend in here. They're faking a Koch once, building liquidity, right, into mitigation zone in here. Faking the Koch twice, faking the smart money trap, faking another Koch in here, right, and then boom, snatching all the buyers out of it, bringing huge sellers now. Again, they see all this short trend for the day. They're seeing now huge, major, whatever break of structural low side coming from this huge sell trend in here. And that's, again, this is also an indication why price action probably is going to reverse big time, as we had like the last 2 days just falling off a cliff kind of. Right. And now we finally have a medium inducement after they tried everything in their power to stop all the buyers out like 5 times in a row. So this is a very, very nice buy zone. What do we have for other high medium inducement? A zone in here, right in here. Right. So let's see. Right. Again, this technically would be the relevant break of structure, not the retailer way. No, the relevant break of structure. Right, so let's see. Going higher, higher, higher. Absolutely gorgeous. Right, so again, leaving him all little imbalances in here as well. Right, so if you want, of course, order flow potential in here. Right, so okay, the target is already done. Right, so boom, out of it. What an amazing tube in here. Right, so technically, that's how you can do it. And again, even wait maybe when they come back into order flow entries. Again, of course, they're gonna pull back out of a zone after they even snacked out this. And look at this, how beautiful that is. So not only snacked the medium inducement, but guess what? In here, look, they just snatch it a little bit. But what is this again? Yes, they snatch it. Breaker traders getting absolutely smoked here already. But guess what? This is also the fake reaction of now these equal highs as well, right? First of all, breaker traders getting smoked, right? And then, of course, they have to create liquidity sideways, tubing downward, right, into the order flow. So if you really wanted to, here's another trade trading into the liquidity again, right? Let's see. Okay, and let's go. Boom. That's how you do it, and that's technically how the day ended off as well. Technically can wait all the way until Asia, until the next day started, and that's, there you go. So you close as well, and that's technically how you can do it on a daily basis. You just have to identify the liquidity, see the intentions they're doing, where they're faking out the rest of the world, the retailers and smart money traders. What's the next logical zones? Expect some fake Kochs, use the checklet, and yeah, that's how you technically do it.
Okay, so we're gonna jump into the awakening checklist. So we have 1, 2, 3, 4, 5, 6, 7, 8, 9 little things that you can check off to make sure that you're, in our lit signature trade. So let's start at the beginning. First question is, has Asia ended? And yes, I can tell you this is the end of the Asia box. Okay, perfect. What's the next question? Have you identified potential medium inducement zones? Okay, let's have a look. Well, this is our Asia. I'm not sure if you can make that out, but as you can see, this is actually this right here. So let's look to the left and let's identify our medium inducement zones. Well, as we can see, we've got 1, 2, 3, 4 taps of this quadruple bottom, these equal lows. So that is one zone. If we take this out, that would be a medium inducement. And then next, again, all of this is liquidity, all of this. But of course, we have overall our equal highs up here. So these are the main ones that we want to be focusing on. Perfect. So for the next bit, yes, we have found our medium inducement zones. Now, let's have a look at POIs. Well, obviously, we're not going to want to identify any POIs within here because they're just going to be smart money traps. They lie on liquidity. That's nothing that we want to take. Same to the upside. Don't really want to be looking at like a POI like this. You've got all of this liquidity, all of this, all of this. So not really. But above here, we have this potential POI right here. So potential POIs have been found. Have you identified in which direction they are creating liquidity? Okay, so what does this mean? Well, let's have a look. Coming into Asia, what has happened? Well, we've reacted here. What was this? These were those huge equal lows to the left, right here. So this is that reaction. These were those. So currently, what are we doing? We're reacting off the equal lows. We're bringing in buyers. So we're reacting off the liquidity to the downside. So yes, we can check that one off. They've created liquidity to the downside. Perfect. Right. Next one. Obviously, this was our Asia range, and then this right here was our huge equal lows to the left. Huge. So we can say for these ones, yes, we've had a lovely Asia range inducement and our medium inducement. What timing does it happen? This is Frankfurt. So perfect. We can click both of those. Sorry, we can check both of those. Boom, boom. Next, we don't want to be just taking random BOSs. So we've just got oh yeah. There's nothing has happened to the left, and we're just like, oh yeah, this is a BOS, and now we trade it. That's not how we want to do it. How we want to be doing it is we want to first identify our inducement, and then when we have our inducement, then we can look for break of structure into mitigation to trade away. So let's have a look. Yes, this is our BOS after our medium inducement right here. And then here is a really good example of something that you don't want to look at. So this is just our random change of character, stroke BOS, whatever you want to call it. We know that we've got liquidity right here, all these equal highs. So is this a mitigation that you really want to be looking at? Probably not, right? But we'll keep it there. We'll see what happens with it. So yes, we've had our relevant break of structure away from our inducement. Let's have a little look as to what is next. So does your inducement POI also have an imbalance? So first off, let's answer this question about the change of character. This mitigation right here, obviously we do not want to be taking this. Liquidity zone, equal highs, everyone's going to be selling from here. You've got your double top traders getting into sells with this push. You know, maybe the smart money traders who don't know about liquidity are getting in. They see their change of character, they're trying to jump in here, all of that sort of stuff. Where are they likely going to be targeting? A new low. But we know that this low right here is our medium inducement. So we know very likely that we actually want to be trading from this. Because what has this done? Well, we've induced the huge equal lows to the left. We've induced Asia low. We've done it in our timing, Frankfurt. And now we have liquidity here. And if you remember, we have that huge liquidity all the way over here. So we're currently something like this. And this is the POI that we're looking at down here. Okay, this is the overall target. And then the equal highs that we built right here, this would be your minimum target. Sorry, that's really bad. This would be your minimum target. So depends on how comfortable you are holding. So maybe at the beginning, you're not too comfortable. You just want to get in and out. That's where you target something like that. But if you're more comfortable, or of course you can partial here and then hold the other 50% up to the overall equal highs. Okay. So everything is met. We have checked off all of these. Asia session ended. We identified our medium inducement zones. We identified our potential POIs. We have identified in which direction they were creating liquidity out of Asia. That was to the downside. They were bringing in, the equal lows. They were bringing in all the buyers. So the SLs were below. They induced out of Asia range. At the same time, they gave us a medium inducement. And then we had a relevant break of structure away from that medium inducement. We saw that we had the inducement POI had imbalance, perfect, and then we found our valid targets, which was of course the equal highs overall and the intraday equal highs if you were not too comfortable with taking it to the overall equal highs. So we've checked off all of these. What's next? Well, we have to take the trade. So tagged in, very nice. We figured out, this was an SMT. Ideally, your SMTs will give reactions, bring more people in, bring more people into cells so that we can take them all out. And then here, this brings in all the break and retest traders. They're getting in buys after this high's taken, pull back, push. Like we showed you in the liquidity bit. And we know that, okay, we've got huge equal highs right here. So what do we think is going to happen? As we've brought in buyers throughout the day. What do we think is going to happen once these equal highs get taken? Obviously, we get our TP, and then boom, everything else gets smoked. And that's how to use the lit checklist. Check lit.
What you should understand by now. If not, then go back and again see where you got a little bit missing, right? So first things, there is most likely a big market correction coming very, very soon. Like again, could be the next few months, could be the next year, we don't know. But again, if you look at the real numbers, there's definitely something cooking up, right? So we have to be aware of that. And of course, we have Cameron and Super with us as well. So if they want to add something in, just be aware that they can scream into it as well, right? Cam, Sakba.
Of course.
There we go. Right, so be aware of this, that there could be a recession right around the corner, and you will have the skill set that will be recession proof, and you will have a huge advantage over technically everyone. Because again, if it hits, if it doesn't hit, it doesn't really matter. Or if it hit, even after that, you have concepts and techniques which are literally recession proof. So that's a huge benefit right there. Then we dig into the aspect of money, what it actually is, of how they're printing it left and right, like absolute maniacs currently, that of course they try to show you numbers of inflation rates which couldn't be further from the truth, right? Of course, it should be even higher, even if it's the highest out of a 40-year number base. It's 8.5% officially right now, but of course, it's technically even higher. You could do the math yourself if they're printing literally money where they can, like it's crazy, trillions of dollars and other currencies being printed. So of course that cannot be sustainable for much longer, and of course that's where the market has to correct itself at some point. But at least you got also the understanding of what money technically is, of how they use it against you, of how they connect emotions to it, of how they literally trap you in the illusion of money, and how they literally use it on a daily basis against you, right? And of course, most importantly, of how they use emotions against you, connecting with the money, right? So again, FOMO, greed, the fear of missing out, like technically the FOMO again, or the fear of losing money. That's all stuff, of course, that affects you big time. Then we dig into how the market is technically controlled and manipulated. Of course, the individuals you got also introduced to, like the architects, of how they do it, of how they're having the scientists, they know exactly how the market works, of what people trying to analyze in the markets, the psychology reasons behind it, and of course the syndicates behind it, like knowing all the data points of what the actual numbers look like, or how the actual numbers look like, and they're putting all together and put in the machinery that delivers the market. And we just call this machinery the enigma. Why the enigma? Because of course it encrypts the intentions of what's actually wanted to achieve in the market, which is of course making money. Don't make sure that you don't make money, trick you into position, stop you out, like attack strategies. Then at the end of the day, keep the market in balance and keep the wheel spinning. And we dig a little bit into the mitigation phases also, where the market has to be fairly delivered, right? And that's why the market sometimes comes back and fill these inefficiencies all the time, right? Then there are, of course, these entities that influence the market big time. Architect, we just covered it a little bit, and of how these retail strategies and also smart money strategies, of course, are literally quote unquote man-made, and of how they induce these people and systems and overall strategies to get involved into the market. Also, always be aware that your money, other people's money, companies' money, hedge fund monies, whatever money it is, it's only getting activated when they push the button of activating a buy or sell. And of course, to do that, they need a reason to do so, because nobody would throw in the money into the market and just give it away. No, of course, they need a solid reason, a solid strategy they think that works. And again, if they show a trend line working, then of course it builds these false belief systems and people think, oh my God, that's how the market works, right? And then of course, that's how the retail strategies shown on purpose to quote unquote build up and create this liquidity. And again, they have to show it. And again, if it always would fail immediately, if a triple top never would lead to a proper reaction, it would simply, nobody would trade it. And again, that's why also we dig a little bit into the basic map, basic master map in detail about the smart money concepts, of why they technically how to try to make this illusion work, and again trick a lot of people into these new concepts right now, right? But that's of course not the case of how the market works. Cam?
So also we had liquidity will be induced, and Enigma has to fairly deliver price and has to mitigate into our refined supply and demand zones. Obviously we covered that quite a lot in very basic detail in the basic master map before sort of expanding on it a little bit, and then we showed you how to refine down the candles and all of that sort of stuff. We also touched upon the false education, like smart money concepts and market structure. We ripped into it a little bit, but hopefully not too much. Hopefully no one's going to be getting upset over that one. It's also important to understand the basic inducement types and how they affect price action with momentum of like the momentum which induces people to take stuff the wrong way. They're very important with identifying your inducements. And then obviously we touched a little bit upon the Asia range, using that for your main guide of the day and using that to sort of ground yourself and understand what's a minor inducement, what's a medium inducement, when the day starts, key liquidity areas as well. And then after Asia, we obviously have Frankfurt Open and London Open, and these are your first timing confluences that you can use to your advantage. And this is where you want to look for your inducements, maybe your inducements of the day, or maybe just your inducements that provide pullbacks. You need to understand whether it's made a minor inducement or a medium inducement and where you are within all of that. And then obviously we really want to emphasize that identifying your liquidity types, whether it's your breakout liquidity, trend liquidity, equal highs, equal lows, smart money, all of these things, it's really important that you focus in on this and you get good at identifying this liquidity, because the last thing you want to be doing is actually becoming liquidity yourself. So by identifying liquidity, you can obviously avoid all of the traps and stuff like this, and it will just make your trading a lot less stressful.
So the key learnings, again, just to sum it up a little bit more, again, understand of how this market actually is delivered. Man-made strategies are in there. People need reasons to take positions. And of course, they're getting induced. Momentum, speed, we talked about inducement types. So the most important thing to understand of how they're getting the liquidity in to the market and how it actually is delivered, like fairly delivered, quote unquote fairly delivered, and how these inducements will make a major impact and will change your overall chart vision once and for all, right? Again, it will be very clean the moment you get used to it, and that's just one of these moments where you just see it and then hopefully you never can unsee it ever again, and that's where your chart vision really takes advantage over everything. All right, and now it's showtime, because now it's time for you to get your feet wet, practice, get some markups done, backtest the living fuck out of that shit, learn to see it in hindsight first though. Again, if you can't see it in hindsight first, then you will never ever gonna be able to trade that material on the edge and not even close in live market conditions. So you have to learn to see it in hindsight first. Then you work yourself into replay mode, trying to test around and trading view replay mode, and obviously get comfortable and familiar with the setups and methodologies. And then only after that, when you're really good at that, then you get some live practice, right? And only once you get good at live practicing conditions, then you can jump and catch some very good live signature trades with, for example, free trials. FTMO has some good program there. You can pause these trials. You should, again, a quick one though. You should not jump right into the straight inducement trade. Stick to the signature trades first. Again, it's a little bit more boring, but it's consistent and very profitable at the beginning. And obviously, the moment you mastered those, then you can slowly but surely get into the more aggressive style of trading, catching most inducement trades instead of signature trades. But again, start with the signature trades. They are like literally the best trades you can ever take, period. And that alone, again, if you just stick consistently to them, they will pass you every prop firm you could ever think of, okay? But start with like free trials, see if you can pass them. Use proper risk management, again, the most important thing. And of course, you will receive an execution helper, right, at this point. which there should be tutorials. If you did not receive it at this point, there will be tutorials at the end as well. And of course, then it's time for you to conquer the funded accounts, conquer some leaderboards. Again, you have a lot of students who did that, and now it's your time. Okay, so take the material and showtime.
But exactly like Reem said, we want you to really focus on these signature trades, and maybe you can't keep it all in your mind, and that's why you've got the checklist there, so you can literally sit there on TradingView. Okay, yeah, I've got my inducement, I've got my relevant break of structure, I've got my mitigation. Okay, let's go. So we want you to, rather than trying to up, down, left, right, just focus, catch a few really nice setups a couple times a week, and that's literally everything you need. You don't need to be taking 10, 20, 50 trades a day. You know, I'm sure some people do. You first need to learn how to catch the quality setups. You want to be catching quality over quantity. You don't want to be catching all these little shitty, oh yeah, I'll take a couple losses here, take a couple losses there. That's not what you want. You just want to be catching the sort of 9 out of 10 plus setups.
Remember, the signature setups, of course, as we said multiple times now, they will occur multiple times a week depending on how much pairs you look at. And as Cam said, quality over quantity. But if you look at pairs, that can twist around, and the quantity of multiple pairs will give you the quality of the setups. What do we mean by that? So let's say you only look at EU and GU. Okay. So then obviously maybe you don't get a signature trade every day. Of course, it can't be like that, right? Again, they can't do the same exact setup on the markets every single day. They have to switch it up, of course, right? But let's say you look at EU, AU, EG, GJ, Swiss, Euro, whatever, Euro, JPY, whatever, US 30, gold, whatever, like a lot of different pairs, then the chances are much likely or increased that you will get a perfect Mona Lisa signature setup, right? So again, don't hesitate or like drift away from the idea that, again, multiple pairs is much more harder to trade. No, it's quite the opposite. It can be easier because you focus on quality by looking at quantity first. But if you only look at EU to find this perfect Mona Lisa setup, again, you maybe wait for a week because maybe only there's one signature trade in EU this week. But again, maybe you missed a perfect signature trade on AUD USD or US 30 or even on gold, right? So again, try to get used to multiple pairs to find this one perfect signature trade, which literally can give you the returns of the week you need. Again, think about it. Risk 0.5%, get your 1 to 10 in 1 week. That's half the bet you need for every prop firm, right? And again, they have time limits anyways if you use proper ones like FTMO, right? And you have 10 trading days anyway. So you only need 2 1 to 10 trades in literally 2 weeks. That's all you need, and you can stick, as Cam said, quality instead of quantity, by use quantity from the pairs by looking at multiple pairs to get that quality trade.
And also, what you need to do is you need to make sure, so that you're not getting scared, you know, maybe hesitating on your execution or doing the opposite and jumping in too early. You need to make sure that you've got it down in terms of back testing, in terms of just seeing it over and over and over. You need to make sure that you're trading with confidence, because if you're not trading with confidence, then you will start to see that fear, or maybe the opposite, where you're too eager to get in. Oh, I don't want to miss out on this move. I don't want to miss out on this. And that's where the danger comes in. How do you grow your confidence? Well, you need to see it play out again and again and again. If you haven't seen it play out again and again, you're not going to know. You're not going to feel confident. You haven't practiced it enough. And the thing is, what we're showing you is a skill set which will improve your trading. It doesn't matter if you only come away with one thing or you come away with 100 things after the awakening. The way you see the charts will not be the same. And That's important. And that's why what we're giving you is so important. That's why you have to put in the work to actually make use of that. You're not just going to come away from it and be like, oh yeah, I know how to take the signature trade, and then you're just going to be taking them all the time. No, that requires work. You have to put work in. At the end of the day, it is your own work that goes in that determines what comes out. You can't put in nothing or very little and expect to be multi-millionaire, multi-billionaire. That's not how it works. It's delusional to think that's how it works. You have to put in effort to receive things.
And that's exactly what you have now. All these guidelines that give you the information, the material, the guidelines, the checklist to do exactly what Cam just says, to put in the right work. Because again, I'm pretty sure a lot of you guys, you maybe put a lot of work in before, but not really with the proper material, not really with the proper market understanding. And now you have all of this information, and finally makes the work you put in worth it and will give you the positive outcome of it. And there you go, you absolute legend, and congratulations for not only completing the Awakening Master Guide, but also for successfully passing your exam about the lit material, or the lit awakening material to say so, right? So as you see, here's the completion, and of course, we give you a quick summary overall as well. And of course, I have the wizard Cameron and the Queen Sokba with me as well, and guide you through the last the last steps and points about the bonus section. Because as you already see and already in it, you're in the bonus section, the secret topic, and of course we have some surprises there for you as well. So first of all, you received all the foundational secrets of how the market really works, and you successfully passed already the Lit Awakening exam, and you proved us that you understand all the basics, you have the proper knowledge, you understand how the market works, what medium, minor, major inducements are, like how the liquidity gets into the market, how the overall process works, like what the architects do, what Enigma does, and obviously how it looks like in the charts. And most importantly, you received the lit signature trade, which is the medium inducement London open trade, which is, again, depending on how much pairs you look at, can be a daily occurring setup if you look at multiple pairs, or like a weekly occurring setup if you only look at a few pairs, like EU, GU, for example. But this gives you technically the foundation for everything, literally everything you will ever need. Sokba and Cam obviously can confirm that. And again, we have hundreds of students who rely hardly, for example, only on the bread and butter signature trade, which of course is the London open trade. Or if you want to throw in your point of view about that, Cameron.
Yeah, you just want to focus on these types of setups. You don't want to force these random trades where you're just seeing, oh yes, this, you're making stuff up. You want to reinforce what you've already learned. You don't want to be basically just making shit up, right? You want to focus on quality over quantity, and then from there, well, how do you focus on quality? You need to know what you're trading. So you want to practice the living shit out of the signature setups, as they will be literally what you're going to be trading. This is how you're going to be basically making your money trading from now on.
And this is the essential thing Cam just said. Literally, practice the living shit. Literally, the way we wrote it here. Do it, because again, the moment you master those signature setups, that literally is everything you will need. Again, it's fancy to trade whatever random setups here and there, but again, if you literally only practice the signature trades in London Open, after the random break of structure, in perfect timing, into the mitigation, and if you wanted to entry at the lower time frames, again, they will literally happen sometimes daily, depending on how much pairs you look, or weekly if you look at less. That's literally all you need. And again, you should trade properly with quality, as Cam said, and that's literally all you will ever need. Also, Akbar, what about the other progress they have to go through?
So that is learning how to make them work for you. So that does include actually the higher time frame or the lower time frame. So do keep in mind you are able to adapt it to how you feel. So whether that's the 5-minute, the 15-minute, whatever you wish, whatever works for you. So the next thing, once you have actually practice the signature setups, it is actually time for you to smash the prop firms with your knowledge. So that does actually come after you have consistently applied the knowledge. That means practice everything, brush up on your knowledge, things you may not be so confident in, and only then you will be able to then achieve consistent profits. But remember, this does come as the last stage. First, be consistent in application of the strategy.
Okay, on top of that, of course, you can definitely trade more than just the signature trades, depending, for example, if you can't trade London session for whatever reason, be it work, be it your time zone, be it family, whatever it might be, and you can't trade London session. Again, all of us highly, highly recommend you to trade London session if you can, because this is where the money is made. But again, if for whatever reason you can't trade London session, it's still fine. You have to understanding how they build up liquidity. You know how they use inducements. You know how they drive price action in order to obviously induce everyone else of the world and all the other strategies there is in order to drive for price action in the other direction. You know what the roll and breaker structure is, and you know what the mitigation is. And if you use those things in combination, again, you technically can trade everything there is, other than, again, just look at the normal liquidity, where it's been formed, where they're building and creating the liquidity, where's everyone getting stopped out, and then use the same method with the roll and breaker structure into mitigation to create like a little cycle play, and you should know how to do that. And the last thing, Wizard Cameron, how can they of course use and should use Asia and timing?
Well, obviously you've learned what should happen during Asia and specifically how Asia interacts with the other times, how you can use it as liquidity, and then also how you can use general timing. We teach you Frankfurt and London Open and how you can use those to your advantage. Now, obviously we do understand that these are additional confluences. It's the overall guide. It doesn't necessarily need to be within timing, but if it is and you have all of your things, you have your medium inducement, you basically have your lit signature setup, you know that it's going to be a high probability one, and you know that it's one that you should take.
Yes, and always remember, what you just received is literally what gave us, ourselves, and at this point, hundreds of students, the breakthrough moments, right? So again, we started somewhere as well, and we were in the situation you have been prior to the awakening as well, and we would love and could not be more happy and grateful if someone would have provided us this exact guidelines to understanding how the market works as you just received. So if you do anything, take it very serious, because this is literally everything you will ever need. Again, we created the perfect guideline of how we would wished we would have gotten it years ago, how to solve the mystery of the market, and you have it now. So again, your learning curve literally shortened by years. That shit took us years to figure out, and you just literally took the shortcut. So stick with it, really inhale it, rewatch it if necessary. But again, this is the basics technically that will stick for your entire trading career forever, right? Again, this is the basics, how the market works, the reasons the market works, and everything you will ever know. And again, you can form your whole trading around that understanding and the signature trades.
And obviously this is not just something that, oh, it sounds great, blah, 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 but it's also backed up by thousands of trades from our students, and also this is something that you should do. Maybe not necessarily live, but you should have a backtest of hundreds, if not thousands of trades so that it's implemented in your mind. You should not be jumping in randomly. You should know why you're jumping in. You have your confluences, you can list them out, you have your understanding, you've identified the liquidity. You're basically able to play chess with the market. You're able to understand the true intentions. You know, okay, this lies on liquidity, so I shouldn't take this SNT. Okay, yeah, they're building liquidity in this direction, so I can sort of anticipate that it's going to reverse and take out all of these people. You're able to identify the next best move. But what that means is you should not sit there and get all cocky like in chess and you just pre-move everything and then you're losing before you know it. You should still only really identify a couple of moves ahead and still react to what is happening, not try and just predict everything and get, big ego and feel like you're the best. You should still remain humble and react to what is happening and not hope that, I hope that this happens. And for most of you, that is all you ever need to be consistently profitable. What you have here, what you have been taught, the liquidity types, all of these, you should be able to use them, build something from that. Not even necessarily build it, because we give you the lit signature setup, but maybe if you can't trade that, you build something from it, you have the understanding to do so, and yeah, you just enjoy trading for the rest of your trading career.
And with that being said, I would say have fun. Now with the additional bonus content you receive, of course, there's some few nuggets, how Cam would say, hidden in the examples. Enjoy, take some more notes, and then into the chart slaying. That's it for us. So how to use Asia range and the understanding of overall inducements in combination with now the M15 to read price action literally like a book. Okay, so you always have to understand the story of the price action and how they induce low to go higher, how they induce high to go lower, how they build the liquidity, how they create equal highs in order to take them out and then move away from the inducement every single time. So how can we do that if you just look at the M15, right? So let me get my fancy pen in here, and you already see it like left and right, like if you go more to left even, right? So for example, as always, right, we have Asia range in here, right? Again, building the equal highs, triple tops, head and shoulders, whatever, right? But what does happen first in London, right? They stay inside the range, creating the head and shoulders pattern, right? And then obviously break price low. But what is this? Asia range, inducement low to go what? Higher, taking out the 1, 2, 3, boom, top in Asia this time. This acts as our medium inducement now. So you want to trade away from that, and also notice how they do it with momentum, getting everyone excited about obviously the breakout high. So we trade away from that. What's overall Asia range though? Inducing low to go what? Higher. Next day, Asia range again, and this is always one full day. From here to here is one full day, right? So that's how you get true master of intraday understanding if you combine it overall with the bigger picture as well, right? So you want to trade away from this medium inducement at this point, but what does Asia range do here? First, inducing high, faking the Koch in here, move higher into the medium inducement. What a surprise, right? So building the buy trend in here, mitigating the medium inducement, boom, trading away from that. Let me delete a few things as they're getting too crowded, right? So now we know, okay, this is mitigated, this is fulfilled. This creates liquidity for the next place because this reaction is already done, right? Guess what they're doing here? Faking Kochs, faking the reversals, right? Creating the continuation, right? They're expecting lower, but what is this for our understanding? Again, the inducement. So what does Asia range do here? First, of course, look at the momentum again. They're creating to a low side, away from this inducement, right? But what does Asia range do after getting induced? Taking the liquidity from these points, first building the equal highs once again, faking the reaction for resistance traders, right? But then guess what? Tube the high, new medium inducement, absolutely perfect, right? To then move away from that. Asia range, creating liquidity, getting induced high to the what? Go low. Asia range here, so let's see what they did in here. Let me just delete that. But you see, you can read price action literally like that, right? So if you have price action going sideways like this, what's going on? First inducement low to go what? Higher. Now notice the speed, right? Notice how they do it, how they trick people in. Obviously now first breakout traders low of Asia range going short. Their stop losses are above high. Look at the equal highs in here also. Breakout traders enter here. The other one's getting stopped out. Now everyone obviously wants to buy that thing, right? So what obviously is going to happen? Reacting also of this demand areas in here or supply in these scenarios, right? So guess what? We expect a reaction away from that and obviously take out what? This points once again to fake what? The Koch, right? So first they're faking the reaction, obviously bring people in long, right? They need a reaction, but then getting smoked, right? So what obviously we're expecting after they're getting smoked in here, we look to the left, obviously look for the next points of liquidity in terms of like this. Same thing, look at the momentum they're creating, all these breaks. Again, everyone now has reversals in their mind, right? Again, Koch, so they're looking for entries here with short, entries here with short, maybe here with shorts. So guess what's going to happen? They're all getting smoked left and right. It all fulfills the story of price action, how you can read it. Then we wait for the next day. We literally just wait for the next day what Asia does. And you already see, okay, Asia creates huge momentum upside, right? But we wait. We wait for what? We wait for the inducement of London, right? We don't do anything. First, obviously, they're faking the Kochs already, right? But we understand, okay, this is still in Asia. We're not looking for any reversal yet, right? So we wait for what? London bringing in the moves in here. What a surprise. Oh, sorry, Frankfurt is this, right? So London comes in here, right? Of course, we can expect maybe mitigations of the extreme of these points in here. Boom. We understand, okay, look at all the liquidity they're creating, all the trend that is formed. You already have a fake Koch, which gets early sellers already out with these crazy momentum upruns. Again, this candle was solid, bullish at this point. Obviously just pulled back. Now it's creating a wick, but guess what? Now they're going for the mitigation. Everyone and their sister is long here, so guess what? You understand already. The Asia range getting induced to the high side with momentum as well in London timings. So guess what? They all will getting stopped. The liquidity will be taken away, and obviously we're all getting stopped out to the low side. And this is obviously exactly what happens. Read price action like a book. What is here again? Same thing. For continuation traders, they see this as the imbalance. They want to react in here, and that's the smart money traps people tap in all the time, right? But guess what? They faking the reaction to make them all excited and then smoke them, right? Again, they always give the false reaction before they take them out, right? So again, same thing now. Now the next external day liquidity is right here. This is all internal day in here, right? So the moment we have something of inducement a little bit to left, again, the same thing, creating the channel to low side, boom. Now same thing, we have already created a purpose. Everyone looking for shorts now. The Kochs are in place here and here, right? So guess what? Market has to pull back. After a big down run, you can expect a correction until the next day, right? Every time it's the same thing. So you wait for what? Asia range being formed, and then you wait for what? You wait for the inducement. Inducement high, where should it go to, in which areas? In this case, again, supply areas right in here, away from this inducement, right? So you can mark these supply areas when market taps in London. We even give you the timing window, right? With perfectly the box in here, but it's already tapping in slowly in here already. So this is most likely done in here as it perfectly tapped these supply areas, right? London is right around the corner. So what does London do? Obviously say thank you for Frankfurt, building the liquidity in here so London can take it out easily. Boom. Does it already. Again, same thing. What's the next liquidity target? You'll receive the equal lows in here, right? So you wait, of course, until that gets hit. But guess what they will do in here again? They will fake the reaction. You can always expect that. So price comes here, again, fakes the equal lows, fakes the triple bottom in order to get people in trading the buys in here. What has to happen? They need a reaction, and look, there is the reaction coming in back one more time, giving even another reaction, right? So again, oh my god, that has to hold. No way that this can ever hold. So guess what? They're getting smoked, getting tubed, right? So what's the next mitigation zone? Maybe in here somewhere down there, right? Trading away from that medium inducement in here, right? So expect price to go a little bit lower in these areas, which it does, just wicked inside, right? And then obviously same scenario as before. You expect the next liquidity target getting hit. And again, this is price action January 25th of this year, right? Again, literally a few, or whenever you watch this, but I'm recording this literally in January, a few days earlier. So it's always the same. You saw examples from 2021, you saw examples from 2022, now you see examples from 2023. It's always the same. Learn this basic understanding of the market and you will be free forever. That's literally guarantee. If you understand to read price action like this, how they create liquidity in terms of the session timings, most importantly Asia and London, which are the most important sessions to obviously drive the day. And obviously you also can add in the New York intentions. It's the same stuff as well, but the most important being Asia, Frankfurt and London as they drive the day. As you always see it, look, inducement high to go lower, 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 and it's always literally in London. Isn't that weird? Isn't that crazy that it's always the same? So guess what? We wait for the next day until what Asia does. It's the same exact shit all over the place, right? So guess what? Asia already takes out this point. Okay, we don't care. We wait for what? We wait for Frankfurt, London. Oh, and they already induced high. Interesting. Where do they tap in? Look at that. Mitigation to the absolute tick of, again, this point with imbalances in here. But now it makes sense. Not the smart money randomness, but no, it makes sense as we again trading first away from this medium inducement until the next target is getting hit. Target is taken out in Asia. Now you have the inducement of Asia in here, which already was the inducement here. And you have the momentum, Frankfurt timing, and this taps into the mitigation. So guess what you expect? You expect price to what? From here, you have your perfect London scenarios, and this you also already still in Frankfurt, right? But this is the signature lit trade in here. So what do you expect? Same thing as before. What a surprise, right? So guess what? You aim for Asia low minimum, or you look for the next liquidity target, which again could be this week, could be this week, something like in these areas. So guess what? Boom! Chup! What? It's the same shit. It's literally the same shit all over again, right? So guess what? Now you have your first liquidity grab, so you can expect a little pullback, right? But you want medium liquidity, right? And boom, look at this. Medium, or like not yet medium inducement here. Some sort, a little bit, right? But look at the momentum. That was the word I'm looking for with M, right? But guess what? Also another word with M, medium inducement could be already down here. Again, maybe not this. This is a little bit better in terms of the wick, right? This is like very late. This is the last wick before the day ended, right? The next one would be obviously all the way down there, but this is, as you see, price action more like not going to happen. So go for this one instead. Also try to identify these proper pullback entry zones, which could make a significant price point reaction, right? So guess what? Just maybe wait a little bit more. Again, they're faking the equal lows from here, as they always do. They fake the what? Here it is, the fake Koch. But guess what? You're smaller than that already. You wait for the medium inducement. Let these people getting in. They're taking the buys in here, in these areas. So guess what? They're getting smoked, absolutely tubed. Now you have your medium inducement, and now you can trade away from it. It's the same exact scenario, but obviously you should not open a random buy instantly, right? You wait for what? Next target zones with some sort of imbalances. Again, yes, you had this wick in here, so this is more only your demand areas you're expecting to get tapped in, and before you take the reversal, and when it gets tapped in, which it just stayed short of here a little bit, right? But again, it's all about the intention basis they do it, and then obviously you can expect obviously price to move away as there's no proper imbalances, but they move into the supply demand areas. In these scenarios they already did after medium inducement, right? And obviously then you expect price to reverse from there on, right? It's the same stuff. And again, even if you wanted to, now you have your relevant break of structure. Again, not your Koch, not your break of structure, your relevant break of structure after a move is fulfilled, after you grab liquidity, after you tapped into a valid supply demand area. But again, most importantly, after you grab liquidity, then you wait for the relevant break of structure, then you find your imbalance zone, then you get your mitigation in here, right? And then guess what? You expect the tube of these equal highs in here. It's the same stuff, and look at this gorgeousness. It's absolutely perfect. Same stuff as always, right? As we now had some sort of inducement in here, expect a pullback, and look at this gorgeous pullback, right? But did you have like medium inducements to the left overall? Again, you only have internal liquidity of the same day, intraday liquidity. You want external liquidity as well, of course, which is up here. So guess what they're doing in here? Giving you the order flow, right? Fulfilling or delivering price, quote unquote, fairly, filling the imbalances in here. So this is already an order flow entry. You can aim for the high sides as well. And what a surprise, look what they do. But now that the day gets very late, so this is best to close out here and wait for what? Wait for Asia range. And look what they're already doing. Building a sideways channel in here, right? And look at this. Look at this, what they're doing. Right above or right below this zone in here. What's around the corner? Frankfurt, London, if they give the medium inducement, absolute Mona Lisa shit. You clap in the hands, thank the gods, take the short, and look at that. Boom. Just take it out. What's this? Relevant break of structure. Wait for what? Into the mitigation. Boom. There's your into the mitigation. Maybe if you go to M5, M1, maybe there's some better entry higher. Maybe in the M15 still. So we don't know yet. So now London comes in, but this looks already good in terms of maybe internal liquidity they're creating in here. So if they take it out in here, get into the mitigation even, okay. Perfect. In London window here as well, you see it with the box, absolute Mona Lisa shit, away from a medium inducement, right? So guess what? Expect the tube. Same thing as always. What's the target? Asia low. Next liquidity zone. Where is your next liquidity zone? It's all the way down here, right? It's the same shit. It's the same shit. Again, order flow. Not the nicest. The proper order flow would be up here. If they give that entry, again, thank the gods, thank the architects, and just take it, right? Okay. What is going on here? Some news in here, right? Again, taking a little bit of an inducement down here with this wick. So expect a reaction. Look what they're already doing. Faking the equal highs in here. So obviously faking the Kochs. And obviously this could prevent, what is the word? Provide, that's the word. Provide you the word with a very nice entry in here as well if they come a little bit higher. And okay, what a surprise. Look at that. Trading away from the medium inducement. Mitigation, fake Kochs in here after they grabbed a little liquidity down there. Order flow, aim for the next medium inducement. What a surprise. Isn't that absolutely insane? Just like that. Isn't that interesting? Okay. So guess what? You wait for the next. You wait for the next day. Again, first of all, what a surprise. Medium inducement gives obviously the pullback in here, right? What a surprise. We wouldn't expect that, is it? Right? But again, you wait for the next day. Asia range. what's going on here. Again, this is not the Asia ranges we look for, as it's just like already like trending down there, so you can't really expect too nice as inducements in here. So this is more like an equal lowy inducement, so I would not really consider this as more like a build-up of liquidity in terms of they faking the 1, 2, 3 bottom in here, so fake reactions will probably get taken out. You're still trading away from this medium inducement overall in here, right? So again, expect price to just snatch out the lows, which it did. What is a price? And again, what's the proper next medium inducement in this scenario? Again, you have your internal liquidity. Where's my pen? Again, your internal liquidity in here, or intraday liquidity. This is not in the same day. This is medium liquidity, so expect obviously this to be taken, and then expect some sort of reversals from here. Boom. They obviously do it, right? So again, you wait for what? Something like that. Again, if you're not specifically sure with this one in here, as you have like liquidity targets on here, always expect also some fake Kochs, which makes things always much nicer, right? But overall, again, technically, that's what you can expect. Boom. Same thing happened, tapping down there as well, right? So faking the Koch one more time. Now you can wait for the relevant break of structures in here, right? Which they in here cannot really give at all, right? And then obviously you wait for the next day. As always, you're building these equal lows already, but first you'd want to trade away from this medium inducements in here, but you expect already, okay, there's already liquidity down there. The next liquidity is obviously this Asia high in here, right? It's the same shit all over the place, right? So the only tricky situation so far of this, whatever, the last 10 days of price action would be if you get into this medium inducement too early in here, right? Because you don't expect like price to go lower one more time, but if you understand that they also can fake these Kochs one more time to just push price lower and then go higher. Other than that, absolutely flawless in here, right? And then, of course, next day, what's going on here? Asia range getting induced to what direction? To the low side. Where's your medium inducement in here? Where's your supply demand area? In this case, the demand area all the way in here. We already are in here in these areas, right? Trading away from this medium inducement in here, right? Again, trading the internal day first, if Asia range being induced to a low side, into medium liquidity, and maybe go for again the next medium liquidity zone. So you definitely can take the buys in here, right? So let's see. Boom. What is a price? Taking out the first target, Asia high. Let's see if they go for the medium one. Boom. They do. What do we expect after they grabbed a medium liquidity? Going into the mitigations of the left maybe, right? And then obviously give us the reversal. So getting into the mitigation in here already. Let's see if they give the reversal. They do. Probably drill and break of structures in here. So if they come back and give us the medium inducement mitigation, which they do in here. So here's your short trade. Where do you aim for? The equal lows in here. They fake the moves in here as well. So this is definitely a nice liquidity target. Boom. So that's your target. Let's see if they chup it. And, oh, can they do it in the same day though? Or do they? Okay, even nicer. Even nicer, because now it's a triple bottom. Look what Asia range does and wait for London. Asia gives the fake reaction. Fakes the Koch in here. Again, is this pullback Koch, right? For continuation to the low side. Right, so guess what? Boom. Asia takes out the lows already. Perfect. Everyone's getting excited for the shorts in here as breaker traders getting in like crazy. It's still Asia. So what's 10 times nicer if they do in Frankfurt? Faking the Koch. Again, yes, this is your inducement 100%. But what did you learn? Wait for timing inducements as well to not get faked yourself with the fake Kochs, right? So wait for London and Frankfurt to make the proper inducement. Again, this now is an inducement high. It's not a relevant breakout structure, even though this is the inducement. Yes, 100%. But guess what? Liquidity comes in now with Frankfurt. They faking the Koch to go lower one more time to take out the pre-early buyers, and then the move is fulfilled. Boom, and that's exactly what it is. Look at how the momentum they're using. First faking the Koch in Frankfurt, buyers getting in premature, they're getting all stopped out in these areas. Now you have your proper inducement with speed and the proper timing with London, as you can see with the box. Absolutely perfect. So guess what you do? You take the buys, aim for the medium liquidity, just like that. Take the buys, aim for liquidity. Here's your re-entry if you really wanted to, and instantly tubes it. That looks like news though, but then target is fulfilled. That brings us to literally where we are right now with current price action. What a freaking surprise. That's just January. Everything is literally exactly the same since we started calling it years and years ago. Get these key learnings in your head and you literally free yourself from all the rest. Read price action like that and you literally have the best foundation you can ever have in your trading.
Welcome everyone, and we are here with a bonus episode. So with this bonus, I will be covering on Edge the whole strategy that you should of course know at this stage, considering we are towards the end of your awakening journey. So you should get a lot more clarity in understanding and putting the pieces together. And this way you can get a nice solid rule set to trade from. So as you can see on the screen, we are trading gold over here. So with that being said, we are using the awakening checklist. As you can see on the top right, you should have watched the tutorial at this point of how to use it, how to modify it in however you like, I guess. Mine's is in the top right. I just think it's personally the best place to put it. So it's kind of out of the way of charts. You can put it wherever you feel. So starting off with the checklist that we have in our top right corner, we have our very first complements, which we need to check, and that is, has Asia session ended? Now, something to bear in mind with gold, or should I say commodities, and some indices, including US 30, the market does close actually an hour later. So if you do remember, I mentioned it's 11 p.m. to 7 a.m., an 8-hour window for the Forex pairs. For gold, however, it is from 12, as you can see, till 7. So it is 1 hour later as opposed to the rest of the pairs. So do keep that in mind. Also, what's really, really nice for you is built in on the trading view indicator, so you don't need to worry at all. But just if you're a little confused, you're wondering why is that 12, you should probably know that, but for the indicator aspect, it should be prefixed anyways, so I can answer that question, although there's an hour missing usually. In this case, yes, Asia session has ended. So we just scroll down and we tick on our checklist and we get a gorgeous check mark over there. So perfect. Now let's just remove that so we don't get so messy with our drawings. The next question is, have you identified potential medium inducement zones? Now, just a little recap is anything outside of our Asia range, low or high, is going to be a medium inducement. These 2 points are minor inducements. So minor and minor again. So just to keep that one in mind, just a little basic lesson, should I say, and everything outside of that will be considered a medium inducement. In this case, of course, we have minor all the time. Minor always exists, and every single day a minor inducement is without a doubt going to occur by breaking out of either side. So when it comes to medium inducement, however, we do need to mark that up and have a bit more of a thought process of what's going on in line with liquidity. Of course, we will get to the liquidity stage just a little bit later in the checklist, but first, do we have potential medium inducement zones? So from what I can see, we do have this point here. Right? Again, I'm not really marking it up as like equal highs or anything, but it's a medium inducement zone that we can, of course, extend. So we have medium, just write medium. Oh, top. So we have a medium inducement zone to the high side, meaning sellers liquidity. Do we have anything to the downside that's not Asia? Technically, yes, but this is very, very low. So we have to be realistic when it comes to how much price can potentially move in a day. The chances are, if we've had this the day before, we're probably not going to be going all the way back down there and mitigate or whatever you want to expect from that. So we need to think of something reasonable when it comes to maybe a potential continuation at least till this point. So likelihood is somewhere down here we may induce, which will be a medium inducement zone. Not as clear as this point. As you can see, it's this high over here. When it comes to these areas, they are medium. They just require a little bit more detail, or should I say attention, when it comes to that. So we can indeed see this overall liquidity point over here. We can generally mark that up. In terms of price coming down here first, so let me draw that up with a polyline. Like if it comes here. Oh, Jesus, what is that? Oh, gosh. Some retail tools accident. Let's get the polyline wherever that one is. So, I have forgotten where that one is. Polyline, there we go. We have the right tools. So if price does come down here, for them price to extend all the way here, can be possible. But remember to ask yourself a question, how can price induce as much as it possibly can? The chances are that that's a possibility, but it's just one move essentially. So inducing low and then inducing high. However, we need to think more like the market makers and how they induce continuously throughout the day when it comes to retail liquidity. And what that can include, let's make sure we pick up the right tool again. It can include potentially reacting here, maybe reacting there, chopping around a bit, maybe making an equal high, etc. And then coming lower, building liquidity, coming higher, etc. Something along those lines. Again, that is a little bit brief, but just to bear in mind to understand the story, that's really, really key. So do keep that one in mind. However, at this specific point, we're not going to make anything up. We're going to play with what we see, or should I say trade what we see. And the question is medium inducement zones. We did technically mark up one here. We do have this point here. I did draw it up as liquidity, but in terms of inducement zone, we can of course aim below this potential POI, right? That's liquidity. This is a potential inducement zone. You can also mark up below that. But again, when it comes to intraday and possibly the first or second market intention of the day, I want to go in steps. So this could be the second one. So I could write second potential medium inducement. See, so perfect. And you, of course, should know what the one above that is. It's going to be your first potential inducement. So, not sure what happens with my capitals. I'm going to write medium. Inducement. Oh my god, damn. Not sure what's going on there with my spelling all of a sudden. So we have two potential medium inducement zones. So one to the high side as well. Potential second one, potential first one. We're going to play out the story in steps. Keep in mind when it comes to market intentions throughout the day. So first market intention, we may not possibly come down here. However, what we can potentially expect is our next point over here. Have you identified potential POIs? We potentially may actually mitigate in here. I'm not going to actually refine this to a 1M. I'm going to keep it to a 5M purely because I will not take this as a mitigation regardless. I need to wait for lower time frame confirmation. 5M, it's a pretty big zone. We can even check on 1M if we have to for something that's a bit more refined. So something a bit more refined is down here. We will just mark that up for argument's sake. Again, we're not smart money traders, so we don't just randomly guess POIs and say like, it must mitigate over here. Well, it might not. That's why we don't do it. So in this case, I'll just mark that up as 1M in the middle of it all. So 1M potential POI. Oh, what's going on there? Let's just put that at the bottom so it's out of the way a little bit. So overall, it's a 5M. I just want to see potentially a reaction within this area in order for me to potentially trade it. And even then, I need my confidences. So without continuing further, we do need to actually check them off. So we did do our medium inducement. POIs, well, let's check if we're finished. To the high side, this is an interesting one because I do not expect, let's go here, that one so much to be a POI. It depends. We can mark it up. It's going to depend on what price does first. So we have a potential one there. If price, for example, induces high, oh my god, damn, I did that one again. Okay, my bad. So if price, whatever, does something like this, reacts, we get our confirmations for us to take sales, then potentially we can, of course, take sales and then maybe mitigate here again, confirmation, continue, etc. And then, of course, break through completely. I can't really do that just yet because, yeah, it's in the way, but it really depends what we actually get straight off the Asia to know what may be the POI and what may be the smart money trap. So I will mark up both zones. So again, we're not having a specific bias. We are open. There is liquidity to both sides. I will get onto that once I've taken POIs. So the next question is liquidity. So have you identified in which direction are they creating liquidity? Okay, let's mark up liquidity. I think it's one liquidity point here is pretty clear. You can probably identify this huge amount of double tops. I did just extend it because it is the high, so it does make sense regardless. Now, to the downside, do we have anything as well? We technically do get some sort of trend line formation. It may continue as we get outside of Asia. Again, it's a matter of waiting and seeing what's going on. I can't predict that just yet. I simply need to wait. So liquidity-wise, from a basic level, we have marked up pretty clear liquidity. We don't need to go in depth and mark up these points over here because they are outside of the window anyways. They should not matter. You do get your inducement low. That's completely fine, but we are not going to mark up those bits because they're not relevant just yet. So let's take that one off. Liquidity. Next question. Have they induced Asia range? This is the matter of where we need to actually now continue price action. So let's continue what's going on here. Ooh, okay, so already I can tell you we have continued that trend line. Again, it's not perfect, but it's overall pretty clear that price is building liquidity, early buyers getting into the market. From what we can quite literally see right now, price has induced Asia high. So potentially expect price to come lower. Again, if it hits anywhere in this overall zone, whether it's refined or not, we still need to wait anyways. So that being said, we can go on 1M. If 1M does actually come back to mitigate this POI over here, so we can refine that quite nicely to a 1M. If price does give us a relevant break of structure, only to then mitigate, for example, We continue down here, get our relevant break of structure of this point, come back to mitigate. Then, of course, we can at minimum even target this point as opposed to just the Asia range. So we can extend our nice risk to reward in that case. Again, we need to wait and see. So we have, of course, induced outside of Asia range, so we can actually tick that one in this case. Again, it's going to depend on both sides. We have two sides of Asia range, so I'm not going to go too in depth when it comes to that just yet. I need to see the whole story play of, are we actually taking sells? Are we taking buys? Are we able to take both and capitalize? It's going to depend quite literally as we speed things along and see what the price is doing. Okay, that's your smart money trap. Why? Are we going to really create this trend line forever? Likelihood is not. So anyone that takes that, they get induced. So yes, you get induced. Okay. Okay, from this point, it actually looks like price may not actually come back up here, considering we are literally just a few moments away from Asia low. So the chances are now, again, combined momentum mitigation, you will probably be able to see this as a smart money trap if price does not get back here before inducing Asia low, potentially in this POI, because then there's no real target. So for now, I have marked it up pretty early. Actually, we could quite literally reverse. So let's actually just see what price does. Yeah, the chances are that's going to be a smart money trap upon reversal. So sells looks like we just missed them. Buys, potentially we can, of course, expect something. Again, I am not so eager just to take a buy if it reacts anywhere in here. That is a ridiculous zone. So I am not in a fuss. We're just going to wait and see what price does. Okay, it's creating liquidity at the lows, creating this support or whatever you call it, equal lows, etc. And before you know it, we induced right outside of that one. So looks like price is forming liquidity. It's not so clear exactly. I could just mark up some lines like such, like that. But I'd rather just wait for liquidity to form because I can't be entirely sure what's going on there. So we may, in fact, have a build of liquidity, inducement, potential relevant break of structure, mitigation. That will be our ideal cycle. Again, we want to wait for a reaction away from the inducement and a pretty clear one as well before we, of course, potentially take the mitigation of the inducement candle. So we are now in London Open. Perfect. This could be our window. We are quite literally a few speckles away from our POI over there. So what that likely means is London may be our absolute perfect trade of the day, as we have got a timing window set right now and intention to potentially reverse. So, oh, that looks like it just about missed POI. Okay. Again, just keep in mind what's going on here, creating this liquidity. I can't, again, mark that up super clear. It's pretty messy, actually. I can mark it to the high side, intention to go higher, potentially. But again, this is not enough for me to just enter. Again, in this specific scenario, we are getting a reaction. The only thing is we have an imbalance over here, and it's not necessarily the imbalance of the inducement candle itself. When it comes to the inducement candle itself, it technically is this gray one over here. If I just remove the drawings for a second, this gray one over here is technically that inducement candle. However, the reaction away from it didn't give the imbalance of the inducement, so it's not a mitigation of the inducement candle. That's simply an imbalance. I'm not too keen on that personally. I don't really like trades like that. If anything, I'd rather wait to see what price does. Could induce low one last time, as that can be seen as liquidity. So we will just keep that zone marked up. I'm not keen on it. I'm quite certain it's just simply an imbalance. It doesn't fit our criteria of a pure mitigation of the inducement candle anyways. So yeah, let's see what price does. Again, no need to get FOMO, seeing price go bullish. And this is exactly what the market makers want. They want you to get FOMO. People execute all over the place at this stage. I'll execute here, breakout traders, etc., breaking out of this zone. Again, smart money potentially will get induced here by taking that imbalance. We need to be smarter than that and think outside of the box of what we should expect and potentially expect this as a fake move, as we like to call it. So yeah, let's see how that goes. Okay, potentially. Yeah, but that's personally, it's not in my criteria of what I see as mitigation. It's simply an imbalance, not in the right place for me. And that is perfect reason why. So we can just remove that one. Perfect. And from here, we just simply need to wait for a nice reaction. Now, already, what I can tell you, we've left an absolutely amazing imbalance. What's better is we wait for a relevant break of structure. So now, before I actually do continue, let's mark it off our checklist, because we've now had a medium inducement low. Well, not technically a medium inducement low. We did get our medium inducement high. If you realize, we get our medium inducement high for this liquidity. Low-wise, I wouldn't say it's the clearest inducement because there's only imbalances over here. However, in this specific case, we've got a medium inducement target. So that being said, do we have a relevant break of structure from the inducement? This is quite simply what we need to wait for. Now, what that would essentially be in this specific case will be something at least above this at minimum. Again, I'm not going to guess where this relevant break of structure occurs. Okay, so let's see how, I don't know why I've drawn it like that. Let's just keep it like this and hope it breaks over. If it breaks over, then I'm looking at this POI for mitigation. Perfecto. So, ooh, okay, we're getting double tops or resistance, whatever you want to call that. Even better. Okay, so we've already broken through, so I'm pretty happy for that as my POI for an entry. And keep in mind, you can see already stop loss is looking great on that one. It's not a crazy stop loss, a bit like if you just take that zone, your risk to reward is pretty bad. If you were just to take something from there, that 5 MPOI, look how much we can refine it. So before we do continue, we need to identify, is this a valid trade opportunity? I know that's not on the checklist, but it's always something to keep in mind. Does the risk to reward justify itself? So does it justify itself? Let's see. Even if we were to aim for this point, which is likely a smart money trap right now, why is that? Because we do have a target higher, which is this smart money trap or potential zone. We have this liquidity hill, this medium inducement of whatever structure you want to call it. So let's first, even to our very first at minimum point over there, we've got a juicy 13-1, and that is pretty realistic. I can almost guarantee that will occur. Again, don't want to use words like that just for legal reasons, should I say. But the chances are I personally can guarantee it will at least reach here. If we were to aim a little bit higher to our absolute maximum target down here, that will extend to a 19-1. However, I will actually look to the left a little bit just to identify where price can potentially reverse, etc., or how can maximize this target we have going on. But before that, I want to see if we are able to even get tagged into our entry. Also, what's really, really nice about this has occurred in London Open. If we get the mitigation in London Open, that it would be incredible. If not, that's also fine. We've had our main move in London. That's all that matters. So let's continue that one. Ooh, price is going very, very bullish. Lovely. Usually for me, when it comes to relevant break of structure, that is quite a big amount. I don't usually like stuff like that. Again, keep in mind, I don't really use structure. It's just that very last confluence. So either way, it's a little bit overstretched for me. But we can, of course, mark that one up, as we did forget. So relevant break of structure. So let's see how Paris does return. It's returning, which is great. It looks like we're going to extend outside of the London window. That's also fine. So let's speed it up a little bit quicker. What's really great, what you're seeing right now, is what? Liquidity of a pullback. Perfect. That only helps us what? Get a nicer target going higher, because now we've got sellers coming into the market a little bit too early, because when we enter buys, they will get induced. So this is looking great. Oh, that shaky moment. Oh, what's great about this? We get perfect liquidity. It just couldn't be more clear when it comes to the liquidity element. We could even mark it up there. It's a bit late in seeing that one, but generally speaking, and for like backtesting, etc., understand how price moves and if it's creating liquidity or if it's the actual move itself. In this case, we see really clear liquidity. Oh, thought it was gonna run away from us for a moment, but hopefully, if we can just come a speck lower, that will be amazing. I'm pretty happy with that one. So you're tagged into your entry. Great. Target-wise, we did have a couple of targets. So your smart money trap is your absolute minimum target over here. And we have another potential POI. Again, if it's a POI, I need to see a reaction from it anyways in order to take potentially a pullback. But we have got a medium inducement target over here. Can we potentially see why that is, or if there's something to the left? So if we just see that one, okay, this is great actually. This is really great. So this POI, if I just extend it to the left, you already can see that's some sort of smart money concept stuff. So price already reacted from there the previous few days, whenever that was. Right now, is that valid? Is that going to hold? Likelihood is no, it's not. So that's why we can understand, where did this reaction come from? Well, it came from a previous POI that already had a reaction. So the chances are when it reacts again, it's not going to hold. Keep in mind, this was, of course, the previous day, pretty late in the day. Volatility is a little bit low as well. However, can we extend our target a little higher? If it wants to induce a little bit higher here, I don't also expect it to just reverse. I can potentially think about extending my target at minimum above this little trend line over here. So you can see if I mark it up like such, I would like to see price at minimum come above that. So I can extend my target a little bit more. Again, that might be room for improvement. I'll have to see how price roughly reacts in this area as we get closer to price action getting in this area, hopefully. So that is a gorgeous 22-1 at minimum. It's a pretty nice trade to start off your day, or even you're done for a week, for a month. So let's actually just speed that up quite a bit now, because we're not really interested in anything else. For a bonus, what I might do is add some mastery trades to this, see if I can identify the on-edge mastery that we do teach in the adventure. So if I can find another continuation trade, that will be great. So we're going to wait for that one. Again, I would not be break even. That's another thing to mention. I don't just hit break even straight away. Ideally, you want to create for a new high, etc. Because if you have such strong confluences like ourselves over here, we've marked up everything, the whole story in this specific case, we can, of course, be confident in our analysis that we don't need to be break even instantly. Because you do get times where price does tap twice or maybe 3 times. Again, that's usually rare, believe it or not, but we are still open to that. Before I continue, let's mark our checklist. Retail break, relevant break of structure, my bad, not retail. After inducement. Now, POIs with imbalance, we did mark that one up. Again, I'm a little late on this checklist, apologies. Hope you've been keeping your eyes on that though. Target, we literally just identify target. That's a pretty nice checklist, all green. Lovely. So let's actually just speed things up a little bit, and that will be great. Again, what are we doing? We're building liquidity. We may get something lower. If we tap again, that will be a little bit annoying, but it's what it is. We are not at break even anyways. We have very strong analysis here. Oh, that's almost, that's a very close one. But now, what have we done? Inducement high, breaking out of this liquidity. Again, we have so many little cycles here of liquidity that it's super, super clean when it comes to why price moves a certain way. So do keep that one in mind. So it's getting a bit slow and choppy. That's, of course, probably due to the fact we are building something. Okay, so let's do some on-edge stuff. Gonna take that mitigation over there. Bonus. And I will extend that target to the same point. Just there, you're 19.21. It's pretty juicy. Continuation trade. Perfect. Again, I'm going to extend these points out actually, so we're getting closer to them. And again, you can already see what's going on there. That was liquidity being built. I don't need to even mark that up because I know my direction is going against this little trend line thing. But what you'll notice is like, again, trendline traders. Apologies if you're one of them. But like, when you extend it and stuff, and then you wait for the retap of the trend line, then you can take your buys. So if price comes here, people are going to be taking their buys. Smart money is actually getting a little bit screwed over there, as you can see. And then, of course, trendline traders, they're going to be taking their buys anyways. So, ooh, smart money is already out of the picture there. This could be a potential little reaction of our trap there. Lovely. Let's see. Touch off the trend line. Lovely, jubbly. Or maybe not. Oh, see, trendline traders at this point are absolutely excited. It's actually funny. But yeah, look, we're almost approaching target. They're going to be holding this for like, well, they try to hold it for like a week or so, or like 4 days, 4-hour time frames. But I'm quite certain that's not going to hold at all, as we are literally approaching our target very soon. So let's see our target. Medium inducement. Remember that one? That one is over here to the left. I'm just going to go and find them, just so it's a little clearer for you guys. Medium inducements already induced. We can check that one off. Lovely. Now, this was that absolute high target. Again, I really do expect it to come to that point, because if price was to react from, let me get my pen, anywhere in this zone, the chances are it's actually going to break out of that zone, as we do indeed have a really nice liquidity level to the left. Let's just undo the drawings and I'll show you what I mean. Just as a reminder, if you remember that liquidity point, so if price was to actually react in here, it's only reacting at liquidity again, and that's not what we want. We want an inducement of liquidity. So let's just see that clearer on a 5M basis if we do actually reach target. Ooh, trendline traders. Now they're probably getting a bit messed up at that stage. Ooh, okay. I think I can see something going on here. To take a final on-edge trade towards our target, I potentially can see something nice going on here. Let me just wait for a bit of a reaction. Okay, perfect. This will be my next buy. Again, this will not have the same risk reward. Let's just see where that low is. I think it's there. The same risk reward. It won't have the exact same one. However, it is a really nice 6-to-1. Needless to say. So if we get that reaction, that will be absolutely incredible. 3 buys, of course. These are bonus ones in this little episode. You could try to figure them out. However, they are taught fully in the adventure. So, oh, even better. What are we doing here? Creating liquidity. Lovely. This only helps us understand that price is definitely for a fact going to react above this point. So let's extend that line too, see if price does get even to that point as well. Lovely. Lovely jubbly. So Again, what's the price doing? It's creating liquidity. Great. It's getting choppiness. It's confusing people. What's price doing at this stage? Are we going to sell? Are we going to buy? What are we going to do? Oh, wait, that is absolutely perfect. That happened a little too quick, that inducement candle here. And I am on the 1M as well, so that's a very nice wick. Target's complete quite literally perfectly at this stage. So we have 3 really nice buys, 22 to 1, a 19 to 1, and a baby 6 to 1. Again, that's an on edge one. It's usually, as we're approaching target, you're not going to get the amazing risk to reward, as you probably can figure that out why, as you are close to target. So with that being said, you can close your trades and expect your next market intention of the day. Again, we can just quickly do a bit of on edge stuff over here and speed things up a bit and potentially aim for some sort of stealth. That would be nice. Not seeing what I want to see just yet. Okay. Okay, I think it's looking good from here. Okay. It's gonna be my trade. Right there on edge. Target. Target about there. It's a 10 to 1. It's a pretty decent one. So that will be, again, even in intraday, this is not your most confirmed trade. It's the on edge ones. However, I'm going to wait for my confirmation trade. And that should be very, very confirmed when it comes to sells. So let's hope we reach target. Okay, I've reached target. Close that one. Next target would be, let's see how that was. Okay, just need to see something. Okay, so we've got a 10 to 1 over there. Lovely. Okay, the confirmed trade that we get. Perfect. Target. Now, what was my target for this one? The confirmed sell when it comes to the mastery stage. I'm going for my first potential medium inducement, not the second one just yet. So let's speed things up and see if price does get somewhere in our range. Oh, this is great. This is absolutely great. Perfect. And just like that, we have taken our cells. Let's just hope they reach target, which would be great. It's gone 5M just to speed things up a little bit for you guys. Perfect. Target's reached. You get a nice 15 to 1. So, with that being said, that's pretty much the end of this little bonus episode. I did, of course, cover 4 additional trades pretty briefly. Again, these are quite literally the intraday level when it comes to our mastery students. So, just to show you the actual potential of what you really can achieve with the 19 to 1, a 6 to 1, 10 to 1, and a 15 to 1 additional in a day. However, with yourselves in the awakening, you also achieve pretty nice stuff. And this is why we call it the foundation of building intraday mastery. So, your 22 to 1 is pretty decent when it comes to 1 day of trading, or should I say 1 morning of trading. So you can't really complain about that. So with that being said, I hope you guys enjoyed this little episode, this little bonus on edge training, should I say, as well as the little bonuses that we just showed you. Keep backtesting and ensure you, of course, study everything. Enjoy.
Well done for completing the awakening. So obviously we've got a nice little surprise, a nice little additional surprise for those who have completed it. And here it is. Got a few videos for you. So let's jump right in. There's no reason not to. So we'll start off with H1. Obviously, significant inducement that we're trading away from, and now we see we're building equal lows. Okay, so then we jump in, we understand, like, okay, we understand that this level will ideally give us a reaction, because if it reacts away, what does that mean? Well, it brings people into the overall buys. Again, we give another reaction, even better, right? And look at how we react away. Boom. Big momentum, so everyone's like, oh yeah, we've got to jump in. We give another break of structure. So, you know, maybe smart money traders are jumping in here, but you've got your resistance traders obviously on H1, your equal lows, they're all jumping in. So now we can see just visually that, okay, there are going to be quite a lot of people interested in buys. So what do we wait for? Well, ideally, we wait for Asia to end. Okay, now Asia has ended. And what do we see? We see Asia high intact, right there, and we're pushing to the downside. We're doing what? We're breaking structure to the downside. So now we've even got some smart money traders who are interested in the sells, right? Then let's just get this for our timing. So that is obviously Frankfurt, and the what's it called? London will obviously appear. So let's just do a dashed line for that one. Make it a little bit smaller actually. Okay, there we go. So let's keep playing. Okay, Frankfurt open. We're not too interested yet, but we can see, like, okay, we're even creating this nice little channel to the downside. Again, they get in. 1, 2, 3, third tap, and then boom, break to the low. So they're in. Smart money traders are getting interested as well. Ideally, we give a reaction from here. We obviously don't have to. But now, what is coming up right round the corner? Well, in about, what are we now? 30 minutes, we've got London open. So that would be the ideal time for us to induce high and come much lower. So let's see what we get. Okay, we induce a little bit before London open. We didn't quite get smart money trap reaction, which we would have liked to see. But okay, let's wait for our confluences. Okay, so now we're seeing, okay, we've got an inducement at London open. We've taken out all of these sellers and we've brought in more buyers. So more people are interested. Breakout traders are getting interested. Break and retest traders are getting interested. You know, more people are adding to their position from the equal lows. So we're just, more people are interested in the buys. Overall, the majority of people in the world right now are buying, at least on an intraday perspective. So what do? Well, we wait for our confluences. Okay, there we go. There's our relevant break of structure after an inducement at London open. So what is the ideal trade? Well, it's obviously mitigation right here. And where could we think about targeting? Because it's always important to think about, before you even get into a trade, you should really know where you're taking it to. You don't just want to be blindly taking an entry because it appears. You want to understand beforehand, like, okay, what points am I going break even? What points am I exiting? Maybe what points am I partialing? You know, stuff like this. But again, we can understand, well, we should understand this by now. So that's one entry. Okay. Now, again, we understand from the higher time frame that realistically our target should be down here. That is the ideal. We've faked these equal lows so much now. We've also got this like intraday equal low here, right here, show you. So obviously we've got, not intraday, sorry, but obviously Asia low with these lows. So obviously overall equal lows with Asia low. So we have a lot of liquidity built to the downside. Loads of people are looking for buys, and they will potentially take more buys if we come down to these levels and react away. So that's why this TP makes a lot of sense. So let's continue to play. Okay, so now you need to think like, okay, what point am I going to go break even? Now, maybe you're going to go break even here. This is not something that I can tell you. You should have a rule set based around when you want to go break even, when you should go break even. Especially with risk management, you should not be second guessing yourself with risk management. That is like the one place where you should have like obvious rules that you follow each time. You should not be like, oh, was this a valid break even? Was this not? Should I have left this on? Blah, blah, blah. You can obviously adapt your rules as time goes on, but you should understand pretty much all the time when you get into a trade at what point you're going to break even, if you're going to break even, because you know some people don't. Maybe you want to remove your risk and leave your SL open. Maybe you want to remove your risk at 1 to 2, 1 to 3, whatever it is. But you should understand the key points in the trade for how you're going to manage it. So like I said, TP, SL for granted, obviously, entry, obviously, and then also if you're going to partial, what levels you're going to partial, and stuff like that. So anyway, let's keep going. So now, ideally here, what could we potentially have away from the medium, away from the inducement, sorry. Well, we could have, again, pull back into another mitigation. We know our targets are much, much lower, so this would be like an ideal scenario. Again, this is just on the M5. Don't have to go any lower. You can if you want. There you go. So you can take that one. Boom. And then, you know, if you're like not fully confident, you can, I mean, in this case, it's like really obvious. Your TP is like really obvious, but if you're like really unconfident, and you need like, you feel like, oh, I need to partial to secure something, obviously here is pretty good, or like, yeah, if you really, really desperately need to partial, right there. And then from there, you just let the trade do its thing. Now, ideally, we get like, to bring in more buyers here, you'd want to see a reaction from like either the equal lows, like one final thing. Doesn't really matter which one, but ideally you want to see that reaction away, so we see them bring in more buyers. So like, not really that. No. Ideally, they would have given like a much bigger reaction to fake it one last time, and then you can potentially get like another entry to the downs. Fake it one last time, like, you know, really fake it, like come up to like here, then you can potentially get another entry and take that to the lows. But obviously that is like a really, really simple example, combining like the higher time frame with the M5. The one thing you always want to do is you want to make sure that your intraday time frame aligns with your higher time frame, because you can have these like equal lows, for example, right here, but if the intraday time frame, if the intraday like story doesn't make sense for sells, then it's probably not going to sell right there. But here obviously we see, okay, like Asia, nothing but buys, we have equal lows here, huge move off, so we know everyone's interested. We bring the people into sells prematurely, one final push, London Open inducement to the high side, and then obviously we get this big follow through to the downside. Let's jump into right. So let's look at, you know, sort of, let's get our bearings. Let's go from here. Right. So let's jump into EG. Right. So let's look at, you know, sort of, let's get our bearings. Let's go from here. Let's see what has happened. Well, on the previous day, what can we see? we see a nice little trend to the high side forming, everyone's taking buys, got your trend traders hopping in here, hopping in here, your third touch, your fourth touch, push to the high side, they're all getting excited. You've got your breakout traders entering, boom, 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 your break and retest traders entering. And then coming into Asia, what do we see? Well, we start to build equal highs. And then after those equal highs, we give a break of structure to the downside. So people are getting interested. They're getting interested in their sells. So what can we sort of take from this? Well, obviously, everyone should understand this. We absolutely expect this to be a smart money trap. I think even some smart money traders understand this. Let's just put on Frankfurt. Yeah. So obviously, we expect this to be a smart money trap. Ideally, we actually expect a reaction from it because we've got these equal highs, an obvious smart money trap. If we get a reaction from it, we just bring in more liquidity, more people, and that just makes these sells that will happen even nicer. And let's just go on to the H1 as well. And what you see is, okay, we've got these equal lows. We've brought in all these buyers, potential medium inducement into a mitigation. Okay, so now we're sort of looking at it and we're going, okay, things are getting interesting. Again, we're not going to force anything. You're not just going to blindly see, oh, medium inducement, I need to hop in. Of course not. But you can sort of see what potential play may happen. So again, just to recap, lots of buyers are in. Now sellers are getting interested. They're seeing the equal highs, they're seeing the push away, and they're either already in sells or they may get in sells on the next reaction. So let's see what happens. Let's play through. Okay, so we get one reaction away. So obviously you've got your equal high traders are interested. Smart money traders aren't in yet. Resistance traders, they're also interested. Okay, we're coming back up. We've tapped the smart money trap. Boom, reaction away. So now all of these traders are interested in sells. Some still interested in buys, but on an intraday perspective, if we just look like this, everyone is interested in sells currently. Smart money traders are getting in. We even give if you go down to the M1, we even give their little break of structure. So they're interested. If they didn't take this, then they might take this. Your resistance traders are obviously interested because, well, it's resistance. We just had the push away, multiple taps into the zone. So they're all very interested. And obviously, equal high traders are also interested. And what do we know? Well, we're currently 40 minutes into Frankfurt. We've got London open right round the corner. We have equal highs. Get rid of that. We have equal highs right here. We have loads of sellers. We have people potentially selling when it comes back. So what can we expect? Ideal scenario. Of course, the ideal scenario is that we induce. Now, London Open is literally 5 minutes away. And what else do we see? Because remember, all throughout here, people are following the trend. They're saying, okay, like on this M5, the trend is bullish. We've got trend traders hopping in. Now, what do we do? Okay, so we've got equal lows right there, and we've just had a breakout of Asia high. So now even more people are buying. They're all interested in buys. They're getting, they're all worried about missing out. They're jumping in. But again, we know better. So we have had the medium inducement, but you don't just want to randomly take it. You want to have good confluences. So what do you wait for? You wait for your break of structure. That is your break of structure to the downside. Now, let's think about if we were to take sells, where would we take them to? Well, realistically, we have two obvious targets. This is obviously going to be your extreme target, at least on an intraday basis. And then this could either be your first target, or if you're not too confident, this could be your overall target. So from there, what do we do? Well, we've had like an M1 break of structure. So obviously you can look to take it from here. But personally, when I know my targets, which you always should, and the RR to that target is more than enough, I'd much rather be in the trade than refine too much and not be in it. So for me, that is absolutely fine. Oh, I've just missed that little bit off. There you go. That would be absolutely fine. Right down, so to there, 1 to 8, to there, 1 to 13. And then we just let price do its thing. Okay, so obviously, if you were to take the M1, you would have also been tagged in. And then we get our push away. And now, obviously, once you get this push away, you need to decide, oh, what point do I break even? That is something, again, that's down to like risk management. So that's something that you need to decide. You need to put rules around that. You need to build rules around that. All of these sorts of things, right? Now, just because we're in the trade, that doesn't mean we need to suddenly stop analyzing. That's stupid. So, ideally, to bring in more liquidity, we would love to see a reaction from here. That would be the ideal scenario. So let's see. Okay. Again, faking it. Like, look, that's your, oh yeah, strong resistance. 1, 2. Like, look at all these reactions away. That's the pin bar. You know, they're entering there. Oh yeah. Obviously, we understand what should happen. Boom. That all gets smoked. Let me just draw that so I can grab this. Okay. Ooh, that all gets smoked. Lovely. Exactly what we expect. Perfect. Now, where is the next liquidity point? Right here. But from a smart money perspective, maybe they see this as their decisional and this as the extreme of the push. But we know that all of these trend traders have their SLs down here. So what does that likely make this? Yep, smart money trap. And if this is a smart money trap, like here, obviously we didn't get it here, but what is the ideal scenario? The ideal scenario is that we get a break of structure to the high side. Boom. Because now all of the smart money traders that didn't set their limits here because they were waiting for their confirmations, they're now, well, now they've got their confirmations. That's their M5 break of structure. You know, they're looking to enter there, or maybe they're refining it down to the M1 and they're looking to enter there. But what do we know? Well, these are very likely going to be smart money traps. Because not only do we now have the trend liquidity down here, we also have smart money liquidity, either here or here, as well as here. So overall, we know that, okay, yeah, this should get absolutely smoked. And what happens? It gets absolutely smoked. And there you go. Simple. As long as you identify where the majority of people are positioned, you will be able you will be able to capitalize on these moves. The biggest advantage of this, especially in the beginning when you're still grasping liquidity, is it helps you avoid so many losses. Obviously, you can do more than just that. You can find direction and stuff like this. But the biggest thing, especially in the beginning, even if you take nothing else from the awakening, you do nothing else with it, if you implement liquidity, you will find that you avoid so many losses just by understanding where everyone else is taking their positions. Obviously, sometimes they're going to have to feed the chickens. If you were to do an activity and every time you did that activity it went completely wrong, you'd never do that activity again. The same with trading. If these guys, every time they traded, just took loss after loss after loss and they never won, then there would not be liquidity there because they'd never enter. you need to give them the false hope of like, okay, yeah, it's going. Like exactly like this, right? Where it pushes away and everyone's getting in because they're excited, seeing that it's going in their direction. Same here, right? You know, we build the trend. Oh yeah, it's going through all of this. And then look at it. The moment that they enter, obviously some of them get taken out on this pullback, but then we build more buys, push higher. Everyone's like really interested in the buys. You know, they don't want to miss out. And it's that point, the point where they don't want to miss out on the buys. That's the point where it sells. Boom, reverses. Oh, and they're thinking, oh yeah, it's pulling back to give me another entry here. So, they see the pin bar, the push off. Maybe they get in there. Maybe they don't. And then you've got the smart money traders who, you know, oh yeah, I can wait for my confluences. They wait for their relevant break of structure. The mitigations still get fucked. There's just understanding where the liquidity is. Even if you take nothing else, just apply it on where not to enter. I guarantee you it will completely change the way that you approach trading.
And another example with US 30 to mix things up a little bit more. This time, March 2023. Why not? Right? So we have literally 3 years with March examples of 2021, 2022, and 2023. So can't be more than that. So let's see. On the 1st of March, what a surprise, we had a semi-good starter kit, I would say, as price action was a little bit messing around. Again, be just aware of when they show you the trend that you want to induce the trend first to bring in premature sellers, induce high once again, and then you technically can take the signature scenarios when it taps back into the mitigation of the inducement, right? But then they just decided to create this crazy smart money trap down there with literally 4 touches to that smart money trap of Asia low. And of course, faking the equal highs in here. Look at how they do that. Always the same shit. And then finally taking out the Asia lows, the quadruple bottom down there as well with the inducement, which we want to now trade away from, of course, right? Then price pulls back into it a little bit, gives us another very nice point of interest for, again, you already see what they're doing in Asia here. They're creating this crazy channel or trend down there, right? Creating the equal lows, what a surprise. And of course, now this little trend in here as well. So you know what to expect already. And trend, little trend getting induced, right? The big trend is getting induced to the high side to again bring premature buyers in it, coming from this support, coming from this continuation up here, right? Again, premature buyers getting induced. And of course, boom, inducement low of Asia low. And what's our perfect scenario? London open to the absolute minute, just shy of this perfect mitigation point in here. So we wait patiently. Okay. And what do we also have in here? A relevant break of structure zone, right? So this could be technically our perfect signature scenario. Again, for the extreme entry, you're right in this area. Right, again, you grab liquidity of the equal lows, you build the trend liquidity. You induced it prematurely to the upside, right? So now you just have to wait for confirmations if you don't like to trade these extreme zones, as something like this could happen as well. Create equal highs once again. So technically, I would take this trade right here personally. But again, if you're more like confirmed trades, again, that's where the danger of it can fuck around a little bit, but it's all good. So it's definitely 100% valid to take it here. Stop loss goes below here. If you wait for more confirmations, here's your relevant break of structure. What is a price, right? So you wait for what? Look at that, how beautiful that is. Another equal highs being created to even push price even lower, give retailers again and everyone the confirmation. Oh, crazy resistance in a huge downtrend. It has to go down, blah, 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 right? So of course it's a trap. So what do you wait for, right? So here you go. You have your perfect mitigation of the signature inducement trade in London. Here is your first buy entry, right? So you take it with the mitigation, absolute perfect stop goes below here, right? If you take these buys in here, stop goes below here, right? So we wait for reaction, of course. What do? They show the trend, right? So they always track where they build liquidity. So you expect what after they build liquidity and show the liquidity to first induce them in, give them the lost impact of when to buy, right? And where do they put the stop losses when they buy? Below here, right? Below here as well. A few of them and a few crazy ones always below there, but there's nothing we can do about them, right? But on the other side, this is your order flow entry, right? Away from the inducement. So again, when they fake the break of the trend line, right, to bring in sellers, right? Now they're faking the double bottom to bring in buyers. They fake the reaction, right? So guess what? That's your fake Koch already to lock in the confirmations for reversal traders, continuation traders away from this trend, right? They want to see new low lows being formed, right? So, okay, they're already getting stopped out, the premature sellers, but this again brings in new buyers, right? So we still have our order flow entries. Again, they're trapping literally everyone. And finally, boom, a buyer getting stopped out in the time window of New York, right? And this also taps into the mitigation, right? So this, again, when it comes back low, you definitely can be ready for another buy in here with the order flow, or again, you wait for something like this when it comes lower into mitigation once again, or you change, for example, to the 1 minute to see if they come lower to give you another mitigation or lower time frames. And again, target should be minimum. What? Next liquidity for sure, right? So you can easily aim for the next liquidity zones in here. Same thing in here. Look at this perfect signature scenario in here. Isn't it crazy how it's always the same, right? So let's see and wait what they did. Well, obviously I know because I took these trades. And obviously they came back just a little bit, faking around, and then they just decided to absolutely smack these targets. Again, as always, they fake the double, triple, quadruple tops before. They fake the reactions. This just gives you more confidence that they're gonna about to smack them, right? First with a little wick, and then giving the death blow. It's always the same, and that's when you can close your cells. And of course, even today, it was the same exact scenario when they have Asia range, induce low to just go higher. It's always the same shit. So congratulations again for completing the Awakening master guide. And also, with completing the exam and passing the exam, you also qualified for our flagship Inner Lit Circle 8 chapter adventure. So, because a few of you, of course, will seek for more. But what we mean by seek for more, first, of course, you 100% have to master everything you got. And again, you already got everything you will ever need. But guess what? You received additional to your certificate also a ticket, right? So check the color of your ticket. If it's purple, everything perfect. If it's gold, then even way better. Then you should have received also a special email to that. And what these tickets do, we have our 8 chapter private lit adventure where only the elite of our traders and students are in. It's a private only event. We closed it down to the public, and now the awakening is even a prerequisite, a pre-requirement to get into this inner program, right? And with the completion of the awakening and also the passing of the exam, you qualified to be in the inner lit circle, right? So what you can do after, and that's a big after. First, again, use all information you learned in the awakening, get some profits, smash the markets. Again, you have everything you need to know ever, right? Again, all your basics, all your foundations, they're built now for greatness. And they can literally give you everything you would ever need. But again, a few of you guys just seek for more and want to be in the elite. They're not satisfied with just being profitable. They want to understand everything. They want to trade like you see behind this beautiful gate right in the background, right? Like they want to trade the intraday mastery style. They want to know on every push about the market. They trade multiple times a day, multiple pairs. That is possible, but of course, this requires much more work, much more content, and much more time, of course, as well. And that's the private 8 chapter adventure. It's private only, invitational only. But again, with you completing the exam, going through the whole awakening, you are qualified for it. And we will definitely welcome you to the adventure with open arms, as you're already part of the Lit family. But with that being said, again, focus first on what you have. As again, we said it multiple times, you already have everything you will ever need. So master the basics, as they are the most essential aspect to your trading career. Make a living out of that, smash the prop firms, smash your personal accounts in a good way, obviously, right? And once the student is ready, the master appears. That's the quote. So once you will be ready for the more greatness, for getting much deeper in the rabbit hole, then we will be there for you, of course, right? So now, take everything you have mastered, and it's more than enough, right? But whenever you're ready for the new elevation, and you can claim, of course, your purple ticket by filling out a request below. There should be a link below this video. Again, you can come back whatever months later, it doesn't matter. First, again, master and get good with the material you have, because again, that adventure is like the highest degree, the grandmaster level of knowledge. So it's obviously required to have the understanding of all these basics you learned so far.
Yeah, so obviously you've already learned what you need. The awakening has provided you with everything you need to already, as Reem said, smash the prop firms, smash your live accounts, of course, in a good way. But if you are seeking more, if you've still got, that little itch in your brain where maybe you want to understand things at an even deeper level, that's where the 8 chapter Lit Adventure comes in. You've done the work for the awakening. You've gone away, you've put in all of your time, you've smashed some prop firms, you've smashed your live account, you've passed the awakening exam, you've done it all. You're ready to step into the 8-week adventure. Only then, only when you've really put in the work for the awakening, only when you've really put in all of that back testing effort are you ready for the adventure. But first, as we said, you want to use what you've learned here and make it your own. whether you're implementing it with an old strategy or you're just forgetting all of that and you're going purely into liquidity and you're just trading liquidity, whatever it is, make sure that you feel comfortable in the way that you're trading. Make sure that you feel confident in the way that you're trading. And how does that come about? Again, we've said you have to put in the work. Lots and lots of practice will get you to that point.
So now it's time to use all the information, the guidance, the tools, everything you receive, the checklists, of course, the template on TradingView to really grasp everything, get the success you deserve, and you actually are able to receive as well of all information you have now. That can no one take that ever away from you. Again, you built the foundations for like a whole generation now with that information, with that understanding of how the markets work. And whenever you feel the urge to not only be consistent and profitable, but to become an intraday grandmaster, you now have it, the purple ticket or the gold ticket, depending on which one you receive by. Again, this is also by chance. Again, there's no cherry picking. This is like a raffle. So everyone has a chance to get either one of those tickets, right? So whatever ticket you have your seat reservation for the lit adventure to explore the deepest areas of the rabbit hole possible. For now though, this is when your true journey of intraday mastery begins. You have everything you need, and now it's time to explore the real markets. As again, we showed you the door, but you have to go through it yourself. Awakening legends in the making. Hello, cheers, cheers, cheers. What a beautiful Friday, what a beautiful week. Also for the awakening content, like absolutely crushing price action. I hope everyone can hear. How's everyone doing? Congratulations, because you're one of the first 100 who got the awakening with the launch. So huge congratulations. How's everyone doing? We have like a few people missing. So we wait a few more minutes. Perfect. Yeah, I mean, I think we just can jump into it. Whoopa. Because again, this week, just by looking at the signature scenarios, I hope everyone is at this section already and understands how they work. But it was absolutely amazing. If you just focus on them, even counter trend, it's absolutely amazing. But again, we can just dig into it, not a problem. Because, for example, and again, I will ask you a few questions, so make sure for your own sake just to engage a little bit, because it's a very important stuff that you get used to everything in terms of the interpretations, like how to read it properly. Again, it's all about the intentions and read price action the right way based on what they show you and what you learned in terms of what the world sees and how you should do the difference. And again, if you, for example, again, this ended the last week of the Wednesday of 13th of March. And again, for example, what's a surprise when they do something like a triple bottom in here, right? When they have like 1, 2, 3, 4 touches, right? And then they move away from that, making all these breakdowns of another triple, top high, pull back, again, fake the momentum high side, but then guess what? Drop out of literally heaven into hell. Again, where's here, and that's just a scenario, the liquidity for the whole world. Where what do they see? Again, is there any bias in there? Can there be any bias in there at all? Or are they literally all already induced to the low side, even by taking out the last low in here? Just by looking at the M5, by the way, right? You don't need higher time frames for that. You just literally can see what's going on, right? So if you just look at that, what kind of inducement type is that? Maybe just a quick question for all of you. Should be pretty easy. You can call it major or medium, right? So again, you can definitely call it medium. It's also an external one, very good. So it's an external one, and it's also, in this scenario, definitely can be qualified as a major one. But again, we can also run for medium, but definitely no minor one. Especially coming off this huge waterfall drop straight into hell, right? And then again, taking out also this perfect low in here, faking literally the breakout low after this huge momentum one. So, question, knowing this and having this, in what direction should we orientate after this overall? Again, if you want to make it even clearer, we can wait for a cleaner inducement as well, because maybe people be like, oh, equal lows. But now, boom, another continuation low, right? So that's perfect. That locks in our bias now. And I already see all of you guys have it right. And this locks in the bias for the rest of technically the whole week until where though? Until where could we aim? Right? If you just look at this price action here. Like you will even zoom out on M15, for example. And where could we aim for? Oh yeah, you can even draw. It's completely fine if you want to, actually. Don't have a problem with that. Right? Okay, so this is a good target, right, for minimum. Let me just make these lines a little bit bigger. Okay, so that's a little bit better. Right, so the minimum target we could aim for is that. But what is, for example, in here? What can this lead into? Again, pretty obvious. What can this be? If it's so obvious, then it's probably what? What the most of the world do here? SMT. Very good. You guys are definitely awake already. Right. So again, we have our liquidity target. We have a potential smart money trap. We have more liquidity targets above here with triple tops. Again, 1, 2, 3. Right. And then again, now looking over the bigger picture in the M15, where could we pull a point of interest after they would grab like major liquidity with the triple tops and stuff like that, looking at intraday price action at an inducement POI. Where would be an inducement POI in these areas? Is it like this one? Is it this one? Maybe this one? Or like, is it somewhere in here? Right? Very, very good. Okay, this one is a tricky one. Is this an inducement POI or no? If you look at intraday, where's my pen? Right, what is this? You already have your Asia range. You have your what in here, waters or price, your perfect medium inducement, your cup, your signature scenario, and what timing. You see the little box in London, right? Inducing low first to go higher. And then obviously this is the overall last inducement high to go what? First into mitigation, order flow, and then continues lower big time, right? So we have these huge imbalances. We have these liquidity zones with the triple tops in here. So just by knowing the bigger picture, we can for sure mark this overall zone already and be like, okay, we could have potentially room until all these maximum areas, right? So, okay, we know major or maybe medium inducement, but again, considering this huge drop in here, again, we could say major inducement low. We oriented for buys. We have a potential smart money trap. We have our first target. We have our overall liquidity target. And then we would have the next proper inducement point of interest with imbalances based on our perfect, first of all, signature scenario with Asia range inducing low, into medium inducement, perfect low on timing, inducing high one last time to go lower, and first taps also into mitigation and then goes lower, 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 lower. Right? So perfect stuff. Is that clear so far? I hope it is, because it's very important that you understand that. That's how you can instantly read the whole direction for the whole week. And all you do is wait for what? Signature scenarios. Literally, that's the only thing you have to do. Right? So again, at this scenario, you should do nothing. You just wait. Right? So you can stay on M15 and you wait for what? Question in the chat. You wait for what? What's the next thing you look for? This beautiful thing. Okay, a relevant break of structure. You could. Not a wrong answer for sure. But again, what's better to look for? Asia range, as you want for intraday entry approach. If you wait for a relevant break of structure, you already had it in here. Right? So, but now the next thing lines up, which is obviously our beautiful Asia range forming. And now look at this though. Right? We have M15 and we have Asia range getting induced to the high side, pretty premature. And just one thing, because we have daylight savings right now, so the Asia range, if you have the time on German, as you should have, it's just 10 p.m. if you want it, right? But again, it will be good next week. And then, of course, the timing will be back to normal as well, right? So for now, it's just 10 p.m. But again, we have auto-adjusted everything. So always go with the boxes. The boxes, they show you the right timing. So don't get too confused there. It's just the daylight saving times, as again, that in the Asian countries and in the US, they have daylight savings. We don't have it yet. And obviously, everything will be adjusted very soon. But everything is right in terms of the boxes. Another good indication of if you're getting lost, again, Asia always starts with the day open, right? Again, day open can be identified with these gaps, for example. Again, 11 would be here-ish, right? Again, this was technically, again, when the time changed, right? But always go for the day open and then go for Asia in these areas, right? So if you're getting lost for some time, but again, if you have the indicator, everything is automatically adjusted for you anyways. So again, we had this major inducement low, relevant break of structure. Now we have Asia range getting induced high though. So should we be too fussed about it? Not really. What's the timing window we should wait for in the chat? If we want to do anything in here anyways, right? Perfect, Yusuf. Right, so again, we wait for London. Let's make this a little bit thinner here. Right, so we wait for London, if anything. Let's actually make it gapped. Dotted. Right, so again, because this is just in the wrong direction of the inducement, right? So again, we should not be too fussed about it. Someone drew it earlier though, pretty good. You have this, again, it's already this trend starting from the rest of the world. They're already getting all excited, right? So what do we want with this trend before though? What do they always do if they see a trend? Induce, very good. In what direction though should they induce the trend first? Okay, what does this already do? It just is a minor inducement of this little trend in here, right? Again, it's already inducing people in the other direction. So what's about to come? Right, okay, interesting. The kicking in, the faking, the relevant, or like in this case, fake break of structure to the low side. Again, just inducing the trend, but we wait for what? Until the world's getting confused. They will placing limits in here, thinking, okay, order flow, blah, blah, all that stuff. But again, it's the inducement low first to give the death blow. And then it doesn't matter, there's nothing to the left. We can look for a potential signature scenario. So again, what happens? What a surprise. The momentum kicks in. First, a fake break of structure, inducing the trend line low, just to go higher into our ideal scenarios with London, right? So again, what is about to happen and what can we expect? Question in the chat. Let me get my pen. Right, so again, we have our major inducement. This inducement in here is in the wrong direction. It's technically into the inducement of the major one. So we have a minor inducement, not even a medium one. And we don't get confused. It's just a minor inducement high, giving us a potential signature setup, but for the short side, right? Until when can we take it? It's as its counter trend. It's technically trading into the major inducement. So if we want to take a short, yes, intraday we can do that. But on the overall picture, be very careful. You're trading straight into this major inducement and actually want to trade long. But again, as we now have the overall perfect cycle for the long side, inducing high, inducing first low to go higher, and then the whole day, so just inducing high, buys. The whole world is seeing the longs, right? So of course, we can look for the shorts, right? So how can we easily do it? Go on M1, for example, right? Wait for our perfect timing. What is our price? The box appears, right? So you just wait until what? Right? You don't get too fussed about it. Until what? There you go. Relevant break of structures. Perfect timing. Right? Very good, Christoph. Right? So you definitely can mark either this one, or if you want to get the extreme one in here. But again, you always have to be careful of not over refining in the M1. Right? So this, for example, would be okay. We just look at the M5, right? There's nothing really you can do on the M5, so you can just again choose this overall zone. It's perfectly fine. You just check your RR if it's like worth taking, counter trend again, and then question, what is the target that should be reached? Question in the chat. You took this, very good. Asia low, perfect. Right, so that's your minimum target you should get target for. Again, why is it also so juicy? Come on, look at that. Look at that. 15 million bottoms, right? And again, what's the absolute maximum target you can take? If you're trading away from the major inducement, you want to obviously have order flow. Very good, Oscar, right? But that's exactly how you can do it. And this is your perfect Mona Lisa point of interest for the longs. But your signature setup is this perfect London short. Okay? So you have this in mind. Again, that's how you have to check what's going on. And again, you can aim then minimum for the smart money trap or for the liquidity. Or as you're trading away from the major inducement, you can, of course, trade even higher, right? But let's just see if you match it up, if you get on trade, right? So it just tagged in by a speckle, right? It's just tagged in, zero drawdown, right? Absolutely perfect. And then what a surprise, right? Just messes around a little bit. Don't get faked out too much, but it's always the same stuff. Again, see the trend they're forming, right? Inducing high to go lower, right? It's always the same stuff, right? You just have to identify that internally as well. So then the moment they create liquidity, where do they create it? Look at all these tops in here. So what can we expect before they drop once again? Induce high, right? And then, of course, you expect a tube to the low side, right? And then, of course, I think it was a news day or something. Oh yeah, it's something with this. Yeah, exactly. I can't remember exactly if it was, but I'm pretty sure it was. And then again, it tagged in there. I think Cam, you also took this, if I'm not mistaken. But again, this was a little bit tricky to take then, as it was straight into it. Only limits possible, right before New York. But then this is technically where your limit should rest and wait for you, as again, this is the perfect absolute scenario after taking all the liquidity of Asia low, completing the signature setup from London, and then of course induces high once again, just to go into the liquidity grab, into the proper mitigation. Now you're trading away from this major inducement. So again, if you've been lucky and prepared, then your limit was right in here, right? So you can close that one easily, 127, not too shabby, right? And then of course this one is the big banger with a lot of potential. Again, minimum target should be at least a smart money trap, right? For banging 120.25, right? So not too bad at all, right? So absolutely was perfect, but this ended the day off, right? And then again, the next thing, what's the next thing you should wait for? Again, there's nothing to do in this scenario. Just wait, let price action do whatever it wants, right? You just have to be careful again and monitor what they show the trends, right? Perfect. What's the next thing? Asia range. What should they do if they go higher, right? So you probably figured out. Look at what they do. They're building all liquidity. It's all just liquidity that's been created to the upside. So what can you expect soon? Right, they're doing the same thing as they did in here already, right? They're building liquidity to long sides in Asia. Now Asia is done, right? Faking, and then boom. So here's your momentum candle to the upside in Frankfurt. And then guess what? You can then, again, you don't pull POIs out of your ass randomly. No, you wait for exactly like that. Perfect liquidity creation. Messing around, huge momentum candle right before Frankfurt, or like in this scenario even, you know already, to the absolute minute in Frankfurt, right? And then again, then you look to the left if there's anything which interests you. And you had, for example, this supply in here, right? And it's got missed by just a little bit. So it's perfectly fine. It's just not limited anyways because it's way too big, right? So you wait for what, for example? Just wait until it's get a little bit clearer. You change from the M15 to the M5. And look at this now. This is a gift from the gods. Look at this. Huge liquidity creation. What's our ideal timing? Question in the chat. I think you know it by now. Absolutely correct. London Open, what is the price? And if that thing takes out the liquidity, taps into the overall supply area after creating liquidity for the whole day in Asia, and then even with the momentum, I mean, what can you say? You thank the gods and take it. London kicks in, just took it by a speckle, right? So this is your inducement, tapping perfectly into the mitigation as well, as you can see, right? So absolutely lovely. Then you had already a rhythm break of structures in here, right? So there you go. There goes your just M5 entry, just like this, right? And then again, you technically, it's a little bit difficult to target, as again, be careful, again, if you remember the videos about these Asia ranges, when the Asia low is like the open of the day. There's again a lot of broker feeds that can vary with Asia range. So again, it's just better to just target in these areas where again the liquidity lies at, and not like the day open price where it's just, again, the purpose is that they induce all this trend bias in here, this little equal lows, all that stuff. Again, they're already induced enough to a low set in here with the news, or like before the news of New York, right? Again, now they just want to induce all these buyers. So again, it's best to just target in these areas for, again, just a normal 1 to 5, but again, a 1 to 5 a day, literally all you will ever need. Just tag you in here, literally the one candle after, right? Or like in here as well, if you wait for more patiency, but again, technically it can tag you in right away as well. But if you want cleaner price action, again, comes back once again into these areas, and then you just target into that, right? Absolutely flawless stuff. It's absolutely perfect signature scenarios, and that's all you will ever need. And you already see though, that's where the danger comes a little bit in. They're creating this absolute obvious trend for the rest of the world, right? So again, you can be prepared for them to reverse price action very soon, right? So be careful when you see stuff like that. And then boom, induce the trend high, give the depth shot, hit the target, and then you should hit the road check, right? It's easy like that. Right, okay, so then let price action do whatever they want. You wait for what after the inducement? Again, yes, it's not perfectly hit all the liquidity areas, but again, it induced already all the buy liquidity. It doesn't necessarily have to be always Asia low, especially not if it's a day open price and the Asia low is formed in a weird way, right? So again, you wait for proper inducement low. Again, you let them do whatever they want to do. Right, boom, okay, now even taking out those by just a speckle. And then you wait for, I think I've seen it, random break of structure. Why would you TP here? Again, technically, you can TP right in this liquidity area, so technically now. But again, if it's not clean, it's just better to be paying yourself and not guess. And then let's say you aim for here, right? So what's the difference? It's 1 hour, but you're running the risk of maybe it doesn't hit you. So why not just literally aim into these areas? You know, okay, the worst case scenario, they're going to get into the whole demand area. It's perfectly fine. It's like one risk less, but at least you pay yourself. If you target down there, oh, you have 1 or more, but you're literally running the risk of like literally getting a break even. That's just not worth it. Okay. So always just be a little bit more conservative as well. Asia lows, or like just again, supply demand areas, just to be safe, especially if it's only like one risk difference. Okay, that's not a big deal, right? But now as we have this, again, and the only thing is, still want to trade away from the major inducement. So again, our direction should be long anyways. And all this is on the bigger picture, it's inducing all this trend low, giving the false reaction of a little supply area, right? Again, it played out the perfect signature trade once again. What a surprise, into Asia scenarios. Again, a little nugget for you as well, as Cam would say. Asia midline, very important also in terms of liquidity. And again, you already have in here, what is that? Now, relevant break of structure, as again, all this did is just grabbing liquidity, building liquidity, faking high first, faking the break of structure, inducing high, the trend, just to go lower once again, messes around, fakes the order flow, makes a new lower low into these areas, and now relevant break of structure, right? So this, again, if you don't like this buy in here, it's completely fine, right? This one, and again, the beauty about that one is you still want to trade away from the major inducement. Again, what other areas price action could tag into? Again, the ideal scenario maybe would have been these areas in here. So again, but this is still a little bit far away. So if you want to give this one a shot, you definitely can, not too crazy. And if price action would fail in here, then you still have this lost opportunity in here. So that's completely fine as well. So this one, why is this not a triple bottom? Probably, it technically is a triple bottom, yeah. But again, it's about the intentions that they first building the whole channel low, the whole trend, and then induce the trend high to go lower, fake the break of structure to go lower, momentum kicks in once, twice into technically then these demand areas again, but inducing all this trend to the low side. And again, your scenario is buy. You still want to buy. You just need areas where you can buy from. And the only areas you could buy from is technically these areas. And again, then technically these areas is everything here is done. Right? All mitigated properly. So the only areas, this would be much nicer. Don't get me wrong. So this would definitely be the POI you should aim for. But again, sometimes it's just not that. That's why I'm saying this buy in here would be optional. Even though a lot of us took it, it's definitely not ideal. In terms of intentions, this one would be much nicer. So if you missed this one, not a shame, for sure not, but it would be definitely nice. All right, gave even two opportunities. The first one in here after the relevant break of structure, the second one with the order flow in here, and of course, then you aim higher for minimum, at least the next smart money trap. Okay, that's easy stuff. Again, the best thing is to not overcomplicate it. Again, you have everything you will ever need already in terms of understanding. The only danger you can run into is trying to overcomplicate anything here and be like, oh, I wait for this and this and this. No, see the bigger picture, see what they're doing, see the intentions, and then roll along with that. The price will never always be perfect, but intentions, they always will be perfect. The only task is to identify those proper intentions, especially when they show you a very nice downtrend, then induce it in the wrong direction, induce high to go even lower, fake the break of structure, momentum into a demand area, inducing this overall trend to the short side, trading away from a major inducement. Okay, so this is the most, the biggest intentions, and you just have to identify the intraday way of getting into those. Okay, but again, if you don't like that, not a problem. The next day probably does something similar. What a surprise. It's always the same, is it? Like this. It's always perfect. So again, you have your Asia range, right? Again, what did we cover earlier? Something called Asia mid. Again, when they always come something to an Asia midline. And when technically Asia midline would be something on here. When they're never induced in any direction yet. Again, they fake the double bottom. Induce into mitigation, Asia midline, prepare for the inducement. So you're trading into the inducement low. Again, you want to induce low to go higher, right? So you have your Asia range, you have your double top. To the left, you have absolutely nothing to be concerned of. If anything, you only look for buys. You just need areas, points of interest where you trade into the buys. If you check this mess in here, it's not really that nice. There's no clean point of interest other than if you take the whole demand area in here. Again, this is just not really a clean POI, so you have to wait until the whole area is hit. Then you wait for intentions because they probably will not induce anything low, right? Again, they're already inducing already. If Asia would be, let me get my pen. If Asia would be in these areas, then for sure you would expect something like inducement low of these areas and then go higher. But Asia already is all the way up here. So you just expect this to be induced and then filling the imbalance and trade into the order flow, right? And into the continuation, still away from the major inducement, right? So all you're looking for is buy opportunities, right? Again, what do they want to do before they get into the buys? They want to induce premature buyers. what's the easiest way for them to do exactly that, right? So again, if you go in M5 now, look at that. So they missed like the overall demand areas, and now they're faking what? They're faking the break of structure. So every smart money trader and their sister is jumping into this smart money trap in here. But what is your ideal timing? You should wait for London. London Open, right? Again, if London Open brings in the liquidity. So London Open should bring in the liquidity, and then you're good to go. So not mitigate. London Open should not mitigate an internal liquidity point. No, it should take it. It should grab it, right? So if London Open grabs caps in here, it should induce Frankfurt smart money trap, right? So that's where again, now it's London Open. Perfect. Boom. Just shoot straight through the smart money trap. Every smart money trader is like, oh my God, the break of structure didn't work, blah, blah, blah. But again, now it's exactly that. No one's buying now. They fulfilled their intentions. They stopped out the premature buyers. They faked the break of structure the way they always do it. Again, same thing here. They fake the break of structure first. Smart money trap. They're getting stopped. No break of structure. Boom. That's the inducement. Real relevant break of structure into mitigation. They fake the break of structure. They give maybe the small little smart money trap reaction. And then they induce them. No buyers in there. London Open. They fulfilled their purpose. No one's buying. There's no clean point of interest, right? But the world is now on the sell side. There's no more buyers. Huge momentum. So guess what? What you should wait for? It's always the same, right? For technically relevant break of structures. Again, it's all the way up here though. But that was not the cleanest to take in terms of intentions though, right? But again, in terms of intention was really nice, but in terms of price action, they just never came back. I remember because I even monitored it, but they did not come back. And I just say goodbye. But this would be a very, very nice trade. The only tricky situation here is that you don't getting induced into the small money trap, because again, understand they want to stop our premature buyers before they start the real move. Okay, if you're getting more experience, there's definitely a lot of buy opportunities in here. But for now, just understand the intentions and get used to this price behavior, and don't get into the smart money traps ever again. Okay, always wait until the majority of the world is induced. No one can buy, and then you're gonna buy. Focus only on EURUSD. Not really. Again, we have our lit pairs, as you watched probably in the awakening as well, but we're just covering whatever the whole days. Again, it's just no cherry picking. Again, there's, as you've probably seen, we don't have to cherry pick days or pairs. It's the same stuff every single day. Like it's literally every single day. So for example, we can do one more day and I think it's the same thing. Again, look what it does. So now it approaches the smart money trap. How does they do it? Or how do they do it? With momentum, building the trend. So what can you always expect from a smart money trap? Right? Of course, you expect a little reaction to give them the illusion that this very obvious point of interest going to hold. They're going to short here. They're going to short here with the retest. Right? So again, it's a smart money trap. That's the reaction. That's the false reaction of it, just to smoke them later. If they hold it as long as they can, it makes it better, because again, they give the illusion that this supply area just got mitigated, and they think, oh, great, look at it, continue slower, all that stuff, right? But what do they prepare for actually? What are they preparing for? Now we're on the M15, we go back to the M5. What are they preparing for right now? Right, if you look at this little liquidity point in here, little point of interest below that, Asia low, already creating the little trend thing as someone drew, right? Look at that, little triple, bottom, liquidity, trend line in here, right? So again, what did we also cover earlier? Asia midline, want to induce high first to go lower into the inducement maybe. What a surprise. What a shocking surprise. Again, that's the third touch of the trend line. That leads to direction, right? That, again, fakes the little break of structure in here. But again, what is it actually doing? Just going into Asia midline liquidity to go into the inducement. That's your inducement here. What's our timings? Frankfurt, London, right? We can have a London in here. And we can have Frankfurt in here, right? This is our medium liquidity point. Zeta snatched it. We have our momentum, right? We have everyone excited. We faked the break of structure already. We showed the liquidity. We're building all the short liquidity the whole day. We're coming from the smart money trap. So higher time frame traders think this is gonna reverse here. But what is it really? Perfect London signature, or like in this case, Frankfurt signature scenario, right? So if you even wanted to do it, we can even go into M1 again to show you an M1 example as well, right? So you wait for what? What is that? Coming from the demand area, your relevant break of structure, exactly. So what would be your potential mitigation zones? In here, right? So look at that, beautiful. You can give some much nicer relevant break of structure in here, right? Boom, just taps it, absolutely perfect. And off she goes. It's easy like that, literally. Don't overcomplicate it. It's literally that easy. Again, everyone is in the wrong direction, right? They induce low, medium inducement into mitigation. Trade coming from the smart money trap where all the world is shorting. They induce low with the perfect signature scenario. So you take the long, and again, where can you aim for? Or question in the chat, where can they aim for? Or I mean, already there, like. But that's the minimum target, obviously. It's the minimum target. You aim for Asia high. But again, if you zoom out, again, next target, of course, should be in here. Right? So again, you just wait. Let them mess around with the smart money trap. Of course, they want to fake the false reaction. Again, look how they do it. They're faking the break of structure coming from this fake zone in here. Look, they do it all the time. Again, you're smarter than that already, is it? Look, they're coming from these zones and they fake the break of structure just to induce them. It's all liquidity. It's smart money liquidity, right? Just to go higher. Isn't that weird how they do it? Stopping out all these higher time frame supply traders, like, oh my God, why does this not hold? Gave only 2 opportunities, right? It's always the same. It's always the same. And then boom, there you go, target hit. And then of course, that's how you continue over and over and over again, right? And if you just end it, because you're getting a little bit late, it's the same thing though. So we covered this one. Guess what the next day happened? Perfect signature scenario. It's always the same. Asia range, sideless liquidity, inducing high, faking what? The break of structure to induce low, taking some medium liquidity zones. Exactly, even before that, very good eyes, creating some trends in here, right? Again, creating the what? The triple, quadruple tops, like 1, 2, 3, 4, 5 times tapping in here, like breaking out finally out of the quadruple bottom, like 1, 2, 3, 4 in here, Asia low, getting induced, right? Then again, retest in here, induces low one more time. It's the perfect signature scenario into the buys, into the next liquidity zone, right? And then again, as we marked it, let's zoom out a little bit. What a surprise. Takes the triple top liquidity with a huge, unexpected Federal Reserve announcement or whatever that was, right? Like, so surprising. What do they leave though? They stay right before our point of interest. We literally only had marked, like whatever, week before, right from a perfect inducement point of interest. And look what that is. And that shit was absolutely gorgeous. Look what they did. Same thing. Asia range, what do? Creating all the liquidity to the high side, faking the double top, faking the break of structure, mini baby one though, right? Inducing high once again, inducing the double tops with speed. And then guess what? Obviously in here, give the reaction into mitigation. And then obviously, if you want to wait for the relevant break of structures in here and stuff like that. And again, here was your continuation trade. In here was very close though, right? And then of course you aim for the next liquidity area, which is the triple bottoms, and that got snagged literally this Friday. But it's that easy. It's literally that easy. You just have to identify that. Again, how many signature setups do we have just in EU? Literally this week. Like 1 perfect one, 2 perfect one, 3 perfect one, 4 perfect ones. This one is a little bit challenging, but the rest is absolutely perfect. Before that, absolute perfect one, absolute perfect one. Like, what? We didn't even mark the rest of the trades in. But do you see the abundance of just literally signature scenarios? Like, what? Yeah, but this is just, again, the price action playoff happened this week, technically. Absolutely gorgeous. Like, flawless freaking shit. Just looking at signature scenarios. Absolutely insane. Okay, what's the question there, Oscar? Okay, I
Ryan,
think
if you don't mind, sorry,
Of course.
sorry for interrupt. On here, for example, I was looking for the cells on here before because this, okay, I saw the inducement on here. I was waiting for this area to buy,
Yes.
and it creates like equal lows on here, and I didn't, like, I said, this is the confirmation for this signature here. I saw, and then it took me out, and I didn't look for this one, for this area, because I said it's not so obvious.
Okay, so yeah, look to the left always, right? And then again, that's the most important thing if you look at signature scenarios. Again, if you're trading straight into an equal highs and stuff like that, right before like big news events and stuff, Federal Reserve, whatever numbers they released, right? Again, you should be very, very careful overall. And again, if anything, this one would be a trade, but then you should minimum get on break even, right? Again, this is not, and if you get the buy, again, also see the liquidity different. Try to see it, not like equal lows in here. Always go from left to right, right? So from left to right. The liquidity is getting grabbed here with the signature scenario. What's the next point of liquidity? Trend traders, trend traders, trend traders. They're already getting induced to low side, right? So this is, again, just the fake break of structure to go long into the liquidity on a bigger picture.
Yeah, probably, Raymond, sorry for interrupting again. As I told you, like I was waiting on here, this area, because I see this as a relevant, so I take this one. But
okay, you wanted to trade this one into here and then into the, okay, this is obviously the Mona Lisa perfect scenario.
Yeah.
Right, so you can't, but then you have to be aware you're trading the smart money trap and potentially, okay, you want the inducement to get induced once again, because this is technically what it is. It's the 1, 2, 3, 4, 5 touches into the inducement, into smart money trap, faking the smart money trap reaction you've been in, and then just continues higher.
Exactly. I wasn't break-even on here, but it took me out, and I said, "Oh, I didn't see the."
Okay, but did you zoom out then at least and understand, like, okay, what they did here? Just grabbing the triple tops.
Yeah, I was looking to take the buy from there. I was like, I am so happy with what I learned, so I was selling to buy, but I failed it.
Okay, but at least you understand the intentions, though, is it?
Yes, sir.
Okay, that's perfectly fine. As long as you understand that, it's all good. But then again, yeah, this one, I'm not sure if you caught this one. This absolute Mona one. Did you had monitor that one? Oscar?
Sorry, I was on mute. I almost got it, but if you can make this on 5.
Sure.
And sorry, I was waiting a little bit more, like on here. and I didn't take it.
Oh, okay.
I saw this like the perfect confirmation. I see this liquidity. I saw that part. This was not so relevant for me, so I didn't take it. And I was waiting for this area just to check. But it didn't happen.
I mean, it's good though. You're getting very close. Again, trend line, go from left to right, and then left to right, obviously. 1, 2, 3, 4. How clean can it be? Into inducement, into the order flow, away from the obviously mitigation of the higher time frames to the left, right? Away from the signature scenario, into the perfect POI, and then obviously continuation. And that next entry obviously would be in here, but they missed that one. Right, but always see where they're building it. When they already created the quadruple top, that's the inducement. You should not wait for another inducement. Okay, always try to identify liquidity internally. When the inducement, then look to the left, and then look for viewpoint of interest, and then look to the left if you're playing in line with the overall picture they're going to show. And again, overall, is you had the shorts anyways perfectly marked, absolutely amazing. Then try now the next step you have to do is just analyze internal liquidity so you get the POIs right. Okay, so again, get the equal highs, see where they're already building the trend, see where they're already faking the break of structures, right? And then obviously the moment they induce it with speed as well, into mitigation, away from the bigger picture, and then into the next target. Okay, similar as you did here. So you played the internal movement here, but you played the smart money trap. Again, we do it all the time. It's just getting a little bit tricky. If you don't understand it's a smart money trap, that's when you're getting smoked, right? But if you know it's a smart money trap, you play it much differently.
Yeah. Other part, Rain, if you don't mind, sorry, I talk too much.
It's a Q&A. That's why we're here, so it's all good.
When I trade a lot, Asia. I trade a lot. I trade Asia a lot, so probably I didn't take this because it was maybe so early in the moment that I was in front of my computer. But again, like when I saw this in the morning, when I wake up, the inducement on here from Asia, I was super clear, like all of those are like the trend lines. So that's why when I probably if I check MM15 on here, I will check it. But I was so focused on 5 that I didn't.
Not good. I see you have already good intentions, good intentional identification. That's very, very good. Give it a little bit more time. I'm pretty sure you're gonna smash it pretty hard. Love it. Yeah, but Asia is not ideal to trade. There's definitely a lot of opportunities. You have a few people trading only Asia. But again, the session to go for is London, of course. But yeah, if you play Asia, you just have to identify the internal liquidity. It's the same thing. It's just a little bit more tricky.
Yeah, I can show you some US30 trades that I did in.
Oh, okay, in Asia. I love US30. I mean, US30 is my absolute perfect favorite. So yeah, like, Chichi, stick to US30. Absolutely gorgeous.
Thank you.
Okay, let's go into some questions from everyone. Let's see. Not sure, Cam Suckber, if you answered a few questions already in the chat.
Hey, Reem, I've got a quick question. Sorry, it might be a bit dumb.
There's no dumb question.
I'm based in London, so do I need to change the UTC1 timing, or does the Asia range will automatically adjust it with this indicator provided?
Yes, so the indicator you have that always auto adjusts, so you don't have to worry about that, right? So it just use the boxes we have, but then London for you, as you are in London, is always 8, if that makes sense.
Yeah.
Right, so you don't have to make any weird calculations.
No, that's fine.
So your London Open is always 8, regardless of what the world does.
Yeah, no, that's fine. That's fine. So I don't need to adjust any to German timing to confirm.
No, you don't have to actually. No, it's completely fine.
Thank you, bro. Thank you.
So New York examples, again, you should look for, again, if you can, try to still orientate from the signature scenarios and then look for these continuation trades. For example, if you have major inducements down there, right, you're coming from a London signature scenario. And then again, you should understand what London tried to do, what the whole session, again, it's always the opposite. Look what Asia does, where they building liquidity in what direction. then wait for the inducement. Always wait for the fake breakout structures first to get the early sellers or buyers in, right? Then wait for the last death blow and then trade in the other direction. Same thing for New York. It's just a little bit more, I would say, less step-by-step structured. That's why we show you the London signature trade, because this is just super freaking clean in terms of 1, 2, 3. I mean, you have the checklist, obviously, of how you should do it. New York is just, again, you have to identify the liquidity is built internally. Then when it's getting obviously taken, and then you trade away from that as well, in line, or like obviously away from, or like in line, depending on where you medium or major inducement is for, and also your minor one for the day, and then try to trade either like counter trend if they already achieved the overall goal for the intraday target, or continuation setups. They're very powerful if you have not achieved the main objective of the day of the liquidity grab yet. Okay, so it's a little bit more tricky, but definitely a lot of love. I mean, lately I'm only trading New York, and I mean, for me, I love Frankfurt and London, but New York is always fucking clean as well. So it's just a little bit more tricky. So if you can start with London, that's how you obviously show you the London signature trade, because it's much easier, much clean to take than New York setups.
Sorry, Ryan, can I ask a question?
Of course.
Which is not connected to the awakening or weekend, about vector candles, or it's for the adventures only?
Yeah, so of course we have like our flagship program with the adventure. I think, when do we cover vector candles, Cam? Is it like in chapter 3? Something like that. So yeah, it goes a little bit more into details. Yeah, when you don't need it, you have the intentions already. Well, yeah, it's just a little bit more details about like how they, of course, deliver price action, but it's not needed for your understanding. You have everything you need to know.
Okay, thank you.
Hey, Reem, can you hear me?
Of course. Beautiful voice, even. There you go.
Thank you. Can you switch to AJ, Euro GPY?
Of course. Euro GPY?
Yes.
Don't even have it on there. Okay, let's go. Okay. Yeah.
All right. On today's day, I thought I would catch a signature trade. Yes, on London Open, where a relevant break of structure happened, but maybe on London Open on M1.
Okay. So again, if you already see in here,
yeah,
that's not the best. That's why we say wait for technically the M5. So exactly stuff like this doesn't happen, right? So again, you already see in here. Be very careful of like jumping into those prematurely. Okay, so this is like, again, grab the liquidity, wait for the next proper inducement mitigation, which is all the way down in here. Again, this is not really inducement mitigation, is it? This is just a smart money trap. Yeah. So you unfortunately tapped exactly in the smart money trap.
Oh, I didn't see that.
Right, so again, it's always the same. Wait first until they tap into the smart money trap, then they give the fake reaction, get into the proper POI, which is all the way down in here, and then it was absolutely perfect.
All right, now I see it.
So go for the inducement POIs, not like the random ones, especially if you have like coming crazy movements, like, again, nothing really going on here, just inducing high to go low, momentum going into smart money trap, into the actual point of interest, and then it even came, unfortunately, twice in here. Otherwise, it would be the absolute perfect. So I did not take that one. But this one would be the absolute perfect one if there wouldn't be this weird triple bottom in here. But again, be careful about the smart money traps. That's what they're building. It's getting, at the beginning, that's unfortunately going to happen to you. You're going to tap into smart money traps a little bit until you get used to it.
All right, got it. Thanks. I have 2 general questions, if you don't mind.
Sure.
The first question is, you said in the Awakening video that we have to watch out to B-book brokers. And my question is, what broker would you recommend to us?
So, I mean, I can't give like straight broker recommendations, but if you just don't listen to me right now, it's not a recommendation, but IC Markets, for example, is one of the best. Like, they're very reliable. If you're in the US, depending, we have a lot of people from the US, they trade fusion markets. But yeah, I mean, obviously you have to do your own due diligence to see what broker fits you best. Just stay very far away from Bieber brokers. All these like very high leverage, like give you withdraw deposit bonuses and shit like that. Stay far away from that shit. So yeah, if you can, go with IC. If you can't, then technically also prop firms is a good way to go for it. Funnily enough, but then open still your own brokers with. Yeah, again, your own diligence, but yeah, IC is for sure like the way to go.
All right, got it. Thanks.
The second question?
The second question was, do we ever think this strategy could become a retail model in the future too?
I love this question. So I would say like a big no, because like even when you look at smart money is like a big hype, like ICT this and this. Again, credits to this guy, amazing guy, have to love him, what he does to the industry. But even if you look like 10 years back of charts, it's the same price movement. There's still smart money traps. It's still the same exact thing. But what never ever can change, they have to bring in liquidity. So if they can't bring in liquidity, there's no price movement. So they have to give people the reasons. And again, you have the main reasons people have. It's trend lines, breakouts, break and retest, support, resistance, and obviously smart money concepts. And if you just identify those main liquidity providers, then again, how can our strategy become retail? Again, maybe this one in here, again, maybe 0.1% of traders know about. Smart money is obviously, even smart money, it's not that common. Even though you see it on like Instagram left and right, but it's not that common. It's probably still only like 1% of traders of the whole world and institutional that trade smart money. There's banks, big institutions. They trade freaking breakouts. It's not a joke. It's literally what it is. So before our strategy becomes retail, the whole price action would look completely different. Probably they would fake much more like quote unquote relevant breakout structures. But guess who will be the first person who's going to find out about that? It will take us literally 1 week until we discover, oh shit, something is different. And then of course we're gonna tell you. So, but this is like years ago. Again, and the other thing is what people don't understand as well. Again, our community, like in the flagship program with the adventure and all that stuff, we have some pretty big fishes in our community. Again, we have hedge fund managers not trading like small money. Ourselves, we're not trading small money. So and even that makes absolutely zero impact to the market. Zero. So again, there could be like 1 million people more of us trading it, and it will still not have a big impact. So yeah, you should not be worried at all. It's all good. And if something changes, then we're gonna tell you obviously the moment it happens.
Perfect. Thank you.
Hey, I have a quick question. Can you guys hear me?
Of course.
So I'm trying to understand just how to balance out like higher time frame perspective versus like inducement. So if you go to GU, if you could switch over real quick. Like if you look at just like the daily, for example, we have like pretty clear like equal highs like on the daily perspective, but it's like how do you balance that out versus like, oh, like we just hit a supply area versus those equal highs will get induced. Like how would you recommend to
so like just to give you the straightforward answer, like we suck at swing trading. So I'm the worst person to ask about swing trading and higher time frames. That's for your intraday traders. So none of us actually, I'm not even say we have anyone in the community who does like higher time frames just for the pure purpose of like, we tried swing trade. It's not like we didn't try, but it's just not beneficial for us. As again, we had too many break even with like big positions that we just close everything intraday. So like I'm the worst person to literally give you higher time frame advice. So I have to kind of disappoint you in there. But overall, it's pretty similar in terms of like the lower times. Again, it's technically the same thing. You just have to wait much longer. And the opportunity, I'm not sure why you only want to string trade, or is it just like a directional thing? You just want to understand the overall direction a little bit more.
No, I'm not a swing trader. It's more just like for direction to like understand going into the day, like which direction are we more likely to.
So I would recommend you then just only go from the 1 hour and then do the analysis the way you do it, like kind of on the lower times, look where the liquidity is, where they actually induce in what direction, and then again base your intraday just on the bias of the high time, but still trade the intraday cycles, that's much more powerful, because again, you can have the craziest higher time frame long trade and then still a perfect 5M short signature scenario. So again, for us personally, that's probably not what you want to hear. Higher time frames is more distraction than it is help. Because if you just look at the M5 plays, that's literally all you will need to find like multiple really good quality trading setups on literally a daily basis. So for us and our students, literally, again, we're doing this stuff for like years. It's not that helpful to combine it with higher time frames that much. That's why we don't do it. And that's why we try to even show you the way you should do it on a M5, H1 and M1 perspective, and sometimes M15. So yeah, if I can give you a recommendation, then try to learn intraday more. It will actually help you way much than a higher time frame bias.
Yeah, no, that's complete sense.
Oh, I think your connection's cutting a little
bit. Hello, Reem.
Yeah. Is it my connection or is it like almost?
No, I can't hear.
It is.
Okay, so perfect. So I can hear you, Mohammed.
Hello, Reem.
Hey.
Just got a quick question. You mentioned that US30 is probably one of your favorite pairs to trade.
Sorry, which one?
US30.
In 100%.
Yes. Is it possible for you to just go over the strategy maybe on 1 or 2 days for US30? Because US30 moves quite a bit in a day, and it's always been, I've always wanted to try and trade it, but it proves very difficult, especially with the 5-minute time frame because of the huge movement. Could you maybe just demonstrate maybe 1 or 2 days?
No, I mean, it's literally basically exactly the same. You just have to watch out for like these crazy New York movements that happen. Because obviously US30 is like highly based on like New York. That's why the signature scenarios are like you have to close them intraday, because usually they're just getting smoked left and right. For example, again, we had this perfect intraday, like absolute gorgeous one, like even on 2 sides on first, and was it Wednesday? Was it on bottom? Yes, it's Wednesday actually. This one was beautiful. Again, we have this very early intention to hide. It's the same thing. Always watch what Asia does. Same thing for whatever pair or what currency or whatever you look for. It's always the same. Wait for your Asia range. Again, what do they do? 1, 2, 3, 4. Have this wick pre-Frankfurt even, right? Before they even do that, what do they show? Of course, the fake break of structure, just to induce Asia range. Again, not the best point of interest by any means, right? So this is probably very hard to take. I'm not sure anyone took that. I did not, right? And then, of course, you aim for minimum Asia range, wait for your next little target. You have to identify your proper inducement zones. And these scenarios, you don't have any, right? Again, you only have this crazy trend forming, getting induced over and over and over again, right? So the only thing you do is, of course, you aim for the next supply area, demand in this case, right, which you had in here, right? Again, there's no inducement point of interest, even that it's not, right? So you go with the actual intentions. As you can see, they just choop everything to the downside. Same thing, what's your ideal time window? London open, right, as always. They tapped in before that supply demand area before that. Then you wait for, you can do it like this, right? On the M1, you wait for what? It's always the same for your relevant break of structure. You go for your extreme, and here's your perfect entry. It's the same exact stuff on, it doesn't matter what chart you trade. Even if you pull up a corn chart or whatever, it's the same freaking thing. A rice chart would be the same. Again, you have your internal liquidity with the little quadruple bottom in here after the break of structure, after the whole world is getting induced to the short side, after momentum, after you tapped into the demand area, after you took out Asia range, after you had your little medium one, if you want to consider it, right? And then internal liquidity into the extreme mitigation. That's your trade. And obviously you have your targets. which is, of course, as always, the next liquidity zone, and then you should be out, as again, I think at this day was like news before. But again, as you saw, it's the same exact. Again, it doesn't matter what pair it is. If you don't have to cherry pick any shit, again, we just recommend you to stick to those. And again, you can add EJ. I'm not sure why I don't have it on this watch list. But yeah, and also EG, by the way, Cameron's most favorite pair. It's absolutely amazing. This thing is absolutely a Mona Lisa printing machine, actually. Okay, I think I'm going a little bit more into text questions because I don't want any people to miss out or something. Okay, let's just see. Okay, I probably missed a freak load of creation, so please don't shout at me.
Thanks for the explanation, Reem.
You're more than welcome. So major inducements, again, technically look at higher time frames. Again, technically, as you already seen, it also can be M5. It just has to be very pure intention based for even, for example, like that. Again, I would not really consider it major, but just think about it. Okay, so you have 1, 2, 3, 4, 5, 6 touches. Then the news even takes it out. Then a pullback, then another news, whatever Fed release comes in here, takes it out again. So this can technically be classified minimum, medium, or major. It's also attention based. It's not that, oh, they take out equal highs on a 4 hour. It has to be major. No, it also can be medium. It doesn't really matter too much, right? Again, it's more intention based of what they show, how much effort they actually put in to show these zones, and then you trade away from that. And if it comes back in these areas, use your perfect point of interest and you trade for the downside, right? But again, always identify the intentions, what they do, faking the break of structure, trading all the small point traps here and here, just to take everyone out again, pull back, take them out once again. There's 0 sellers in there, 0. They can't sell. No one's selling here. That's why they perfectly can just drop out of the heaven. And then when they come back into these areas, which they did the next day, that's your perfect area of interest, point of interest, you trade away from. It's the same thing. And then, of course, you have your double bottoms, which you aim for to take out and then expect the pullback. Same thing. Next day, absolutely same stuff. You have your liquidity in here. You have your Asia range, right? The only thing we don't have in here is a fake break of structure to go higher and then taking the liquidity. So you just decide to just rumble it up, take the liquidity in here, and then obviously in London, just stupid, make the new lows, and then just end the week off in here. Yeah, and this is, for example, for the ones who are trading Asia, for example, the absolute perfect ones. Was it Oscar? I think it was. And you have, again, these little sideways creations, again, this little liquidity points in here, right? Then with speed, they come and take it out. They probably give you some relevant break of structure in M1. Then they're going to retest it, and then obviously they gonna get for the next liquidity target. So it's the same thing. The moment you identify those proper liquidity plays and how they do it, you're literally free. That's it. It's literally the cheat codes, as you've probably seen in the Awakening. Can we go over AU this week? I'm not sure if we can. You're already 1 hour in, but it's the same thing as I showed. Like, again, it's the same exact thing. It doesn't matter what pair. Again, I think in even in the Awakening, we show you a variety of pairs and all that stuff. Yeah, this is very clean as well, Oscar, is it? Especially, again, there's not much you can do wrong here. Not literally. Again, you have your medium inducement. You have the liquidity being created. Again, they're faking one push more, one push more, one push more until what? First time, they literally give you a relevant break of structure. After, they grab the liquidity and just faking. And then, of course, they tap back into extreme demand. It's the same thing all over again, as always. And again, they create a little, again, not the nicest thing, but a little trend in here. 1, 2, 3, 4, 5 touches. Induce it low to go higher. Always the same. It's literally always the same.
Hello.
Yeah, loud and clear.
Yeah. Hello, hi Reem, how are you?
How are you?
I'm good. Perfectly fine. Yeah, I wanted to know, I have submitted purple ticket, okay, but I haven't got any response from your team yet. So what should I do?
That's on purpose though, because again, the purple ticket is just your invitation because you have the foundations to again get into the whole overall. I mean, just let me say it like this: you should have enough. Period. Right? Again, the adventures for the crazy ones who just again are maniacs and want to dig as deep as they can. Again, yes, there are people like that, but you should have already, as you've seen, everything you need to know. But again, with these foundations, of course, you have these foundations to go deeper, right? So you have invitation. We made the adventure completely private only, invitation only. So again, no one can literally get in there anymore for quite a while. So again, but you having the foundations, as you already are part of Lit, again, we want to work with you guys on a deeper level as well, if you want as well. If you have enough, perfectly fine. Or if you have everything you need, it should be like that. But again, for those maniacs who want to go deeper, of course, we will not leave you hanging here, right? So, but also keep in mind, practice, backtest, and get results first before you consider getting into the adventure, right? Again, you should have a lot of good knowledge already, right? So again, you should not need us anymore, if that makes sense.
So can I practice on a funded account?
I mean, depending on how good you're already, if you're very comfortable and very confident what you do, and if you're getting the trades needed already, then of course, but if not, then practice more until you get it. Get very comfortable first, very familiar. Otherwise, I would not recommend you to do that with your funded account.
Okay, sure. Thank you, Reem. Thank you. Have a great day.
Welcome. You as well.
Thank you.
Can I have a question?
Of course.
If I want to make a simple step-by-step process for myself, how many and which confluences you suggest me to stay as simple and consistent as possible?
Can you trade London?
Yes.
Okay, so then first try to go for the pre-written checklist we gave you, right? And then if you want to extend it, just add more liquidity types into it. Identify where the liquidity is induced. First of all, where they build it, right? For example, where's my pen? So let's just say, for example, you add in here, okay, they show the equal low. So you add, for example, a checklist, do they show liquidity and fake it in one direction? Then you check, yes, perfect. And again, what is this? A little breaker as they have like 1, 2, 3, whatever, if you count that in. If not, it's also fine, but you technically can count it in. Breaker getting induced first. What is it? Minor though. So you check in minor breakout. Perfect. What is this? Medium breakout. So you check this. So you show the liquidity. You have a minor breakout. You have a medium breakout, right? You have a trend forming. So you check it. Is it a medium trend? No, it's a minor trend. Where's the medium trend? It's more like this. It's not sure if that is too nice though, but you can also check it. Then you check the momentum going on. So you check it. Then you check the medium breakout. We already have that. You check the timing. If it's Frankfurt London, yes. You check the breakout structure, the relevant breakout structure. Boom. You check the mitigation, M5. You check the M1. Right? You check the higher times. You trade away from a proper zone. Check. So there's a lot of things you can add in. It's depending on how much you want to make it easy for yourself. But at the beginning, I actually recommend you to stack it up as much as you can, because I can promise you, if you look at myself, Cam or Sokpa, for example, our markups, they look pretty empty, funnily enough, because the moment, again, you already heard it in the awakening, the moment you can see it, you just can't unsee it anymore, right? So, but at the beginning, it's very important that you train your eyes like a maniac and checking everything you can, identify all the liquidity, all the intentions, all the targets, what they want to do. Same thing for targets. You can check that in. What's your passive target, for example? Oh, I aim for mitigations. Or you want to trade aggressive. Oh, now I want to take out a structure, for example. Boom, that's obviously more aggressive, because how many times, for example, they get into these areas and then they pull back and give you a break even, an unnecessary one. So you have to choose your targets, your entry approaches. Do you like executions? Do you like limits? Obviously, you should not trade stop orders. You should stay away from them. Do you want to like to trade off the inducement, or you try to let into an inducement? Again, you can also trade into inducements. My personal favorite is to trade into inducements. What does I mean by that? Let me just remove all this mess in here. But I hope this is clear. I just talk a lot. If you ask me questions like that, don't do it because I will waffle the whole day.
Right? I like it. Okay. That's when I learn the most.
Okay. Right. So if, for example, if you have Asia range in here, right? Oh, okay. Let me redraw it again. Let's say you have Asia range and they're creating like this quadruple tops in here, right? And then they do something. Let's make it like this. Right, and then they make something like this. So this is Asia in here, right? And now you're getting into Frankfurt, and then they're inducing low. But obviously, you see 1, 2, 3 tops of Asia high. I just love to take this trade into the inducement. But obviously, your London signature trade is up in here. But you, of course, can trade a buy into here into the inducement. This is more like advanced though. For example, my personal favorite trade for US 30 would be this buy in here. This buy, again, you're trading straight into the equal highs, or like these highs in here, right? Into the mitigation. Again, they want to fake the reaction. You trade into the little target, and then you take the short right after. But this is like the way you want to trade if you want to wait for the inducement, or if you want to trade into the inducement. I personally just love the into the inducement ones because, again, you open a trade and then just chup it. Again, imagine now the other way around. Because how many times do you try to catch a reversal? And now think the other way around. How nice is it if you, if the try to catch the reversal is actually your TP is just getting higher and higher and higher, right? So again, this is a very good feeling in terms of like, okay, you don't have to guess the reversal, quote unquote. No, you just actually are in the move of the inducement. It's usually a beautiful, just chuping scenario, if that makes sense. So yeah, I just love these trades. So again, more experience you get, the deeper you can dig into that.
Yeah, thank you. Can I have another question, please?
Of course.
As I'm a really beginner, you suggest like having a daily target, or yeah, like a daily maximum R or daily maximum trades to take?
Not sure if I understand your question correctly. You're talking about the target's price action wise, or like what target?
I mean like
the trading plan, I mean.
Yeah, taking like a maximum 2 or maximum 3 trades a day,
okay.
As I'm a beginner.
Okay, so what you should do, and not only you, but everyone in here, so you build a buffer for the day. So you don't start the first trade of the day with a 1% risk or something like that. No, you start the first trade for the day with a 0.25 trade. Or again, if you're getting very familiar with the signature trades and that's the only thing you're going to trade, you can trade with 0.5% or like up to 1% max, right? But again, the best way to do intraday trading, your first trade for the day is your buffer trade, and you close it at 125, 126, something like nothing too crazy, and this gives you the buffer for the rest of the whole day, right? So if you start with a less risk on the first trade, it's way less stressful. Again, you don't FOMO so much as well. It's just, again, you take a very low risk trade with a very confirmed setup, and then the rest of the day is literally perfect. As again, you should be up for the day, and if you mess it up for whatever reason, it's also fine because you risked very less, and then you can risk whatever. If you risk whatever 0.25%, you can do that 4 times again. You should never fuck up 4 times in a row, to be fair, but just in case, then you still only, quote unquote, only end the day with -4, but -1%, which should never happen to trade 4 trades in a row in a loss again. But again, this is the way you should get used to it. Build these buffers for the day. That's why, again, I told you I love this Frankie trades, because again, I start the day with trading into the inducement, and then this gives me the buffer for these crazy extreme reversal trades you've probably seen left and right on instant, blah, blah, blah. But again, you should only trade anyways these quality signature trades, and then start with less risk, then build the buffer for the day, and then move into that. So for targets, again, start out properly. If you're consistently catching 125, there's no way in hell you will not be maxed out on every prop firm possible. How? If you're consistently trying to catch 1-5s, the problem is people try to catch consistently 1-100s with a 0% loss rate. That's why people don't get it right. Okay, so learn the process, learn with less risk, with quality setups. Don't go into the 1 minute. That's why, again, we don't show you too much 1 minute shit on purpose. You should not dig into the 1 minute over and over again and get these unnecessary stupid losses. No, M5 is all you're going to need. This is good for 1-5 quality freaking trades. And how many trades of those can you get wrong in a day? Not that much if you trade quality. Right, so it's the very best way to trade because you have daily opportunities, but it's very hard to fuck it up actually. Okay.
Thank you so much.
You're more than welcome. Okay, guys. So we're 1.5 hours in.
Can I ask one last question?
Of course.
So, should we wait for 5-minute relevant break of structure, or the M1 is enough?
Yes, so a very good question. So I would highly recommend you to start with the M5 first, because again, if you're not used to the fake breaker structures on purpose, again, the fake breaker structure is actually sometimes 10 times nicer than to have like one relevant breaker structure and that's it. Because again, the structure is the most efficient way everyone gets stopped, right? Because again, it doesn't matter what strategy they trade or let build. They look for these structure breaks, for direction, for confirmation, whatever. So if you're not used to the concept of like fake breaker structure first into the proper inducement, then relevant breaker structure, stay at the M5 because it very rarely happens there. It happens a lot on the M1 where they fake first a quote-unquote breaker structure, then make one push higher to stop the lower time from people first, and then they go. And additional to that, let's say you have whatever, this price action on the M1, right? And let's say this is your relevant structure, perfect. And then you enter it here, perfect, that's good. But then what does M5 usually do anyways? They come back here anyways and then mitigate something in here. So it's just a delay. Always the M1 entries are like better, closer, like tighter for the risk reward as well. But usually the M5 comes back anyways and gives you the proper entry. So I would highly recommend you to wait for the M5 first until you're getting very familiar with it, and then you can dig into M1s. Not first. If you dig first into M1, not good. Not good, because you will get a little bit confused and then it's not a good journey. So start with the M5, get very familiar, very confident, make your backtests, make your practices, and then when you're ready, when you truthfully caught a few very good ones on M5, then you dig into the M1.
Got it. Thanks for the answer.
Perfect. Lovely. You upcoming legends. That's our Q&A session, I would say. A lot of questions, a lot of things we dig into it. Again, technically, you have everything inside the vault. Also, we will record this recording will be in the vault. So no worries. If you want to rewatch it, everything will be in there. Yeah, but I think we covered a lot, a whole week of EU's price action. But again, use it also for literally your mind. You have everything you need to know. No need to go crazy on the M1 or 30 seconds or whatever. Take these freaking quality trades. Be patient. Again, you paid to wait, not to freaking trade. So don't look for these opportunities. Wait for them. They will come, as you see. Look at multiple pairs. And they literally, you will have one picture perfect scenario where you can take your 1-5, 1-10, whatever it is, get a normal target in, don't go crazy, don't aim for the fences, pay yourself, be consistent with it, and build a proper foundation. Okay, that's all you will ever literally need. It's crazy, okay, literally. So yeah, with that being said, greetings from the Wizard, Cameron, and the Queen Suckber. Even though they did not say too much because I'm just waffling, so sorry for my waffling. So Cam, Suckber, if you just want to say a few last words, so I think it's good.
Oh, sorry, I was muted. Hello, can you hear me?
Of course, beautiful.
Yeah, I mean, like Reem said, you guys now have everything that you will ever need If you want to go crazy and dig into further stuff, the biggest thing that I can recommend is don't jump into more before you understand what you already have. That's like the worst thing you can do. What you have should build your foundation, like your house, right? You make a really solid foundation and then you can build crazy shit on top of it. It doesn't work the other way. You don't build houses on sand. That's pretty much all I got to say.
Exactly. So focus truthfully on that foundation and you will be literally set. I mean, this is shit that will set you literally for a lifetime. Again, like it took us a fuck lot of time to like, yeah, even get this and then build like proper processes. And now it's just, again, a perfect step-by-step process where you can follow the checklist as well. And obviously the signature scenarios. But yeah, it took us pretty long. So you took a good shortcut, but don't make it a shortcut. Make it a proper, efficient way to build your foundation. Okay. Again, everything you need to know. So take advantage of that madness. And again, make a proper, as Cam said, foundation. You will be set forever. The last thing though, again, if you want to support us, because of course, we would love to see your feedback as well about the overall process, how we did the awakening. We've spent so much freaking time on the vault. Again, the questions, the exams, all the templates and all that stuff you guys getting. Again, a lot of work was dedicated to that. So of course, if you want to give us a little help, whatever, a little gratitude stuff, of course, we have like a trust button and stuff like that as well. We would always appreciate that. It always fills our hearts with pleasure when we see you guys are happy, because that's why we're doing it at the end of the day. Again, to help you guys not to have this freaking pain we had to go through, and yeah, make life and trading a little bit easier for you guys. So if you just want to give us a quick thank you there, we would highly appreciate it. If not, it's also fine, completely good as well, right? We still love you guys. And yeah, I would say enjoy the weekend. Beautiful week. Again, the recording will be up probably at like this weekend most likely, so you can retest or backtest the examples we went over. EU, I think we had only this one US 30, but the whole week of EU. If you want to backtest them and get a little bit of practice done, so should be up during the weekend. And yeah, with that waffling, I would say enjoy the rest of the week, and I would say, and yeah, catch you legends very, very soon. Very happy to have you guys, and have a good one. Cheers, cheers, kisses, kisses from the whole team. So have a good one. Cheers! And there we go. Congratulations for reaching the end of week 1 successfully. And I hope you took a lot of great nuggets out of it and don't get confused too much of what's going on already. It should be a lot of eye-openers, aha moments at this point. But guess what? It's literally just the beginning of something beautiful, right? So make sure to revise everything greatly. We give you some tasks and some summaries also, so you technically understand of where you should be and what you should have grasped at this point. So what you should understand by now. If not, then go back and again see where you got a little bit missing, right? So first things, there is most likely a big market correction coming very, very soon. Like again, could be the next few months, could be the next year, we don't know. But again, if you look at the real numbers, there's definitely something cooking up, right? So we have to be aware of that. And of course, we have Cameron and Super with us as well. So if they want to add something in, just be aware that they can scream into it as well, right?
Of course, of course.
There we go. Right, so be aware of this, that there could be a recession right around the corner, and you will have the skill set that will be recession proof, and you will have a huge advantage over technically everyone. Because again, if it hits, if it doesn't hit, it doesn't really matter. Or if it hit, even after that, you have concepts and techniques which are literally recession proof. So that's a huge benefit right there. Then we dig into the aspect of money, what it actually is, of how they're printing it left and right like absolute maniacs currently. That of course they try to show you numbers of inflation rates which couldn't be further from the truth, right? Of course, it should be even higher, even if it's the highest out of a 40-year number base. It's 8.5% officially right now, but of course, it's technically even higher. You could do the math yourself if they're printing literally money where they can, like it's crazy, trillions of dollars and other currencies being printed. So of course, that cannot be sustainable for much longer, and of course, that's where the market has to correct itself at some point. But at least you got also the understanding of what money technically is, of how they use it against you, of how they connect emotions to it, of how they literally trap you in the illusion of money, and how they literally use it on a daily basis against you, right? And of course, most importantly, of how they use emotions against you, connecting with the money, right? So again, FOMO, greed, the fear of missing out, like technically the FOMO again, or the fear of losing money, that's all stuff, of course, that affects you big time. Then we dig into how the market is technically controlled and manipulated. Of course, the individuals you got also introduced to, like the architects, of how to do it, of how they're having the scientists, they know exactly how the market works, of what people trying to analyze in the markets, the psychology reasons behind it, and of course the syndicates behind it, like knowing all the data points of what the actual numbers look like, or how the actual numbers look like, and they're putting all together and put in the machinery that delivers the market. And we just call this machinery the enigma. Why the enigma? Because of course it encrypts the intentions of what's actually wanted to achieve in the market, which is of course making money. Don't make sure that you don't make money, trick you into positions, stop you out, like attack strategies. Then at the end of the day, keep the market in balance and keep the wheel spinning. And we dig a little bit into the mitigation phases also, where the market has to be fairly delivered, right? And that's why the market sometimes comes back and fill these inefficiencies all the time, right? Then there are, of course, these entities that influence the market big time. Architect, we just covered it a little bit, and of how these retail strategies and also smart money strategies, of course, are literally, quote unquote, man-made, and of how they induce these people and systems and overall strategies to get involved into the market. Also, always be aware that your money, other people's money, companies' monies, hedge fund monies, whatever money it is, it's only getting activated when they push the button of activating a buy or sell. And of course, to do that, they need a reason to do so, because nobody would throw in the money into the market and just give it away. No, of course, they need a solid reason, a solid strategy they think that works. And again, if they show a trend line working, then of course it builds these false belief systems and people think, oh my God, that's of how the market works, right? And then of course, that's how the retail strategies shown on purpose to, quote unquote, build up and create this liquidity. And again, they have to show it. And again, if it always would fail immediately, if a triple top never would lead to a proper reaction, it would simply, nobody would trade it. And again, that's why also we digged a little bit into the basic map, basic master map in detail about the smart money concepts, of why they technically how to try to make this illusion work, and again trick a lot of people into these new concepts right now, right? But that's of course not the case of how the market works. Cam?
Yep. So also we had liquidity will be induced, and Enigma has to fairly deliver price and has to mitigate into our refined supply and demand zones. Obviously we covered that quite a lot in very basic detail in the basic master map before sort of expanding on it a little bit, and then we showed you how to refine down the candles and all of that sort of stuff. We also touched upon the false education, like smart money concepts and market structure. We ripped into it a little bit, but hopefully not too much. Hopefully no one's going to be getting upset over that one. And then it's also important that you understand that the basic master map is like not even 5% of what we do. So obviously we want you to look into it, but don't dive too crazy into it, because we'll show you so much else and so many other things that are more akin to what we actually use. It's also important to understand the basic inducement types and how they affect price action with vector candles, which is specifically like vector candles are where they show like the momentum of like the momentum which induces people to take stuff the wrong way. They're very important with identifying your inducements. And then obviously we touched a little bit upon the Asia range, using that for your main guide of the day and using that to sort of ground yourself and understand what's a minor inducement, what's a medium inducement, when the day starts, key liquidity areas as well. And then after Asia, we obviously have Frankfurt Open and London Open, and these are your first timing confluences that you can use to your advantage. And this is where you want to look for your inducements, maybe your inducements of the day, or maybe just your inducements that provide pullbacks. You need to understand whether it's made a minor inducement or a medium inducement and where you are within all of that. And then obviously we really want to emphasize that identifying your liquidity types, whether it's your breakout liquidity, trend liquidity, equal highs, equal lows, smart money, all of these things, it's really important that you focus in on this and you get good at identifying this liquidity, because the last thing you want to be doing is actually becoming liquidity yourself. So by identifying liquidity, you can obviously avoid all of the traps and stuff like this, and it will just make your trading a lot less stressful. All right, I think now we have some tasks.
So the key learnings, again, what you should have got out of week 1 by now, just to sum it up a little bit more. Again, understand of how this market actually is delivered. Man-made strategies are in there. People need reasons to take positions. And of course, they're getting induced. Momentum, speed, we talked about vector candles, inducement types. So the most important thing you should get out of week 1 is to understand of how they're getting the liquidity in to the market and how it actually is delivered. Like fairly delivered, quote unquote, fairly delivered, and how these inducements will make a major impact and will change your overall chart vision once and for all. Right? Again, it will be very clean the moment you get used to it. And that's just one of these moments where you just see it and then hopefully you never can unsee it ever again. And that's where your chart vision really takes advantage over everything, right? Of course. And of course, we have some tasks for you. You have to do actually. So Sukba, what are the tasks they have to do?
Okay, so your tasks for week 1 include marking up liquidity zones. So if you remember in the previous models, your liquidity zones were trend lines, equal lows, equal highs, breakout, as well as smart money concepts, so random imbalances, for example. And this is really important to get familiar with the first stage of the lit cycle, essentially being the build-up. So I would highly recommend you mark up different types of liquidity and not just trend lines or equal lows, equal highs. Identify where the liquidity is. So that's your first task. And then your second task is marking up 10 Asia range high and low start and end. So we will show you that in the upcoming slides of what that looks like. So the high, the low, and the start and the end forming a box. Then you will have to find 20 examples of liquidity buildups into inducements and 10 examples of continuations and reversals being compromised in that. So what that consists of is the build-up aspect, as you've seen the trend lines, the equal highs, the equal lows, marking that up, and then of course marking up the inducement. So the vector candles will help you a lot in that aspect. And then what we have is the find 10 examples of London Open giving the inducement for the day. Again, you'll be given the outline of the timing window that will be in the upcoming slides, as well as finding 10 examples of Frankfurt Open also giving the inducement for the day. Then your last task, again, is the inducements aspect. So that will be finding 5 minor, 5 medium, and 5 major inducement examples, totaling 15 examples at minimum.
Okay, so again, this is very important, and don't underestimate this task, because this will make sure, again, to how you personally mark up these liquidity zones, right? Again, you will see, okay, I'm very easily can identify, for example, these channel buildups. Okay, no, I really easily can see this breakout inducement. Okay, but you will have to develop your own eyes or your own personal preference to identify these liquidities. I already can spoil you a little bit. The best ones probably, and what you should focus on, are these channel inducements, right? Again, they love to induce these channels, then either inducing low to go higher, obviously making the channel, and then induce high to go lower, right? So you will have to identify those a lot, and you will see of how effective that actually is. And again, develop and train your eye of finding these liquidity spots, and of course also the inducements based on the liquidity spot. Because of course, first you have to find the buildups. Out of the buildups, there comes the inducements, right? So we'll show you a few more examples so you understand what we mean. So a very basic one first. Of course, as you see, just a very, very basic channel, but that's something, again, you should make it a little bit more detailed, but just to give you one example of how they're building a channel, inducing channel low first to go higher, and of course, mitigating something to the left, and then push price lower, right? For example, like this, or a little bit more detailed, but again, it doesn't have to be completely crazy. You don't need to go in here and be like, oh my God, like here, you can, obviously, yes, it's a build up in here, but you don't need to go too crazy with it. So it doesn't need to be like, oh, there's a mini channel in here. Yes, it is. But of course, you don't need to go too crazy. Focus on the bigger picture of what they do, right? And the bigger picture is, of course, what do they do here? Showing a triple top, even again, if it's this a little bit different in here, but of course, it's the overall picture triple top, showing a channel inside there to even fake the triple top, then faking the triple bottom, take it out of a channel and building equal highs in here, taking out the channel to the downside, and then process building a high channel, taking out the triple top, and then can go lower, right? So stuff like this you want to see. And then very important, send us these markups in the Discord, right? Again, we have a Discord group for that specifically. Send it through. We want to see that stuff. Again, put in the work. We want to see it, even if you think it's a little bit basic. But let's say you do something significantly wrong, then at least we can correct you on that. Okay, so Cam, if you want to do another example, maybe.
Yeah, so obviously I'm sure a lot of you are familiar with this one right here, the equal lows. We've also shown the, sorry, let me just get my annotation tool. So obviously our equal lows, equal highs, whatever, channels. Again, these are the liquidity points that are obviously going to be targeted, and you need to understand where these are so that you're not taking any trades from these levels, but also so that you know where your targets are and where you should trade away from once these have been taken. Again, very clear channels. Obviously that was the previous one, but it doesn't hurt us showing you them here. So that is the equal highs and equal lows portion. Next up, we have the breakout. So when they break out of this point right here, where are their SLs going to be? This is what you need to think about. Where are the stop losses? Where is the liquidity? All of this sort of stuff. And obviously, if they're breaking out here, they're buying here, and their stop losses are going to be here, maybe here. So now you have an idea of where you should trade away from. Again, these are inducements that we want to be trading away from. Look at also how it gets induced with our vector candles. This is what you want to see. You want to see inducements with speed, because what does speed/momentum show? Well, to these people, it shows that it's going to go higher. So once this speed gets shown, obviously we reverse and take them out of their positions.
Exactly. Also notice again of how they do it on both sides all the time. So what is before that? Channeling downwards like crazy. And again, momentum Cam talked about. This candle at one point was solid black. Think about that. Imagine how many trend traders, momentum traders jump in here, right? A lot of people taking the sell in here. They're all getting smoked. Again, where's the stop losses? Maximum all the way up here. Again, stopped these people out of taking all these sells. And the other side bringing continuation traders now to the other direction and breaker traders in. So it's always, as you can see, this balance of building liquidity, taking it out, and then obviously reverse on all of them.
All right, now next one is smart money concepts. So obviously, again, look, channel, vector candles, inducement, and then again, another build up into vector candles and inducement. And at this point, they're seeing this as their BOS or their choch. And then we see this as our inducement. So we know that we should trade away from this. So we're trading away from our inducement. And what is this? Well, this is lying on liquidity. So should we ever take a trade from here? No, because this is going to be our smart money trap. Again, look at this. We have our channels, inducement of the channel low to continue higher before taking all of these smart money traders out. And then at this point here, we'll likely reverse. And this is something that I also want to bring up. You'll notice how when these guys get taken out, that's likely when the true move happens. And that's how they keep them in, because they're like, oh, I was so close. I had the right direction, just the wrong entry. And that's how they sort of feed them to keep them in.
Exactly. It's always an emotional game as crazy as well. And probably a lot of you guys felt this pain a lot of times where it tags you out. Then you think, oh, now it goes in my direction. You jump in and then takes you out again or something like that. Everyone felt that a lot of times, right? So the next thing you have to get used to it is the beautiful Asia range guide, right? So get used slowly but surely to draw these boxes. Don't worry. You just have to draw them for now. You will obviously get indicators and everything, templates for these boxes to magically appear on your charts. Everything will be given to you, so don't worry about that for now and this week, because we don't give it to you right away, because there's so many other stuff we have to cover before we give you all these templates. So you have the clean picture overall. So for now, just go to TradingView and draw these boxes yourself, and then see of how they behave from there. And you will see obviously of how much sense it will make from there. Quick tip, very important, go to TradingView, and on the bottom right corner of your TradingView, I don't have a picture in here, but you will find it out yourself. It says the timing, right? And it's easiest for you to use, obviously, this UTC +2. That's just the German time where I'm located, right? And of course, then the timings will match 11 and 7 for you as well. Again, if you're somewhere in Australia or something, of course, you don't need to do the calculations in your head crazily, then whatever. No, just change the TradingView time on the bottom right corner to UTC +2, and then match up the Asia range boxes with 11 from the previous day until 7 a.m. and then you're good to go. So draw these lines, these boxes for now. And again, just show us also how you draw these boxes. So just to make sure that everything is good there. And then obviously we take a look at it also. Very easy stuff, but again, get used to it. Okay, slowly but surely. Then even more, again, very, very important that you get used to these inducements, reversals, and continuations. Again, very, very important that an inducement can indicate a continuation also. It doesn't necessarily always be a reversal, right? For example, if you're having a channeling downwards, it can induce to the upside, again, breaking structure, giving these kochs or whatever, right? Again, people think it's a reversal, but guess what? It's just a continuation. The best example, and probably a very, very clean one in here, again, what is a reversal and what is a continuation? Guess what? Here, channel is being built up to the downside, is not induced to the high side, but where is it induced to? To the downside. You see the channel is being induced with momentum, vector candles, and speed to the downside. That's why they reverse out of it, right? But guess what they do here? Building the channel, inducing to what direction? Low. So what does it indicate us? Continues higher. You see? Channel build up, inducing in what direction? High. So what can we expect? Reversal. So slowly but surely get used to these plays, okay? Very important. And again, timing based traps is the next thing. Of course, then you combine the channels, the build-ups, the Asia ranges, also with timing. Get used to using London and Frankfurt timing boxes and just see of what they do, and obviously how do they react in these time windows of how do they induce Asia, right? And obviously something to the left at some occasions also in London and Frankfurt Open. So use again the timing for your guide. Give it a little buffer. Again, we've learned doesn't need to be to the absolute minute all the time, even if it is in this example, and you will find a lot of examples where it is to the absolute minute. But of course, it can be whatever, a few minutes later. So give it a buffer of 1 hour and just get used to these time windows. But be aware, it also sometimes can be in Frankfurt, right? So again, sometimes it's a little bit earlier, but then you also can identify these plays based on Asia and the guide, and when it takes out Asia high, and of course, if it's in the time window also here, then look at the next place they do and slowly get used to it, right? Cam, on to the next one.
Yep. So next we have 3 types of inducements. The first one is going to be minor inducements. It's important that you understand how to classify these so that you know where you should be trading away from and for how long. So obviously minor inducements are our smallest inducements that we have, and it's always of internal, not always of internal, but always of intraday structure. So if you induce something like Asia high and Asia low, this will always be a minor inducement, the same way that this inducement here is going to be a minor inducement because it has only taken intraday structure. So these will all be minor inducements. Next up, we have medium inducements.
Yes, so just be aware again, in the normal states, the inducement out of Asia, as Cam said, is always the minor one. Only then, again, if you have something to the left like this and induce it, then it also becomes at the same time a medium, but first minor, medium. If that makes sense, okay? Very important to understand it also. So if you look at the next slide, again, we have it, Cam, medium ones.
Yeah, medium ones. So medium ones are going to be from structure to the left. As you can see, in this example, it's the previous day high. Again, we see our build-ups, and then we also see vector candles into the inducement, and then again, channeling down into inducement of the channel before continuing. So obviously medium inducements are going to have a bigger effect than our minor inducements, and these are sort of the ones where you're going to be maybe trading away for a significant period of time, maybe the entire day, or maybe until the next medium inducement to the downside, in this case, obviously.
Exactly. And also get used again to these overall cycles. You already can see where Asia getting induced and then gets taken out to the downside. Same thing here, Asia range getting induced to the high side, takes the medium inducement before that, and then it's getting taken out to the other side, right? So very important to slowly get used to this first, like starter kit we showed you earlier, and of course find the similarity of those, but be aware that there's multiple cycle variations. So of course it doesn't need to be essentially always the case if they take out Asia range to the high side, that they always immediately have to go to downside. But we will dig into these cycle variations, obviously, a lot later on as well, okay? And last but not least, we have the major inducement, Cam.
Yeah, so major inducements are obviously the biggest inducements that we have. As you can see, major inducements are going to occur on your higher time frame. So higher time frame structure points that get induced are obviously going to be major inducements, and these are going to be inducements that we trade away from for a long time. So most likely in this case, you can see we've got our channel coming up into it, and then we've probably induced something on the left over here, vectored up, and now we're trading away to that. And what are we trading away to? Well, we're trading away down to the next major inducement zone. Again, you can see we fake it out here, false reaction, build up into inducement with speed, and then we will likely continue in the other direction. So one more. Again, here you can see this is the H4 chart, so very significant. You see how they even fake the equal highs and give the reaction, channel into inducement of the channel, and then we trade this way. You can see they're faking this. Oh yeah, this is going to hold, this is going to hold, before vectoring through. Once we vector through, we've now got our major inducement, and now you can see the reaction that we get after that point. again, notice how they're constantly building and faking that things are going to hold, when in actuality, we know that we should be doing the opposite of what they're showing.
Exactly. So now you have a few examples, right, of how it should look like. So again, go back, take a look at what you have to do. Send us these examples in the Discord channel. It should say something like a week 1 homework section or whatever it might be. You will find it out. If not, then we'll just write in the Discord, but I'm pretty sure you will find it, right? And then just send them through. We will correct you if there's any issues. If you have any questions, of course, let us know also. But again, very important, practice now. Don't sit on your ass and think like, no, it's so easy. I see that from 50 miles away. No, literally do it. The power is in obviously doing it yourself, and don't just whatever think you know it. Okay, so put in the work now. Don't be lazy. Get the effort done. But also very important, don't rush the process too much. Okay, there's so much yet to come, right? So just let everything sink in, revise everything, get used to it, get used to the basics, and then obviously make the tasks, take your time with the tasks, also make them properly, don't be sloppy, and then of course we will dig into the next week. Sokba, Cam?
Yeah, I think that's pretty much everything. Obviously, it's a marathon, not a sprint, so you shouldn't be trying to complete the entire thing instantly. It's important that you take your time and you make sure that the work that you're doing is good, because these are the fundamental things. So you should know all of these like the back of your hand. You shouldn't really have to think about them too much. That's the level that you sort of want to get to. You should just recognize them.
So yeah, guys, I would highly recommend, of course, focusing on liquidity being one of the main portions of lit when it comes to identifying the build-up zones, as well as all of the timing ranges as well. These are really, really key in helping you understand things naturally, should I say, as opposed to forcing things. And I hope you enjoyed everything at the moment.
Yes, and of course, if you have any questions, again, reach out to us and send us your homework through. We take a look, and then we catch up in week 2. Have a good one.